going to be, now, do we have to adjourn the previous meeting? Is that, we're adjourning the previous meeting and reopening for our December 17th 9 a.m. meeting. This is a special agenda for the Board of Supervisors, and I appreciate everybody being here and participating. We're going to begin with the Pledge of Allegiance. Who hasn't done it yet up here? Steve, have you? We have it on the agenda. So, Steve?
Join me in the Pledge of Allegiance, please.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you, everybody. Today there's going to be a 9 a.m. appointment on the agenda. I have a statement to read related to my recusal from this item. So after consulting with our in-house and specialized legal counsel, I need to recuse myself from this item in discussion due to my ongoing public efforts supporting affordable housing, the importance of mobile home communities, protecting vulnerable residents by advocating for them, and supporting tenant protections in general, and specifically because of my advocacy for Mill Villas residents in particular. While personally I would wish to participate in this decision, it's in the best interest to protect the board's ultimate decision, and I encourage my constituents to fully participate in this process. So with that, I will hand it over to Vice Chair Campbell and be recused from this meeting.
Council, I do have a question real quick. The way that's framed, it would make it sound like perhaps we don't care about affordable housing or elderly. I personally don't believe in rent control. So where's the line drawn as far as who can stay in this meeting and make the decision?
I think that the basis for the supervisor's recusal was on an appearance of personal bias. Not that he had it, but that he had been involved in this particular matter, enough advocacy in this particular matter of what he felt about what was going on there, that it was best to protect the board's decision to avoid all appearance of bias. The fact that any of you may have other opinions about what is best policy-wise or anything should not in general affect that, so long as you can make a fair determination based on the facts that are before you and based on the rules that are applicable to this hearing.
So this was Supervisor Brandon's idea? This wasn't council's idea for him to recuse himself?
I'm sorry, what?
Was this Supervisor Brandon's idea to recuse himself or council's
I don't think I
suggestion?
want to get into the precise legal advice that was given here. It's always the individual member's determination whether they need to recuse themselves or not.
Okay.
All right. So I'm going to look to our board clerk to read our 9 a.m. Item. It's the only item we have on the agenda.
9 a.m. public hearing to consider an application for fair rate of return under Tuolumne County Ordinance Code 5.28.070, filed by the Mill Villa Estates Mobile Home Park, located at 18717 Mill Villa Road, Jamestown, California, 95327.
All right, I'll now open the public hearing. I'll look to County Council to introduce the parties that are here today, and we will get started. Just kind of a note, we have pretty strict adherence to time limits on the various parties and their opportunity to respond. And so I'm going to be prompting our board clerk to set a timer. It's up here to my left, and we'll stick to that timer as best we can. All right? Okay. So, Council.
Thank you, Supervisor. I'd like to introduce the parties here at this hearing. We have the applicant, Mill Villa, who's represented by Dan Ritterau, the Parks Legal Counsel. The Parks witnesses are Brian Eade and Jeff Fisher. I believe are they both remotely appearing or just Mr. Fisher? Who are both going to be remote. The tenant representative, Charles Smith, is present. Outside The county's outside counsel handling this matter is Alex Lemieux, and Alex is sitting to my left. The county's expert witness is Kenneth Barr, who is also remotely appearing, and we have Rachel Bell from the Community Development Department Housing Division as the staff person. I'm now going to hand over the introductions to Mr. Lemieux for an overview of the fair rate of return hearing.
Okay. Good morning, members and members of the board. This matter concerns an application for a fair return rent increase under Tuolumne County's Mobile Home Park Rent Stabilization Ordinance. Tuolumne County is one of roughly 100 jurisdictions in California that have adopted rent stabilization for mobile home parks. As you're aware, mobile homes are, for practical purposes, immobile homes. Because residents cannot readily relocate their homes, rent regulations have been widely upheld as a lawful means of protecting affordability while still allowing park owners a fair return. Under the county ordinance, annual rent increases are tied to 100% of the percentage increase in the cost of living index, which is used to calculate Social Security increases. Additional increases of 10% increase are permitted upon sale of a home in place. A substantial portion of the mobile home park rent stabilization ordinances in California limit annual increases to less than 100% increase in the Consumer Price Index. The ordinance also includes a fair return provision as a constitutional safety valve in the event those annual increases prove inadequate to permit a fair return for the park owner. You're going to hear a lot about the concept of fair return today. Fair return is a safety valve if the annual increases are not adequate. Fair return is not defined by state statute nor in the ordinance with a precise formula or calculation. It's a constitutional standard that's been developed through judicial precedent. The courts have held that allowable rent increases must be adequate to cover operating cost increases and permit some growth in net operating income. Net operating income is the gross rental income minus operating expenses. Mortgage payments are not an operating expense, they are an investment expense. Fair return represents a constitutional minimum within a broad zone of reasonableness, requiring a balancing of the interests of the owner and the park tenants. Many ordinances provide for a particular fair return standard. As I said, the Tuolumne County ordinance sets forth the principle of fair return, but does not provide for a specific standard. Within the zone of fair return, there may be multiple rent levels that are all lawful. I'm going to read from a particular court opinion called Galland versus City of Clovis that I think is instructive. The citation is 24 Cal 4th, page 1003 from the year 2001. Although the term fair rate of return borrows from the terminology of economics and finance, it is, as used in this context, a legal constitutional term. It refers to a constitutional minimum within a broad zone of reasonableness. As explained above, within this broad zone, the rate regulator is balancing the interest of investors, i.e. the landlords, with the interest of consumers, i.e. the mobile home owners, in order to achieve a rent level that will on the one hand maintain the affordability of the mobile home park, and on the other hand allow the landlord to continue to operate successfully. The board's role is not to select the most favorable economic outcome for either side, but to determine whether the applicant has demonstrated an entitlement to an additional rent increase above the CPI, the Consumer Price Index, in order to avoid a confiscatory result. The burden of proof rests with the applicant. The park owner must show that current rents, including permitted rent and permitted annual increases, fail to provide a fair return. Unsupported, speculative, or inadequately documented claims need not be credited, and uncertainty does not shift that burden to the county or to the park residents. Courts have made clear that while rent regulations may not indefinitely freeze net operating income at a fixed dollar amount, they have also rejected the notion that fair return requires net operating income to increase by 100% of the percentage increase in the Consumer Price Index. That's fairly technical, and I apologize for that if it's confusing. You're going to hear the abbreviation MNOI over and over because maintenance of net operating income is a mouthful, frankly. So for several decades, the most widely accepted method of evaluating fair return in mobile home rent control cases has been this maintenance of net operating income, or MNOI standard. Under this approach, net operating income is calculated as gross rental income minus reasonable operating expenses, excluding debt service. The courts have repeatedly differentiated in allowable rents based on have repeatedly allowed differences in allowable rents based on differences in owners. I beg your pardon. Have held that differences based on the owner's financing arrangements are not reasonable. Fair return is measured by comparing the base year net operating income adjusted by a CPI factor to the current net operating income. This is not a mechanical accounting exercise. Both income and expenses must be reasonable for purposes of a fair return analysis and a comparison of the base year and current year income and operating expenses and net operating income. The board is entitled to evaluate whether claimed income levels and operating costs are reasonable, properly allocable, adequately documented, and reflective of legitimate operating needs. In order to analyze all of this, the county retained an expert named Dr. Kenneth Barr to help conduct this analysis. Dr. Barr is widely recognized as a leading expert on fair return issues. His work has been frequently cited by appellate courts, including in several California Supreme Court opinions. He has been retained by numerous California jurisdictions to conduct fair return evaluations. As a recent Court of Appeals decision noted, Dr. Barr is a recognized expert in mobile home park rent stabilization matters. The park owners submitted an application based on the MNOI standard, and Dr. Barr applied the MNOI standard for his analysis here. He reviewed the applicant's submissions, evaluated the reasonableness and allocation of claimed income and expenses, and prepared an independent analysis for the board's consideration, all of which has been uploaded on the county website for review prior to this hearing, so that all parties have an adequate chance to analyze his findings and present responses to it in advance of the hearing, and then they'll be given a chance to discuss all of that again today. Dr. Barr's conclusions do not deny the applicant an increase as a matter of principle. Rather, they reflect a careful application of constitutional standards, the county's ordinance, and the evidentiary record that was submitted. His recommendations fall within the zone of reasonableness recognized by the courts and are supported by substantial evidence. Finally, the county's process in this matter, including continuances, supplemental analysis, and procedural safeguards, has been guided by a single objective: to ensure a full and fair hearing that meets due process standards for all parties. The county has acted cautiously and carefully to protect the integrity of the administrative record, give the parties substantial time to respond to Dr. Barr's analyses, as well as the analysis provided by the applicant and the tenant representatives, and to ensure that whatever decision the board reaches will be supported by substantial evidence and consistent with due process. With that framework in mind, the county will walk through the analysis and evidence supporting Dr. Barr's conclusions. All parties will have an opportunity to present their positions and evidence and cross-examine one another and explain why they fall within the board's discretion and the constitutional zone of reasonableness. Thank you.
Thank you very much. So at this point, so would you like to go through the planned hearing process, or I can lay that out? Do you have anything before I explain what the hearing is going to look
I
like?
think you can go ahead
Okay.
and give the order of what we're going to do here.
So the way this will work is that we will hear owner representative presentations, tenant representative presentations, and cross-examination of both. My plan is after that point to take a break. That might put us at about 11 o'clock. And then we'll hear presentation and analysis from staff. After that, we will have cross-examination from the tenants and from the owners, and then testimony at large, followed by county examination of witnesses at large. Plan to take another break at that point. And then we'll have closing arguments from county staff, from tenant representatives, and from the park owners, closing arguments. At that time, I'll close the hearing, and then we'll go into deliberation as a board. We have a time limit on each of these, and I'll be looking to the clerk to set a time limit. And once you have 1 minute left on the clock, the buzzer will beep. At that time, that'll be your time to wrap up your statements. When your time is up, I will prompt you to stop so we can move on to the next item and keep the flow of the meeting going. Is that good with everybody? Okay. So we will start with the owner representative presentation. You'll have 45 minutes to speak, and we'll start the timer now.
Good morning. My name is Dan Rutterow. I'm an attorney, and I represent the park owner applicant this morning. I would like to first thank the Board of Supervisors and staff for their time and effort spent on this application for a fair return rent increase. I understand that this is the first time the board has considered such an application. The application involves a fair amount of math, which I know can get a little tedious. I will endeavor to cover the important points of the application as succinctly as possible. This is an application for the board to approve what is called a fair return rent increase in the amount of $101.67. The applicant is saying that in order to receive a fair return on its investment in owning this mobile home park, it needs a rent increase in the amount of $101. The county's ordinance does not specify what method should be used to determine what amount of rent increase would afford the park owner a fair return on its investment. Certainly, the park owner could have presented a wide variety of arguments today, a great number of documents, and a great number of witnesses to argue what would be fair and what would be reasonable. Indeed, we today could be here for 5 days rather than 5 hours if we're going to get into the minutia of different arguments about fairness and reasonableness. Instead, therefore, what the park owner did on this application was the owner elected to use the MNOI method, which stands for maintenance of net operating income, to determine from that formula what the rent increase amount should actually be down to the dollars and cents. As staff states in its executive summary to the Board of Supervisors, the MNOI method is the most widely accepted fair return standard, under which the base year net operating income adjusted by an inflation factor is considered fair. What this method says is that when we are deciding what a fair return on investment is, it should be something that allows the park owner to at least, at a very minimum, maintain the same net operating income over a certain period of time. And the period of time is between 2 points in time. And every single rent increase application, every time you use the MNOI, you're measuring between 2 points in time between a base year and a current year. And so you're going to hear base year, current year over and over today. Staff's report confirms that in order to do the analysis correctly, you need to compare the net operating income, or NOI, in the base year with the NOI in the current year. Specifically on Bates Stamp County Document 191, staff says that the MNOI standard requires consideration of the comparability of base year and current year income and operating expenses. And on that same page 191, staff says that the measure of a fair net operating income in the current year is the base year with an inflation adjustment. And I know that can get kind of wordy, and let me take you through it. So in this case, the base year that everyone agrees on is actually fiscal year 2015-2016. Everyone agrees with that. Everyone for today's analysis agrees that the current year is 2024. The net operating income, and when we say net operating income, we simply mean all of the gross income minus the operating expenses. So essentially, you can almost say your profit level. That's what your NOI is. The NOI, if you look at the base year, you start with the base year, and the NOI for the base year was $545,720.
And I'm sorry to interrupt you. Could you speak a little closer to the microphone
Sure.
so that people online can hear you?
So the first thing we do is what we're doing is we're comparing the net operating income from a base year to a current year. So the first thing we're going to do is we're going to look at the base year. And when we look at the base year, we're talking about what is the net operating income for the base year, which is your money that you bring in minus your expenses. In this particular case, the base year is fiscal year 2015-2016. So we look at fiscal year 2015-2016, and the net operating income for the park during the base year was $545,720. So that's your first step. Your next step is that you're going to apply what they call an inflation factor. You add inflation between the base year of 2015-2016 all the way over to the current year, which is 2024. The park used an inflation adjustment factor of 37.1%. So the park applied this inflation factor to the period of time between 2015 and 2024 to determine that the amount of the NOI the park should have been earning in 2024 was a certain number. So you take the $500,000 that you were making in 2015 and you apply an inflation factor of 37.1% over these 9 years till you get to 2024. And what the number tells you is if you apply an inflation factor to what you were earning in 2015, it's going to give you a number that if you were earning 37.1%, you should be earning this amount of NOI in 2024. So the next step is how much money should I have been earning in an NOI in 2024? And applying the inflation factor between 2015 and 2024, the amount of NOI the park should have earned in 2024 was $747,989. That's how much I should have been earning in 2024. Now, the next part of the analysis is, well, how much was the park actually earning in 2024? The park was actually earning a net NOI in 2024 of something less than that. In 2024, the park's net operating income was only $558,875. So what you do is you subtract your actual NOI, which you were actually realizing for 2024, from what you should be realizing. So you take that 700 number and you subtract the 500. And that difference is what you should have been earning. That difference is $189,114. What you do with that number, $189,114, is you divide it by the number of the controlled spaces in the park. The number of controlled spaces, you're going to hear the term controlled spaces and exempt spaces. Today, in 2025, there are 228 spaces in the park. However, only 155 of them are subject to rent control. And the reason for that is because the other spaces in the park are exempt from rent control under state law. And the exemption has to do with the fact that under state law, certain spaces can be exempt if they were newly constructed after a certain point in time. So the analysis is you take that $189,114, you divide it by the number of controlled spaces, which is 155, and divide it by 12 months per year, and that results in an increase, a rent increase per month per space of $101.67. So using the M&OI method, the park is entitled to a rent increase of $101.67 in order to earn in 2024 the same NOI that the park earned in 2015/2016, adjusted for inflation. Today, the park owner is seeking from this Board of Supervisors a fair and impartial hearing on its application. To be honest, the park owner is rather concerned about receiving a fair and impartial hearing due to the consultant that the county has decided to hire to review the application. The county has decided to retain only one consultant, which is Dr. Kenneth Barr. Dr. Barr is actually an attorney who has spent his career advocating on behalf of tenants for rent control. Although he claims, or it's mentioned in staff's report, that he's represented one park owner in his career, he actually only advocates on behalf of residents against park owners. We would have liked it to see if the county could have selected more of an impartial consultant to review our application. That said, I will go ahead and respond to the important points that Dr. Barr raises in his report. First, let me just say preliminarily that what this Board of Supervisors should recognize is that this park owner truthfully and accurately presented all of its books and records for the Board of Supervisors and staff to review. And it correctly used the M&OI analysis, which resulted in the $101 rent increase. The consultant, Dr. Barr, actually agrees 100% that the best way of doing this exercise is to use the M&OI analysis. If that's the case, and assuming the park's financial records are accurate, and assuming that the park did the M&OI math calculation correctly, then this board would expect Dr. Barr to agree with the $101.67 amount. But here's where it doesn't make sense. While Dr. Barr does not really dispute the park's financial records or its calculations, Dr. Barr nonetheless tries to present various arguments to this Board of Supervisors as to why he, in his personal opinion, thinks the rent increase should be something less than $101. Why is he doing this? Because even though he admits the M&OI approach resulted in 101, Dr. Barr is a tenant advocate who wants the amount of the increase to be lower. The problem for Dr. Barr is that the M&OI analysis, a method he favors, resulted in 101. So how does he try to get out of the fact that that's the number? Dr. Barr tries to get around the M&OI analysis after saying that it's the right thing to use by arguing that you, the Board of Supervisors, should go ahead and use different or made-up figures in the financial records. And if you use different and made-up financial records, then you would come out with a different result. Well, of course you would. I mean, we can go into the M&OI analysis and we could look at expenses and we could change them. We could change them so that the M&OI result is something lower than 101. We could change it and so the result is that it's more than 101. But that's obviously not the ethical, correct way to use a mathematical formula. The income and operating expenses for the base year of 2015-2016 and the current year of 2024 are what they are. You can't go and then suddenly say, we'll change them. The actual amounts are plugged into the M&OI formula and results in 101, period. Dr. Barr, nonetheless, urges this Board of Supervisors to use not the actual financial figures, but completely made-up figures. He likes to call these made-up figures in his report projections or, quote, adjustments, in order to try to make it seem like his made-up figures are somehow legitimate, when they, of course, are not. For example, let's take the major points. There's about three or four major points, and then I'd like you to hear from our CPA, Certified Public Accountant, and also our Chief Financial Officer. But let me go through kind of the 3 or 4 major points in Dr. Barr's report. And when I say he's giving projections and made-up figures, let's start with that waste management costs. When we talk waste management, we mean the company that's providing trash service to the park. With regard to waste management, this park owner told you, the Board of Supervisors, that it spent $120,094 that the park actually paid for trash service in the current year of 2024. Dr. Barr actually admits in his report on page Bates Stamp 81 that, quote, the park owner has provided invoices documenting that the costs were incurred, close quote. So he admits that, yes, you did incur this cost. Even though Dr. Barr admits that the park has invoices documenting that $120,094 was the amount paid, Dr. Barr nonetheless says that the Board of Supervisors should simply ignore the actual figure and instead use up a completely made-up number of $75,000, which he himself created out of thin air. How does Dr. Barr justify using a completely made-up number? He says that even though the actual amount paid for trash was $120,000, in his personal opinion, he thinks it would be unreasonable to use that figure. He says it's just not reasonable to use the actual figure because there were other years between 2015 and 2024. There were other years in the middle where the amount was lower. So Dr. Barr says we should just go and cherry pick some other numbers from some other years. This argument fails for 2 reasons. First, Dr. Barr's own personal opinion about how reasonable $120,000 is not material, nor is it relevant. The figure of $120,000 was the actual figure that was paid to Waste Management. Second, you use the M&OI method by comparing the NOI in the base year to the NOI in the current year of 2024. What Dr. Barr is doing is taking a cost figure from 2022, or the one he likes from 2022, and he's plugging it into the current year of 2024. But that's not the formula. Certainly, the park's operating costs were different in different years, but the M&OI method measures the change in the NOI between a base year and a current year. What the park was charged, for example, in 2018 or 2019 or 2020 is not part of the analysis because using costs from those years would not tell you the change in NOI from the base year to the current year of 2024. Stated differently, if you are going to use operating costs from, let's say, 2019 rather than 2024, then you are not following the M&OI approach. In addition to making up figures, Dr. Barr makes up that the park has a, quote, burden of proof to show that the cost of $120,000 was reasonable, and he makes up another so-called burden of proof that we have to explain why trash has gone up over the last few years. The Board of Supervisors has just heard staff's report in which staff says, according to staff's perspective, that there is a burden of proof. I'm a mobile home park lawyer. I've been a mobile home park lawyer since 2006, and there is not a burden of proof to show that what Barr is saying. In fact, if you will note in Dr. Barr's report as a lawyer, he gives you a lot of citations to various cases in various footnotes. He basically, as a lawyer, gives you a footnote for every single case that he can come up with that supports his position. But if you go back and you look at the burden of proof section of his report, there are no footnotes. And that's because Dr. Barr is just wanting to make up a burden of proof when there is no burden of proof. Certainly, I'm not saying that we don't have a responsibility to do a good application, a well-supported application. Of course, we are the applicant coming to the Board of Supervisors. But this burden of proof that Dr. Barr makes up tries to explain what this thing is that he made up, and then saying, well, the park didn't meet the burden of proof that I made up. That's the part that we object to, and we don't think that's true. Finally, Dr. Barr, in addition to giving you made-up figures and a made-up burden of proof, he actually wants to give you a completely made-up hypothetical by saying that the trash costs would be lower in 2024, hypothetically, if you imagine that Waste Management had billed residents directly, even though that's not how the billing was done in 2024. Dr. Barr's hypotheticals about what the cost would be if hypothetically the billing had been different in 2024 is completely irrelevant because it's not properly using the M&OI method, which compares the actual figures between a base year and a current year. You don't put hypotheticals or hypothetical figures in your math problem. And in terms of reasonableness, I think we can all use our common sense here that the park owner is a business owner, just like many of us are in this room. And as a business owner, the park has not been going out in the world trying to find the most expensive costs, the most expensive operating costs. It seems like Dr. Barr in his report, he almost suggests that we're going out and getting very expensive operating costs. And I want to ask the board, does that make sense to you? Obviously, this is a mobile home park business like any business who has to make a profit, wants to keep costs at a minimum. Let me move on from waste management to this inflation adjustment factor percentage issue. Dr. Barr tries to raise an issue about the inflation adjustment. As I mentioned earlier, the park used an inflation adjustment rate of 37.1% to measure the rate of inflation between the base year and the current year. The objective of selecting an inflation index is to reflect the appropriate inflation rate to apply to the particular geographical location you're talking about. And in this case, that would be Tuolumne County. The park selected 37.1%. Where did that come from? It came from the Bureau of Labor Statistics Western Region Consumer Price Index, and that price index includes Tuolumne County. When you look at the change in this particular consumer price index, the CPI increased by 37.1% between 2015 and 2024, so that's what the park used. Dr. Barr uses a lower inflation adjustment factor. Instead of using 37.1%, Dr. Barr uses 33.5%. And he uses that based on the Social Security Administration Cost of Living Adjustment, or COLA, which is actually mentioned and discussed in the county's ordinance. The ordinance, however, does not say to use COLA. In fact, I would submit the ordinance says the opposite. If you go back and look at what the county ordinance says in section 5.28.060, the county's ordinance says that there shall be only one rent increase per calendar year, and that a rent increase is to be based on either COLA or a fair return analysis. This is not a COLA rent increase, so it's incorrect for Dr. Barr to use the COLA rate. This is a fair return application based on the MNOI method. Using the MNOI method, the park used an inflation rate of 37.1 because that would tell you the inflation rate for this particular geographical area of Tuolumne County. Indeed, I think our point is well taken because if you look at Dr. Barr's report, Dr. Barr admits that what is the normal practice in all of his years of doing this with fair returns is that he says in Northern California, he uses a CPI index for a San Francisco area. So Dr. Barr is admitting that his practice is to use a CPI that would apply to your particular geographical area of California. And he says he typically uses a CPI index for the San Francisco area. In this particular case, the park purposely decided not to use the San Francisco area CPI because we noted that the CPI index we were looking at least, covered several Northern California counties, but it actually did not include Tuolumne County. So that's the reason why we didn't use a San Francisco CPI, and that's the reason why we used the CPI we did. So to summarize, it's incorrect to use the COLA rate because this is not a COLA rent increase. When you do a fair return based on MNOI, you use one that's applicable to the park where the park is located, which is what the park did here, and which Dr. Barr admits is the normal practice. Moving on to property insurance, Dr. Barr tries to raise an issue about property insurance where there is no issue. In the current year of 2024, the park paid a premium, an insurance premium, of $20,080 for the park's property insurance. The insurance policy was, we have an insurance policy that covers multiple properties, not just Mill Villa. The total value of all of these properties is $172 million. Mill Villa's portion is valued at $2.5 million. These values were not made-up values. This is the value that was determined by the park's insurance broker, Brown & Brown Insurance Company. They're the insurance company. They decide to tell us how they evaluated something and what the premium is. Dr. Barr acknowledges that it was Brown & Brown that determined these values, but nonetheless, Dr. Barr is trying to create some issue about valuation. How the insurance company determined values and determine the amount of the premium is probably something that the park is not charged with knowing. The park has no idea. That's something the insurance company does. What's important is that the insurance company gave the park a bill for $20,080 for the park's insurance, and the park paid it. Dr. Barr, while admitting that the park paid $20,080 for the insurance, nonetheless argues that unless the underlying valuation can be explained, which frankly we don't even know what he's talking about, he says the entire $20,000 should be excluded as an operating expense. Well, that makes no sense. Is Dr. Barr this morning really suggesting that we, the board, or you, the Board of Supervisors, should say that the park paid $0 for property insurance, which is obviously not true? The next issue that Dr. Barr tries to raise is one of not the property insurance, but go ahead and take all of the insurance. All the insurance that this park has to pay to operate this business. Dr. Barr and the park disagree on the apportionment of all this insurance you paid, apportioning it to the 155 rent control spaces. Dr. Barr argues that today, in 2025, there are 228 spaces at the park, of which 155 or 68% are rent control spaces. Dr. Barr argues that the insurance cost should be inserted in the MNOI analysis should be 68% of the total insurance paid for the park. The park agrees with Dr. Barr that the insurance costs inserted into the analysis should be a percentage of the insurance paid for the 155 rent-controlled spaces. However, what Dr. Barr is missing, and why his analysis is not correct, is we are looking again at the current year, which is 2024, not 2025. If you go back to the current year in 2024, there was a different number of total spaces at the park. In the beginning of 2024, there were 200 spaces. At the end of 2024, they had built 7 more spaces, and so there were 207 spaces. So what the park did in terms of just using the current year of 2024, the park used an average of 204 spaces. So dividing 155 rent-controlled spaces by 204, the percentage was 76%, which is what the park used. The next item is property insurance paid in the base year. Now, I just got done talking about Dr. Barr's trying to manipulate and give you false figures for different items having to do with the current year in 2024. But Dr. Barr goes beyond that, and now Dr. Barr wants to talk about manipulating figures in the base year of 2015-2016. Whereas before, Dr. Barr says it's his subjective belief that some of these figures in 2024 were too high, now he makes an argument that some of the figures in your base year were actually too low, which doesn't make sense. What Barr is saying in the base year is you paid X for insurance back in 2015. To Dr. Barr, the amount we paid in insurance seems too low, according to him. He's saying, I guess, wow, the park really got a smoking deal. They paid insurance back in 2015 that was so low, that's just can't be. So I, Dr. Barr, will insert a completely fabricated, made-up number, and I think we should all agree that the park paid more insurance than what it paid in 2015. He's making this up, and on this particular point, when you go to Dr. Barr and you say, what do you base that on? You're plugging in a different number. They had low insurance in 2015. You want to plug in a higher number for insurance. Where do you get that higher figure? He says, well, I looked at 4 appraisal reports done by MAI appraiser John Neat. And if you go and look at these 4 appraisal reports that were done back for parks in the area back in 2015, there are people that paid higher insurance. That's not evidence or a reason to say that our cost is somehow unreasonable. We paid an insurance. I guess we got lucky. I guess we shopped around, and I guess we paid low insurance in 2015. The fact that you want to go look at a report and say, gee whiz, in 2015, there were other parks that paid higher insurance, it's like, so what? And in fact, what some of our people can testify to, and I'll get them on right now because we have like 12 minutes left, 13 minutes left, is that the reports that Barr is looking at actually show that other people in the area were paying less insurance than we were. So we are also asking for a temporary increase of $22.59 for the delay that the county has taken. It's been like an 8-month delay in processing our application. We filed this application about a year ago. So what I would like to do is I'd like to pull up and let you hear and let the tenants and let the tenant's lawyer cross-examine our 2 witnesses. So I want them to talk for a moment in the last 12 minutes that we have. If we could bring Brian Eade up.
Hello.
Hi, Mr. Eade. Good morning. Could you state and spell your name for the public?
That's Brian Eid, spelled B-R-I-A-N, last name E-I-D.
And are you a certified public accountant?
Yes.
And can you briefly tell the Board of Supervisors and our attendees in the audience your education and background as a CPI? Or CPA, I'm sorry.
Sure. I got my bachelor's degree from California State University, Fullerton, with an emphasis in accounting. I have a master's in business administration from Pepperdine University with an emphasis in finance. I've been a CPA since 2001. I started my career in public accounting with a public accounting firm called McGladrey & Pullen, now called RSM, the fifth largest in the world. I also am a master analyst in financial forensics. I'm a certified valuation analyst.
And were you given an assignment in this case to put together an MNOI analysis for the park in this case?
Yes, I was tasked with reviewing the park's original calculation and application, and also reviewing Dr. Barr's analysis as well.
And so you received all the financial records from the park owner to do this analysis?
Yes.
And I've explained to the Board of Supervisors this morning and to the audience how it was calculated, but go ahead and tell us so that they have an understanding of what you actually did to determine the rent increase of 101.
Sure. In general, I looked at the profit and loss statement of the park in the base year, which is that fiscal year 2015-2016, and also the profit and loss statement for the park for 2024. I looked at all the individual income and expense items, looked at the adjustments that the park had made to those to arrive at net operating income. And some of those adjustments include, like you discussed, or like staff discussed today, excluding debt service payments, and then also apportioning portions of those expenses to the rent-controlled spaces and the non-rent controlled spaces. So I did that. I then compared the base year net operating income, adjusted it for inflation, that 37.1% that you mentioned, and arrived at an inflation-adjusted net operating income, also called the fair return net operating income, which was approximately $749,000, I believe. And then compared that to the actual net operating income that was being earned in 2024 of $558,000 change, a difference of approximately $189,000. I divided that by the 155 rent-controlled spaces, and then again by 12 months to come up with a monthly rent increase per rent-controlled space of $101.67.
You have experience.
I'll just point out that,
Go ahead, I'm sorry.
no, just one thing I'll point out, because in case the Board of Supervisors is curious or is questioning, that the NOI that we're looking at, the $749,000 and the the $747,000 and the $558,000, those are already adjusted to be the net operating income of only the rent-controlled spaces, because we've, in our calculations of NOI in the base year and current year, we've already reduced income and reduced expenses so that it only represents income and expenses related to those 155 rent-controlled spaces.
And I forgot to ask you, so the Board of Supervisors knows your experience level. You've done MNOI analysis in other fair return cases, correct?
Yes, dozens of times.
Okay. And then explain to the Board of Supervisors, I've already tried to explain it, but just so they maybe have a comfort level, explain to them your selection, or the park selection, of 37.1% as an inflation adjustment, what CPI you used, and why, in your opinion, is appropriate to use that CPI and not the one that Dr. Barr used.
Sure. I used from the Bureau of Labor Statistics, the all items, all urban consumers, West Region CPI index, and I used that because it is more appropriate for the location of this park, which is east of Modesto, quite, far inland, kind of closer even to Nevada than it is to the coastal region, which is what Dr. Barr was explaining should be used, the San Francisco and Hayward metropolitan statistical area. That does not include Tuolumne County. It includes 5 counties, none of which is Tuolumne. The region that I used was more broad because that's what's available and more applicable to Tuolumne County, where cost of living is arguably much different than it is in San Francisco and Hayward area. I also want to mention in Dr. Barr's report, he mentioned, quote, shopping for a rate. I will say, and I'm here, although nobody swore me in, I do have professional standards to tell the truth. And I did not even look at numbers when I was selecting the appropriate index. I first looked at the geographic location, decided on what the appropriate index was based on that, and then I downloaded it from the BLS website and made the calculation. But at no time was I, quote, shopping for a rate.
So, Board of Supervisors, one of the things that Dr. Barr mentions in his report that we agree with is, should there be a temporary rent increase in addition to the 101 based on the county's delay in processing this application? So I just want to give you the information and you can evaluate it. I understand that this Board of Supervisors has never entertained a fair return application before, so it's hard to say, of course, how long it should have taken. But I think the facts are that we reached out to the county in November for information. I think there was an exchange of information in December. I think actually we filed the application on January 14th, 2025. And what we were pegging it as, based on our experience maybe with other counties and other applications, that we should have gotten an adjudication or a decision from the Board of Supervisors in maybe 3 or 4 months. So what we were pegging at is saying, well, here we are in December. We think there's been about an 8-month delay. That is not the fault of the park owner applicant, but it's the fault of the county for one reason or the other. So the 8-month delay is how we calculated the $22.59, meaning, let's say in April you gave us 101, then the residents would have paid 101 for the 8 months of 2025, and that adds up to a certain number. But if you gave us 101 today, I'm not going to have the residents in January or February pay 101 and 101 to make up for the 101 they didn't pay in 2025. So the extra paying us back the 101 for the past 8 months is spread over 3 years. And so so that after 3 years it just falls off. So it would be the 101 plus the $22.59 for 3 years, and then the $22.59 just drops off. The 101.67 stays permanent. And just so they can hear that a CPA did the math, Mr. E, did you do the math, and is that the way? Can you tell them what the total amount was and tell them what the math is? If you agree with the applicant to even use an 8-month delay, the board may not agree with that, but just in terms of putting some figures to it, could you go ahead and tell them what the math was?
Yes, it was the $101.67 times the 155 rent-controlled spaces times the 8 months, which was approximately $126,000. And so to effectively spread that over 3 years, we took the $126,000 divided by 36 months, and that's the $126,000 divided by 155 spaces divided by 36 months, which is 3 years, and that's how we arrived at $22.59.
Okay, now I'd like in the last few minutes that we have, if I could call Jeff Fisher. Mr. Fisher, are you there?
Yes, I am. Thanks for having me.
I understand that you're the Chief Financial Officer for the owner of the park.
Yes, that's correct.
And when did your company purchase the Mill Villa Park?
The exact date, I believe, is in 2017. sorry. Let me give you an exact date here. It was September 20th, 2016.
2016, okay. And then as CFO, I gather you have custody and control over the financial records for the park,
Yes.
and you gave all of the true and correct copy of the financial records to not only the county per their request directly so they could do their analysis, but also to Mr. Eade?
Yes, that's correct. I initially gave all of the requested information to Rachel Bell at the county. And then when we submitted our app, the residents have requested a copy as well. So we gave them our full application with all supporting documents and answered their questions. And then Dr. Barr after that.
And then I think you wanted, in the last minute that we have, I apologize to cut you short, but there'll be time for question and answer and cross-examination later. But did you want to speak to this valuation issue with the park's property insurance that they paid $20,080 for property insurance in 2024?
Yeah, in just a short amount of time, my understanding is Dr. Barr was questioning the values assigned to Mill Villa, which are based on, our lender gives our insurance company income amounts, and then it's also based on appraised amounts for buildings. So our insurance company handles all that and sends us the bill that's allocated. But I feel like there was a lack of professional care exercised by Dr. Barr because, there's a big emphasis on the amount allocated to Mill Villa, but there's no question on the denominator, the total value for all communities. So I, just from my auditing background and everything, I just kind of question how some of these procedures were thought through and done by Dr. Barr.
So that was 45 minutes.
Thank you.
We'll end the owner representative presentation. Thank you very much. At this point, I'll look to see is the tenant representative here.
Supervisor Campbell, can we take a 5-minute? We have a little television issue here. Ours isn't operating. Can we take a quick break?
So we'll take a break for 5 minutes to get the television working so you don't have to crane your neck over
I already
here.
got a bad neck, so I appreciate
We'll
the public to allow us to address that issue.
We'll reconvene at 10:07. Welcome back, everyone. Thank you very much. So we are continuing with the public hearing for Mill Villa. Where we left off, the tenant representatives will have 20 minutes to cross-examine the owner representative. Are the tenant representatives here? Yes. Okay. Welcome. So we have the timer set for 20 minutes. It'll beep at 1 minute. At that time, I'll ask you to finish up your cross-examination.
I'm not going to ask any questions.
Okay.
I'm going to move it on. Thank you.
All right. Thank you. So we will move on from the cross-examination and move to the tenant representative's presentation of evidence. You'll have 45 minutes to present evidence, and as before, I'll keep you within that 45 minutes.
That I'm going to do. Thank you.
If you're ready, then we'll go ahead and start the timer.
Thank you. Thank you. Good morning, everyone. Thank you for your time, and I thank the board for allowing us this opportunity and for the staff. My name is Charles Bradford Smith. I'm a local attorney here in Jamestown, and my family has been here on my wife's side for 4 generations, so I appreciate the opportunity. I'm a local attorney here. I do criminal defense, and the residents at Mill Villa asked me to come down here. I'm doing this for free, and I'm a criminal defense attorney. And you're looking, what is a criminal defense attorney doing here against an attorney who was doing land use since 2006? Well, I went to law school to avoid math, Santa Clara University. And why am I doing math cases? Well, I was a prosecutor for 12 years, cop, police officer for 16, and I worked San Mateo County District Attorney's Office, and I was a homicide prosecutor. But as well as doing homicides for 7 years, I also did the major embezzlement cases in Silicon Valley. So I know how to follow numbers. And so, although I didn't want math, math followed me. So what we did here when the tenants asked me to help them is they threw all these big boxes of discovery, and I put my head in there one weekend, and with the help of Jerry Ramirez, this nice lady here next to me, we're going to give you a very short presentation, which is not going to be really big on math, but it's going to have some sense there, which hopefully is going to be common sense, because I'm a business owner myself. And so what we did is we looked at the gross income, and we looked at minus operating expenses, because that's how I do my business. I look at my gross income minus my operating expenses, and that tells me how much profit I made each year. That's pretty much simple. So I looked at the mill villas, how much cash, gross operating income minus operating expense, and that told me how much profit they made. And then I looked at their expenses for each year, and that showed me their profits. And then we looked at their expenses, and we noticed some buried costs, because they buried costs when they started building those new homes. They took the costs of their buried homes and they slipped it in to the maintenance, and they tried to put it in, because the actual profits that they made for 2024 was $940,648. That's how much money they made in 2024. 2023, they made $649,000 profits. And in 2022, they made $828,000 profit. That's how much cash they made. And Jerry Ramirez next to me is going to tell you how they did it. It's going to be very short and very simple. That's enough that if I can follow it, anybody can follow it. So I'm going to have Jerry, without any further ado, give you a quick little statement, and she's going to walk you through the spreadsheet we did and explain to you how it happened. It's going to be short and simple and about 10 minutes worth. So thank you very much. Without further ado, Jerry, read your presentation, please, and then we're going to walk these gentlemen very quickly through how we did what we did.
Sure. Short and simple, just like me.
You're short, but you're not simple.
Okay, thank you.
Okay, thank you.
Before I begin, I want to thank Mr. Charles Smith, Attorney at Law, for representing Millville Estates. Our community, like so many other communities, does not be able to afford legal counsel. Our HOA bank account couldn't even pay the retainer. What he is doing for us is not only for the good of Millville, but the entire county, by protecting the rent control ordinance. We are grateful for his generosity, kindness, and compassion for our elderly. Mr. Smith speaks to you about our community as he views it from the outside looking in. But why would an investor buy a senior park with people on fixed incomes and under rent control? What was the intent? The residents' view was from the inside, watching the new home project begin, and our maintenance person, groundskeeper, manager disappearing to work on the project and adding an assistant manager to sell homes. Plus, the original park was being neglected. That's what the residents saw. My views are from inside the community as a resident, inside the numbers as a bookkeeper, and as a real estate broker selling over 60% of the used homes in Millville. I have been a bookkeeper all my life. I am currently employed by CTC Investors, a manufactured home investor, since 2003. I set the office up when we jumped from C&H Homes, a subdivision builder, to the commercial real estate business. I know manufactured home parks from acquisition, due diligence, property management, accounting, to simple residency. I've always enjoyed bookkeeping, as numbers never lie. If you work at it long enough, you will find your balance. This experience has been more of a challenge than normal, as there are a lot of buried numbers that need to be resurrected and dealt with. The spreadsheet itself we received was a nightmare. This is what was put together along with 2 boxes of invoices. It's many columns of numbers, different numbers for different reasons. After many hours of studying the numbers and how they were adjusted, annualized, and inflated, I decided to start with Why are the numbers saying that the park owner is not making a fair rate of return? This took me back to what we all saw happening. Payroll increases due to the net home project is where I zeroed in. This alone makes up most of the excess, and with my calculations has reduced the potential rent increase to $30.99. I made a spreadsheet of my own with information supplied to us with 2016, the beginning of ownership, and 2024 current, and it showed double plus increase. I was not comfortable saying it was due to the new project until we received 2021, 22, 23 tax returns. Bingo. That's something we like to do in Mill Villa. But this case, bingo, the 2021 payroll was almost exactly the same as 2016, with only $522 difference. No change in 5 years. Did you get that? And that's the way all the expenses are. No changes for 5 years. 2022, the project started at the end of the year. There was a 43% increase in payroll. 2023, the selling started, 139% increase in the payroll. We're just talking payroll, we're not talking other expenses. 2024, there was 11 homes sold total, 143% increase. Don't know about 2025, but we have 18 homes sold, and I estimate at least over 150% payroll increases. The county's export consultant, Dr. Baer, who's been kind of run through the mill here, with his method has reductions for adjusting payroll, property tax, rent allocations, insurance costs, and trash collections. And he concludes that the MNOI analysis to be $44.22. So I conclude that with my analysis that's based on a different method and his, that there is no increase. There are other excessive costs such as utilities that are concerned that need to be looked into, the why they are excessive and how to handle them fairly. Any unbundling of utilities needs to be done legally and not as has been done in the past. IPG has unbundled the sewer charges since the purchase of the park in 2016 and started unbundling the trash the first of this year. The explanation of unbundling: when utilities are taken out of the rent and charged separately, the rent must be reduced by the same amount. That hasn't been done. I recommend the county make it mandatory that the park owner be audited yearly for all turnover rents, verifying that all unbundled utilities amounts have been removed from the rent as a mobile home residency law mandates. This law is for all parks, not just those under rent control. I hope with all the information that has been provided that the Board of Supervisors will agree that our park would have provided a fair rate of return without the new home project. We're not going to go into fighting all of these numbers and the adjustments and the annualized and the CPI. My CPI number is different than theirs, but it's because of the parks building these new homes has increased their costs, and we're not going to pay for it. End of story.
Now, Jerry, wanted to go through some of the numbers with you. Going through in 2021, what was the payroll cost, wage and salaries in just, and we're just going to use the gross numbers, and we're not going to go, was it 97,000 in 2021?
Yes, and yes.
And was it the same in 2016,
Yes.
97,000?
Yes, $522 difference. In 5 years, it only changed that much.
In 2022, what did the payroll jump to?
140,000.
And in 2023, what did the payroll jump to?
232,000.
And then in 2024, what did the payroll jump to?
249,000.
And what was the only difference between those years? What were they doing? Building the new homes?
They started the new homes the end of 2022.
How many new employees did you see in the place?
There's only one extra assistant manager.
Nobody else? Okay. Nobody else working in the park? Okay. That's a no? Okay. And,
Sorry.
okay, and in supplies in 2021 here, what was the cost of supplies they had in 2021?
You know, a lot of these figures, you know, they're broken down in one spot, and then they're in the tax return. They're put together, so it's kind of hard to you know, if you just take all of those, because the supplies in the tax return is the repairs. It goes into the repair section,
Okay.
so it's kind of difficult.
Okay.
But they have increased.
But for cleaning and maintenance, for example.
That would go in repairs also,
Okay.
yeah, on the tax return.
Okay, under repairs, what did they have in 2021?
24,000.
When they started the building in 2022, what did they have for repairs?
61,000.
In 2023, what did they have for repairs?
116,000.
In 2024, what did they have for repairs?
113,000.
In 2021, what did they have for legal?
25,000.
2022, what did they have for legal?
58,000.
2023, what did they have for legal?
15,000.
Okay.
I mean, things changed. There was reasons for those changes, and that's what's buried in all of this. You can have numbers, but there's reasons for those numbers.
Okay. So what did you decide to do? Did you take out that extra number profit? What did you do when you did your calculation of profit? Did you take out those extra raise in the numbers?
No, I just used the numbers.
What numbers did you use to get your number of $30.99? How did you come up with that?
Oh, because I did take out the payroll, and I only took out the payroll. I didn't take out all the extra costs.
You took out the extra cost in payroll?
Right.
Okay. You just took out the raise in the payroll numbers. And that got you the $30.99.
Correct.
Okay. By the way, you were selling houses in Mill Villa, weren't you?
I sell used homes
In Mill Villa.
in Mill Villa.
Okay.
You have to have a special license to sell new homes. I do have that license, but under a different dealer. You have to be under. I was with Yosemite Homes.
How long have you done that?
What, selling?
Yes.
I've been a realtor since 1999,
How long have you been selling homes at Mill Villa?
2011 when I moved there.
Any problems doing that until now?
Until now, not until now.
Okay.
We have 15 homes on the market. We're having difficulty selling them. I know the market it's tough everywhere, but ours is exceptionally hard.
Did you have a sale going on right before you submitted the paperwork to this board?
Yes.
Did Mill Villa cancel your sale after you sent the paperwork to this board?
They created a new policy that made it impossible to sell.
And you lost, that sale was then canceled?
Yes.
How much did you lose because Mill Villa canceled your sale?
It was $8,000, but I was not going to bring this up.
I know, I am. Do you believe that was intentionally done?
I do. Because it's a policy that if they use it going forward, they will never sell a home in Mill Villa easily. They have decided this new policy that the only thing to qualify for the rent, you have to have 3 times the amount of income. You can only use earnings income, which means they can't use their cash in the bank to qualify them. And a lot of the people that buy here, they sell their $1 million homes, they put the cash in the bank, and that's what they live off. And they're not going to use that money to qualify them.
How many people under rent control at Mill Villa are on Social Security income?
Most everybody's on retirement income.
Okay. How many people, is there a food bank there?
Yes, there's a food bank, and it's serving about 20, 25 people right now.
How many, if this rent increase goes through at what they're asking for, how many people there are not going to be able to pay their rent? Can you estimate?
I'm going to say it's probably, it's got to be a big number. Yeah, that's a lot of money.
They're going to lose their homes?
Well, they could if they can sell them. The prices are dropping so fast, it's unbelievable. We sold one for $60,000. Just recently, we got another one that's going for 80, and these were selling for 150 up.
Okay. And so do you believe that what is going to happen is those homes are going to be foreclosed on?
They're probably going to lose them.
Do you have anything else you want to tell the board?
No, sir.
Thank you. That's all I have for the board right now. I want to tell the board, however, that as part of my presentation, that we thank you. You are the guardians of these people, and that rent increase, this protection of this corporation bought this property knowing what it was. They are making hundreds and hundreds of thousands of dollars on their investment every single year. They're not losing money. And they are trying to get more thousands of dollars out of these people who have worked all their lives, bought this property under the guarantee of the board that it was under rent control and it would be protected. And that this corporation bought it knowing that they bought it from rent control, and bought it knowing, thank you, and bought it knowing that a board was going to protect them. And I know they're threatening to sue you, and I know that's scary, and that the county is in a financial bind. I know that, and they know this, and they're threatening. And I asked this board to do the courageous thing. And I know financially it's not the right thing. Financially it's easier just to grant them the increase and to say to hell with it. But I know you are men of courage. I know you are. And I'm asking you to do the right thing. And hell, I will jump to the defense and I will help do this. If you need someone to help fight this lawsuit and help defend it, I will do it for free as well. And I know the people of Tuolumne County, if this lawsuit goes and has to be fought in this county, you cannot get 9 people to vote for them that what you did was wrong here. I ask you to do the right thing and to follow the doctor's petition and do the right thing in here. And I hold you that you will do so. And I thank you very much that you do the right thing here. Thank you very much. And I leave it to you.
I would just remind the board that the hearing will be based on the facts that they have and not any offer by from Mr. Smith, despite the good intentions behind that offer. The board should stick to the facts that are presented before them and the issues under the ordinance for this fair return hearing.
Agreed. And then I'll ask, I know that there are a lot of people with strong feelings about this here. I'll ask that you hold your applause. We're trying to conduct a fair hearing here, and so that's very important to us. And so we don't want to be giving one side or another applause or boos or that kind of thing. So I'm kind of strict about how we conduct these meetings. So I'll let that be a kind of warning that we'll hold the applause and any kind of reactions. You will have an opportunity to speak later, so I'll ask you to kind of hold your feelings and comments until you have that opportunity. All right, so you've waived the remainder of your presentation of evidence, and so at this time we're going to put 20 minutes on the clock. Our owner representative is going to have 20 minutes to cross-examine, and so I'll look to you. If you would like to begin, you can do so now.
Thank you. Thank you, Ms. Ramirez, for your testimony. I do have a couple questions. Did you have an opportunity to read Dr. Barr's report?
So I'm going to, yeah, it's a little bit tricky. We only have one microphone over here, but if you speak into it, then the folks at home can hear you.
Just remember, we're being recorded, and that's going to be the record, so you want to make sure everything you say is, recordable.
Actually, when I read it, I thought that it was more inclined towards IPG than it was for us. And the fact that some of the things that they use, like using Petaluma as a comparison, when Petaluma is one of the highest incomes in the state of California, it doesn't pertain to us. The size of our community, we don't have much economy here. We have a state prison, and we have a hospital, and we have 2 casinos. That's our income. We don't have Southern California. We don't have Petaluma. We don't have that. And so he was using those as comparisons, and I said, so that's not going to help us any, because we can't compete with that. So,
As a bookkeeper, did you have any other I don't know if that's a criticism, but did you have any criticism of Dr. Barr's report after you read it?
I just felt that it wasn't what was real in Tuolumne County, what wasn't real of Mill Villa, and so I just kind of disregarded it myself.
You said the numbers don't lie, but did you have an opinion about the fact that he substituted in a fake figure of $75,000 for the $120,000 that was actually paid for waste management in 2024?
I look at waste management in a different way. We have a problem here in Tuolumne County in that we have to truck all of our garbage over the pass into Nevada because we don't have a landfill anymore. So our garbage is expensive, and it's something that needs to be talked about. And if they want to charge us for it, but take it out of the rent. Don't cause that to be a part of our rent increase.
Okay. Nothing further. Thank you.
All right, so we'll close the cross-examination. At this time, I would see if the board is interested in taking a 10-minute break. Okay, so we'll break for 10 minutes. We'll reconvene right here at 10:41. At that time, we'll hear the presentation and analysis from county staff. Thank you. Okay, again, this is a public hearing for Mill Villa. At this time, we're going to hear the county staff and consultants' presentation and analysis of the evidence before us. Council, will you please take it away?
Okay.
And we will have a time limit on this as well, and we'll set that time at 45 minutes.
The board intend to take a break after Dr. Barr's presentation before cross, or will we just move forward and do the cross-examination, take a break after that? I think we were previously talking about doing that at 11. It's 10:43, but we're moving efficiently, so maybe we should just plow through it.
So I would look to my colleagues, but what I think we can probably do is get through presentation and analysis, cross-examination, and then the witness at large, and then we can break for lunch at that time. At the rate we're going, that should put us at about noon, 12:30, and then we can break for lunch. Of course, we can, if we're not hitting that target, we can reassess, but I think we'll kind of play it by ear. Does that work for you?
That works for me.
Okay, so we'll have a rough target of noon to 12:30 to break, and so at whatever point in the discussions we're at that time, that's when we'll take a break. Fair enough? Okay.
Fair for me. Is that agreeable to all the council? Okay.
Okay.
All right. Now, I'm largely going to turn this over to Dr. Barr to discuss his analysis of the application implications, and then council will have an opportunity to cross-examine Dr. Barr. Just by way of introduction, Dr. Barr is widely regarded as one of the leading experts in mobile home park rent control and fair return analysis in California. He has been an attorney as well as holding a PhD with a scholarly focus on housing regulation, rent control, and the constitutional limits of economic regulation. And for several decades, he specialized in fair return determinations, particularly in the mobile home park context, where rent control raises these unique and frankly very strange issues compared to normal rent control in, for example, apartment buildings. His work has been frequently cited in academic settings as well as by the courts of appeal. And he's been retained in the past by numerous California cities and other public agencies to evaluate fair return applications applying this MNOI methodology that we've been discussing this morning. And he advises governing bodies on constitutionally permissible rent adjustments. Now, he's a proponent and practitioner of the MNOI standard, and that's because that is the most widely accepted approach for evaluating fair return under California law. His analysis, I would say, distinguishes between reasonable operating expenses and items that are non-compensable, such as debt service. My law firm is called Alshire and Winder, and we represent a number of public agencies and cities throughout California. My firm was contacted by the county to assist the county in advising in this fair rate of return application process and conducting the hearing, and I in turn retained Dr. Barr through our office because he is an expert witness who's been used by many of our clients, such as the City of Carson, Los Angeles County, and others for rent return applications. Now, I don't want to spend too much time trying to discuss credibility of various experts. I will say that although there's been a claim made that he is pro-tenant in his analysis, I disagree with that. Although he's retained by the county in this case, his role is not to advocate for a particular outcome, but to apply the established legal and economic principles to the evidentiary record and assist the decision makers, in this case the Board of Supervisors, in reaching a defensible, constitutionally sound decision. So in practical terms, Dr. Barr is here to assist the board by explaining the legal framework of fair return, apply the accepted methodologies, and evaluate whether this particular application is met what, and I'm going to use the phrase burden of proof, but let's say met the burden of persuasion, the burden to justify the rent increase that they're requesting, while leaving the ultimate policy and legal determination to the board. So with that, I'm going to turn this over to Dr. Barr. Rather than present information in a direct examination fashion, I'm going to turn it to him to explain his analysis in a narrative fashion.
Hello. Good morning. Am I clear?
Morning, Dr. Barr. We can hear you. Did you hear the discussions already this morning?
Yes.
Okay.
Yeah. Okay. I'd say my qualifications are set forth in my resume, which in the packet is pages 126 through 135. My articles have been cited over and over in appellate court opinions, including the California Supreme Court, and also have been cited in opinions of the New Jersey Supreme Court in regard to fair return issues. Make one correction in my report. On page 82, the page is labeled page 7, but it's actually page VI. I think you're placed in an unusual position. You're placed in the position of having to make detailed determinations about income and expense claims. Typically, in most of the jurisdictions, not all, these tasks are delegated to either a rent commission or a hearing officer rather than to a board of supervisors or a city council. And on the other hand, you haven't had, as far as I'm aware, any prior fair return applications. And I think a substantial reason for that is that your ordinance provides for has since the beginning has provided for CPI increases. Since about, I forget exact year, I think 2000, the increases have been tied to the COLA, which is used to determine what increases there'll be in Social Security. That's an urban wage earners index rather than the all items index, and it's about, on the average, it's been about 1% lower than the all items index for the San Francisco area. On the other hand, in addition to the annual increases, your ordinance does allow an additional 10% increase when a mobile home is sold in place. So I would say, we don't have exact numbers, I would say that could possibly raise the annual increases by an actual, the park-wide income by additional 1% a year. And I also, to give you perspective, in my analysis, I adjusted the net operating income by 100% of the increase in the CPI. Your ordinance doesn't have a specific fair return standard, but I also want to point out that the courts in 3 different cases have held that indexing net operating income by less than 100% of the CPI permits a fair return. They've upheld ordinances that index or adjust the net operating income, the base year net operating income, by only 50% of the CPI increase or some other percentage less than 100%. And the reason that the courts have reached this conclusion is because there are other aspects of, besides growth in income, that affect the profitability of investing in a mobile home park. First of all, you have a growth in net operating income also leads to growth in value. Net operating income is the driver of value of a park, and that's the way parks are appraised, based on their net operating income. So also you have a leveraging factor in real estate investments, which means that your return on your cash investment can be much higher than your return on the total price. And a simple way to explain that is if you buy a house for $500,000 and it goes up in value $100,000, it's only going up 20%. But on the other hand, if you invested 120%, $100,000, your equity is doubled. So that there's different aspects of return on real estate investments. The MNOI standard doesn't take those elements of the return into account in its calculation. But on the other hand, that's why the courts have held that indexing the net operating income by less than 100% of the CPI can provide a fair return. Okay. Originally in my report, in response to the original application, I said that concluded that the base year rental income claim should be modified. It was too high because it took into account the average of the rent-controlled spaces and the exempt spaces. The park owner agreed to make that modification to their application. They didn't agree with my exact calculation of the base year rental income, but they agreed to reduce their base year rental income claim, which in turn reduces their base year net operating income and therefore reduces the amount that's a fair net operating income in the base year, which is based on the base year net operating income adjusted by inflation. They also agreed to remove part of their property tax increase claim, because part of the property tax increase that the park has received has been connected to the new construction, and that led to a substantial increase in property taxes, and that's been taken out of the fair return claim. On the other hand, so you could say the park owner took 2 steps backwards at that point. On the other hand, their original application, the CPI index they used, they claimed the CPI had gone up by 32%, 32.4%, and now in this revised analysis, they've used this other index that adjusts the net operating income by 37.1%. Okay. And I will go through, and I hope you could access this page in your packet, County 83, because it summarizes what's happening in this case. and the differences between my analysis and the park owner's analysis. Basically,
And for the benefit of the board, this is under tab 1.
Do you have a page number?
It's marked
83.
County 83. I'm sorry.
yeah, I think it would be helpful if you look at these things, because otherwise I think it would be hard to follow the numbers.
And for the benefit of the members of the public here, this is all posted on the county website as well under the county analysis link.
Okay. The applicant claimed that the base year net operating income was $545,000. My calculations indicate that for purposes of an MNLI analysis, the amount should be $525,000. Then they adjusted that base amount by 37.1%, as they've indicated, getting up to the $747,000 in the current year as a fair net operating income. My analysis, the number is lower, that the fair net operating income in the current year would be $701,000. A big difference, and I'll go through this in detail, was in the calculation of the net operating income in the current year. The applicant their calculation is $558,000. I'm rounding the numbers, and my calculation is $619,000. And that has a big impact on the fair return calculation, because my projection of operating costs that should be used, my calculation of operating costs that should be used in this analysis were much lower than the applicant's amount, by $60,000 lower. So first, I want to go into the waste management expense claim. And I'd like it if you went to page 93. And as you can see, from 2015 to 2022, the waste management costs were in the range of 55. They went up to 67,000. Then in 2023, they went up to 103,000. And in 2024, they went up to 158,000. Well, clearly, apart from the fact you have receipts from the expenses, an issue in a fair return analysis is, are the expenses reasonable? Fair return is based on considering reasonable expenses. And when I saw this, my eyes sort of popped out. I thought, well, did Tuolumne County triple its waste management collection rates? And when I saw that wasn't true, just by going on the webpage, I saw the rates were going up by about the CPI. And so here you have this huge astronomical jump in these expenses. I also learned that if the residents, and these expenses were coming to about $64 a month in 2024 per space. I also learned that if the residents contracted individually for curbside pickup, it would cost them $32 a month. And in several of the parks, the larger parks in Tuolumne County, that's the way it's done. So the issue here is it reasonable to have a waste management collection system where it's costing the residents, now that it's part of a fair return application claim, almost twice as much as it would cost them if they got the service themselves? So the next step is we started asking questions, because that was, an exceptional situation. Maybe there was something that, we didn't know about that justified this huge cost increase. Well, I felt basically ran into an information firewall. We told, well, this is supported by receipts. And, you know, well, okay, it was reported by receipts, but why did this occur? Then I concluded it must have been, obviously it was due to a complete increase in service if the prices hadn't gone up very much, the rates. And I was told that conclusion was speculative. Well, how could you possibly reach any conclusion other than it was due to an increase in service if the cost more than doubled? So, and then in the park owner's, you know, response to my original report, basically they said, you know, this whole issue about the refuse collection, waste management costs is sort of like none of your business. We've got the receipts. And they wouldn't explain why the cost went up. And, you know, obviously they increased their service. Why would they need to double their service? And, you know, never got an answer, really. You know, just that, well, it's on our books. But that doesn't, and they said, well, this was the real cost for 2024, but also understand in a fair return analysis, if an operating cost is taken into account in a fair rent calculation, that becomes a permanent part of the rent base. So even if the park owner reduced their waste management cost in recent years, in future years rather, for example, reduced it down to the level that it was in 2022, they wouldn't have to pass that reduction through to the tenants. It's a one-way street. And so what I did was, you know, the best I could. There was no information. I figured out what would it cost the residents if they got the service individually. Why shouldn't they have that option, which I still haven't gotten an answer to. And that came to, if that happened, then the park owner would have to reduce the rents by the cost that they were passing through to the residents of getting their own service, and that would come to about $60,000. You have 155 spaces times $32 a month times 12 months. I also added on, and this was a rough figure, I said, well, they still have common areas. I'll add 15,000 onto that 60,000 amount and project the fair amount at 75,000. And the bottom line is this the amount that's allowed for this expense has to be reasonable. It can't be that there's no limit. And here, you know, the residents, also we know the fact that there was substantial construction. But in the bottom of this, the park owner, Mr. Rutto has indicated that the park owner does not have the burden of proof, that that's an invention. I didn't cite any cases to support that. Well, I didn't cite any cases to support that because that's basic. They are the applicant. They are the moving party. They have to explain why something was reasonable. And instead, in Mr. E's response, he just pointed out all the things, you know, information I didn't have, rather than giving the information. You know, how much waste was there, etc. And just a second. I mean, Mr. Eade said, his analysis contains no discussion of how much trash is disposed at Millville. That's true. That's something the applicant has the information. And, you know, and why they needed to, basically, why did they need to double their service levels, which they say is speculative. You know, of course they must have increased the service level. So this is a major adjustment in the cost calculation, and I think it's essential in a fair return analysis. The expenses have to be reasonable and fair. The next thing that happened, as I mentioned, in the original application, the park owner used CPI calculations and came up with a 32.4% increase. Then in Mr. Eade's report, he switched to another index which came up with 37%. And he said, well, Tuolumne County isn't in the area that's defined for San Francisco. I'll just use the Western region. Well, he never discussed what the Western region includes. The western region includes Arizona, Colorado, Idaho, Montana, Nevada, New Mexico, Utah, and Wyoming, Alaska, California, Hawaii, Oregon, and Washington. So to say that, and you know, his word, he said this was a more geographically appropriate index. Well, I think that's certainly debatable. I think it's subjective. You could say, well, I think even though Tuolumne County is not part of the San Francisco area, it's a more reasonable index. It's a California index than going to this index that includes, you know, states that are pretty far away. And clearly, you know, I point out my analysis, there are lots of different CPI indexes, and they come up with different results, and they're rationale to use this index or that index. Well, what I did in my analysis is I, rather than using the original index that the park owner used of 32.4%, I changed my analysis, or, you know, I used that in my original analysis. The park owner had used it. I used the COLA index because that's the one index that's used in the ordinance. It's used only for the annual increase, but I think, well, this is a measure of the type of growth in income that is the intent of the county. And you can argue for and against different indexes, and I've, you know, seen in other jurisdictions that people, you know, there's index shopping. This side wants this index, this side wants that index. But anyway, I think that's, you know, a reasonable approach, and in this case, and going to this index that includes states that are far away, I don't think it's the most reasonable choice. The next issue is, if you go to page 80, back to page 83, you can see the adjustments I made based on those modifications of the calculations. I reduced the waste management claim by $45,000. The indexing claim, when you index by 33.5% rather than 37.1%, the impact is about $26,000 on the outcome. Then I looked at the current year insurance. And what happened is, I would appreciate it if you go to page 177. And there's a table in the middle of the page in small print. And then this is an explanation we received from Mr. Rutterow, which he was forwarding something from his broker when we asked about the insurance cost. We said mill value. Then if you look under the notes under that first small table, you see property. Milla's insurance value is $2.5 million. So, okay, we asked, how is that number generated? I understood that the park owner had a property insurance policy. Of course they had one. But then there needs to be an explanation of how this number is generated. And the only answer we kept on getting, or we got, was it was generated by the broker. But it wasn't explained how it was generated. Also, I looked at the insurance policy, and it had a change endorsement of adding $2 million for mobile homes in Mill Villa. So that's apart from the basic infrastructure of the park, the common buildings, the infrastructure, etc. So, you know, we mentioned that. So insurance also covers that. And we do know that the park owner has placed new homes in the park. Mr. Lemieux can ask about it, but I've seen the new homes. So, okay, the park was not only insuring the infrastructure, they were insuring new homes placed in the park. But the big thing is, Mr. Otero said, well, am I claiming they had no property insurance costs? No, I'm not. But they needed to explain this number, where they got it from. They have the burden of demonstrating that it's reasonable. And they didn't. So I took out that amount. I mean, it's sort of an unusual situation because they wouldn't give any explanation of where they got the number from. And it's sort of like, I mean, if the county sends an employee on a trip and the employee wants reimbursement, and obviously went on the trip, but they've also got to produce their receipts for the trip, the plane fare, the bus fare, the hotel, whatever. So, so that's another change, and that decreased the cost of, allowance by $15,000. And I also put in the right-hand column of that page, table in 83, the impacts on the amount of the increase. I also adjusted the base year rental income calculation because I calculated the base year rental income at, I think it was $967,000. I'll get the exact number. And then Mr. Reed came with a number that was 10,000 higher. And I base that calculation on looking at the rent registration for August in the base year. The base year was a fiscal year, and then May in the following year, August 2015 and May 2016. We didn't have the rental information for the months between that. So I averaged those two amounts, figuring that would be the average between the two endpoints would be the most reasonable calculation. Well, then Mr. Reed came back with a calculation that was $10,000 higher, and he based it just on the August 2015 numbers, and then he made some adjustments to them. And unfortunately, even though they had asked for it twice, they had not gotten the May 2015 numbers, so you could come up with a closer estimation. But in my revised report, I indicated that, now they have the numbers, they can make a new calculation. But they haven't. And I think that my method of, calculating the base year rental income was fair. The base year insurance calculation is one of the things in an MNOI standard. You want to show the lowest expenses and the highest income in the base year because that generates your current income. And it's sort of counterintuitive because basically when people are asking for an increase, they want to show that their income isn't high and their expenses are high. But the MNI standard for the base year is flipped. You want to show. Well, it's true in that they showed a very low expense for insurance in the base year. The next year, full year that the park had the property, the insurance jumped to $24,000. So the issue is, this base year amount was very low by industry standards, and the appraisal reports indicated that, it was widely varying numbers, but they indicated that $100 a month per unit was very common, and the park owners was only $37 a month. So the question is it fair to pass through this cost increase, which you could say was basically just bringing up the cost to a level that's typical for the industry standards? And I'm not saying the numbers in their submissions were not true, but you had an exceptionally low amount, and then in the following year, right away, when the new park owner bought it, they jumped it to this amount. So the issue is, should that be allowed built into the fair return increase? And but basically, I think the way to look at this case, basically there have to be, fair calculations, and they're saying I'm not using actual numbers. Well, I'm using reasonable numbers because things have to be reasonable in a fair return application, not just that you actually spend it and then build it into your rent base no matter what. And I've, put a lot of numbers into my analysis, but this is, typically way it's done. My analyses have been upheld over and over in court decisions. Cities have hired me to do this analysis. Mr. E just says, well, I'm a tenant advocate. Well, I don't think the 20 cities that hired me, they based it on my qualifications and the fact that my analyses have been, upheld and upheld by boards, arbitrators, and courts over and over who were independent. And I just want to, since, Mr. Rutterout went at length to indicate that, I was biased, I want to point out what's happened. In the recent years, I've been in a bunch of cases where Mr. Reed has been the accountant for the park owner, and over, the arbitrator has upheld number close to my analysis, or, simply just rejected Mr. Ead's analysis. And these were cases in San Leandro where the park, Mr. Ead came up with about $120. I came up with $6. The arbitrator came up with $18. In a case in Petaluma, Mr. Ead came up with numbers ranging from $500 to $1,000. In one case, the arbitrator came up with $112 about, and in the other case, the arbitrator came up with $0. In another, that was in one park in Petaluma. In another park in Petaluma, twice he came up, with substantial increases in the range from $170 to $699 based on different fair return formulas. The arbitrator concluded that the park owner wasn't entitled to an increase. And similarly, this happened in a case in San Jose, and it happened very recently in a case in Cotati. So yes, he's been retained by park owners in, a substantial number of cases. The cases I've, testified in, his claims have been rejected as not reasonable, and the arbitrators came up with something substantially different. But I guess, that I hope that I've explained the situation clearly. So there's a remark, I didn't use real numbers. No, I used reasonable numbers because this is a fair return case. And to imagine passing through to the residents and making them pay for waste management far more than it cost the park before they went into the new construction, far more than they'd have to pay individually contracted for the service themselves, I don't think is a reasonable outcome. So I guess I've gone through a lot of numbers, information. I hope this is clear, and I'll see if there are any other points that are critical to make. No, I think I've explained my adjustments and, why I came up with the number I did, that a $44 rent increase would be reasonable, and that's even subject to the caveat that I incorporated the big claims for increases in management and maintenance, which the residents contend are really the outcome of the new construction in the park, and they really haven't gotten an increase in services. I accepted the park owner in claims for the purposes of my analysis and calculating the allowable increase. But I think also the residents have put on a strong argument about whether those amounts are high. They are within the current amount for management maintenance is in accord, though, with what's typical in the industry, the current amounts. So I hope I've covered this clearly and answered your questions. Thank you.
Okay, thank you, Dr. Barr, and the county will waive the balance of its time unless you have anything further you'd like to conclude with.
No.
Okay.
All right, thank you. So at this time, we will put 20 more minutes on the clock, and I will look to the owner representatives. They will have an opportunity to cross-examine the county consultant presentation. I guess you can cross-examine either Dr. Barr or Mr. Lemieux.
Thank you very much. Dr. Barr, I want to ask you some questions about waste management. I'm a little unclear on your testimony. Did you personally pick up the phone and contact and call and speak to a representative of waste management?
Yes, I did.
And who did you speak with?
Deborah Reagan. She's the director of waste management.
And what did you tell Deborah Reagan? What was your question to her?
Well, my question was, one was that, my main question was there any bar for the residents getting their own curbside service? And I also asked her, she gave me some information about whether some of the other parks, they used individual curbside service as opposed to park-wide service for the waste management.
Okay, council told us at the beginning of this proceeding that your job is not to advocate for a particular side. Did you think that you were being a reasonable, well-balanced consultant by conducting your own investigation and contacting Waste Management for this information?
Yes, when I do these fair return analyses, I, contact people to get background information. I mean, I needed to know whether, for example, there was a bar on parks having curbside service, and also what other parks did. This was valuable information. I go to other sources to get information.
And did you tell Deborah Reagan about the park? Did you tell her how many spaces there are on the park and how many are exempt?
I told her how many spaces there were in the park. She knew about the park.
How many spaces did you tell her were in the park?
I don't remember how many spaces I told her. I mean, I told her it was a larger park.
Did you tell her how many spaces were in the park?
How many spaces were in the park. She knew how many.
In 2025 or in the current year?
Maybe I told her. I don't remember exactly the words, but she knew it was a larger park, and I probably told her exactly how many spaces.
Okay, and did you discuss 2025 numbers, or did you discuss 2024 numbers about how many spaces were at the park?
I don't remember, exact words in the.
And then Deborah Reagan told you that when you spoke to her, how many times did you speak to her over the phone?
I would say about four times.
4 times? You had 4 separate conversations with her?
Yes.
And did Deborah explain to you how the current billing was at Waste Management was? Did she describe that as that the bill went to just the park?
Well, she knew that because that's what I told her was park-wide service.
And you were asking her
I
if there
forget the exact words. It was obvious. It was obvious.
And did you ask her if there was a different billing system that could be put in place in 2025 or 2026, which would not be the current year, but you asked her if there was a different billing system that could be put in place in 2025, 2026?
I asked her if the residents could get curbside service directly from the Waste Management.
And did she give you an actual figure over 2 years, 3 years, 10 years, how that was going to bring down the cost?
No, I made that calculation because I calculated what would it cost for 155 spaces times $32 a month.
And what
Times 12 months.
relevancy is your calculation in 2025 and 2026 when we look at the current year of 2024?
Well, what's relevant is this amount in 2024, is that a reasonable amount that you can use in a fair return calculation because you're building it into the rent permanently? It's ongoing. If this full cost of $158,000 in 2024 is built into the rent, it's a full cost that's allowed into the future. And I'd say it's also relevant if there was well, first of all, apart from the fact it's very high relative to the other years, it's relevant if the park owner, if there was a way that this can be done more efficiently.
Well, you say that
cost the residents less money.
on the property insurance for 2024, you admit that the park told you they got the insurance premium and the valuation from their insurance broker, Brown & Brown, correct?
Yes.
Did you pick up the phone and have 4 conversations with Brown & Brown to understand how the valuation that you say you can't understand, to get clarity on how that was done?
No, but letters were sent asking for an explanation.
Okay, but you didn't do. Let's step back and say you did your own M&OI analysis and you said, I didn't use real numbers, I used reasonable numbers. Can you tell us exactly how many times you changed the numbers and used reasonable numbers instead of the real numbers? How many times did you do that in your M&OI analysis?
Well, I changed the waste management number. I changed the CPI amount of the increase. I changed the current year insurance. I also want to remark that, I didn't call the insurance broker. We wrote letters asking for an explanation. Typically, I don't contact parties that are employed by one of the parties in the case. I didn't contact the residents, and I didn't contact persons with the insurance broker. Wasn't your employee, but he was on, he was under your umbrella or whatever. And I don't contact Mason Reed. I contacted accounting employee. Okay, I'm sorry, I jumped around. So I adjusted the waste management, the base year, the CPI adjustment, the current year insurance claim, the base year rental income calculation. I came up with a different number than Mr. Reed, and I adjusted the base year insurance cost calculation. Those are the numbers I adjusted.
Okay, and then and you didn't do any adjustments, what you call projections, adjustments. You didn't do any of this adjustment work that would have resulted in the park owner getting something more than $101 per month, did you?
Well, in my original report, I came up with a number, I think it was about 70, I forget the exact numbers, about $72, but I put a caveat in the original report. This doesn't take into account the issue of what the waste management costs should be.
And then the base year.
So I want to make sure that he's able to answer the question. I'm not able to hear both of you talk at the same time. Sorry. Well, were you done with your response, Dr. Barr?
Yes.
On the base year insurance, weren't you saying that the base year insurance was too low, and you were basing that on the 4 reports authored by John Neat?
Yes.
And if you go and look at those 4 reports that John Neat did, he was an appraiser, appraising and had insurance information in his reports. Weren't there some parks that had insurance that was actually lower than what the park was paying in 2015/2016?
Yes, there were some, but when he made his adjustments for appraisals, he typically, projected an amount of about, $90, $100 per space per year in his appraisals. of what would, and the appraisals were done, to make a reasonable projection of what the net operating income was for the park. But yes, some of them were lower.
Okay, and then you saw data, you say in your report, where insurance was lower than what we paid in 2015. There was parks that paid higher, but you decided to take what we actually paid and put in a fake number that we actually paid more insurance, not less, based on the other parks in the data that paid less insurance than we did, but you decided to change that number and make it a different number and make it higher and say untruthfully that we paid more insurance than we actually did in 2015. Is that correct?
No.
And why is that not correct?
I will explain. I did not say that you actually paid more. I said for the purpose of a fair return analysis, when you're comparing a base year and a current year, you should be comparing reasonable amounts. And I'd say this was very low by industry standards. The first year that the park, owned the new owner, the current owner, got the park, a year later, it jumped to $24,000. So the question is, should this jump in cost be passed through to the residents in a fair return claim? I never said that the park owner actually paid more.
So you're looking at all these figures, and what you're telling this Board of Supervisors is when you, Dr. Barr, cherry pick a bunch of figures in this analysis, and whenever you, Dr. Barr, not Dan Rutterow, not County Council, not Brian Eade, not Jeff Fisher, but when you, Dr. Barr, look at different financial figures and you use your subjective belief that you pick certain ones as being unreasonable, you want to change it to something reasonable, that's your recommendation that this Board of Supervisors follows what you subjectively believe would be reasonable, more reasonable figures, correct?
Well, yeah, fair return is based on a reasonability. I mean, the fact that you have receipts, and you've actually spent something, the question is you're passing through these costs for the residents, and there's a reasonability standard. What if the waste management went to $500,000 because they put a dumpster in front of every home? Well, they could have receipts, but does that mean it's reasonable?
But
I understand this is a difficult task because you have this reasonability standard, which you can't measure, with a thermometer. But on the other hand, if actual expenses aren't reasonable, is it reasonable to pass these through to the residents, or if they're not documented? Because here you have the property insurance, you have the documentation. You wouldn't explain where the $2.5 million value came from. I imagine it came from somewhere, but you wouldn't explain it. And that's part of the burden. You have to be reasonable, or you have to explain where these numbers come from. And you haven't explained why the level of waste management service doubled from 2022 to 2024. For 7 years, it was a certain level. Was it deficient? There's no explanation of why it doubled. And you're saying I'm speculating it doubled? Certainly it doubled, because the rates only went up by the CPI.
I have nothing further. Thank you.
All right, thank you. So I will look to the tenant representatives. You will have 20 minutes to cross-examine either Dr. Barr or Dr. Lee.
Thank you. Dr. Baer, I think it's still good morning. My name is Charles B. Smith. I'm the representative of the Mill Villa. Thank you for being available today. We all do appreciate it and appreciate your work, so thank you. Now, when you were doing your analysis and you found the issue regarding the property insurance, what did you do to try to get an explanation for where the $2.5 million evaluation, $2.5 million evaluation, what did you do to try to figure that out?
Well, I asked Mr. Demew to write a letter to Mr. Rutterout saying we'd like an explanation of where that number comes from. And the answer we got, how they got that number, and the answer was it came from the broker, but it didn't explain how they got that number.
Okay. That wasn't satisfactory for you? Why not?
No, because I knew it came. Well, put it this way: I knew it came from the broker, but the question is, where did the broker?
Why was that not a satisfactory number for you that the broker came from it, and why was that not good enough?
Because it doesn't show the method of how the number was calculated.
Okay.
It doesn't explain, what was it based on?
Why was 2.5?
For example, the property tax. Maybe I'll explain with another example to make
Yes,
this
please.
clear. The property tax increase. I could look at the bills, and yes, there was a property tax total, but then when I looked at the jump in the improved values, I could figure it out. There was a big increase in the assessments based on a big increase in improvements on the park. Well, then through the records, I could figure out that, yes, the big increase in property taxes was due to these improvements related to the new spaces.
Okay.
Well, with the insurance, I couldn't do that. There was just a number, and where it came from, I had no way of knowing.
Okay. Could it have come from the building of the new houses on the property, and they were sneaking those in or putting them in for Mill Villa existing? Could it have come from that?
Well, the policy I mentioned included an endorsement which raised the limit for mobile homes in the park, as opposed to the infrastructure of the park, from $300,000 to $2 million per Mill Villa.
Okay.
I don't know if I still don't know how that $2.5 million amount was generated. That could have impacted it. I don't know. I never got any answers.
Okay. So it could have been that they were just putting the new construction for Mill Villa, they were putting it into an expense account from the new construction into the existing Mill Villa. Could that have been an explanation for it?
Well, I don't know. What I'm saying, part of the insurance value, they had $2 million coverage for mobile homes in the park, and part of this $2.5 million total could have been affected by that. We got no answers.
How big was the jump from the previous year?
The insurance?
Yes.
I don't know.
Okay, but it went up.
Or I don't remember. I don't remember.
It had gone up
I'd have to go back and look at it.
But it had gone up substantially, enough for you to catch it. No, I don't remember how much it went up or it didn't go up. What stuck in my mind is we needed an explanation for this $2.5 million value. Okay.
That was assigned to this park for insurance
And
purposes. There must be an explanation. We never got it. And there's a number. The insurance broker didn't just pick this $2.5 million out of the air. They got it from somewhere. Or I don't think they picked it out of the air.
This is 2016. Here's 2021.
So they paid.
It went from 8,000 to 60,000.
Oh, we're looking at it went from $8,000 to $61,000. The cost of that insurance from several years before. That's a substantial increase in price too.
Okay. Can I comment on that?
Yes, please. I'd like to hear you, not me. They want to hear you, not me.
When I looked at the waste management expenses, and so they, more than doubled, I thought this is, shocking or strange. And, it wasn't based on rates. So this insurance is different. The fact that it's going from 8 to 60,000 we all know that the insurance market has gone, you could say, gone bonkers, what it costs now. So the fact that it jumped that much didn't tell me much, because it's hard to get insurance. The scope of insurance policies is limited, so that huge increase in itself doesn't show that it's not reasonable. And everybody knows how much it's national, international news. The insurance costs have gone crazy the last few years. And I didn't deny it. All I was looking for was an explanation for this particular part of the insurance claim.
It's the fact that you don't. It's the fact that you don't get an answer to the question that you find very troubling.
Well, yes, you have to justify cost. You have to explain what they're based on.
When you don't get an answer to a simple question like that, do you find that suspicious?
Well, it was strange. I mean, I've worked on a lot of cases, and often, inquiries are made to the park owner in the course of getting the data, because they give a lot of data, but still you've got questions, and you get answers to the questions. In this case, we weren't getting answers. We weren't getting answers about why the waste management went up. The bills went up. That was the answer. And we weren't getting answers to this insurance calculation.
Is this
We
normal?
just weren't getting answers.
Is this normal?
I mean, in some cases, what happens is the whole amount gets thrown out because there was no answer. Well, I didn't do that. I tried to figure out best I could what would be a fair amount for waste management.
Okay, thank you. Why did you pick Petaluma as a community to do as a comparison when that's a much more affluent county than the one we're in?
Well, when you say, are you talking about when I looked at the insurance data?
Yeah.
Or what are you talking about?
You did you used Petaluma on one of your comparisons.
Well, basically, the problem is there's no systematic source of information about operating costs for mobile home parks.
Okay.
The most complete source has actually been Mr. Neat's appraisals. Often he's been an expert witness on behalf of park owners and rent proceedings. He's done thousands of appraisals, so he has a lot of data.
Okay.
And often these appraisals, I mean, if you look at those reports, which I included in the appendix, he based his numbers on a bunch of comparables, or in one case, he even based it on a survey of 50 parks. It's not perfect data, but it's the best that's available, and we have to look somewhere for reasonability.
All right. Thank you very much, Doctor. I have no further questions. Appreciate you testifying. Oh, wait a minute. Take that back.
Dr. Bear, I'd like to ask some questions on the points that you are questioning. On the insurance, in 2015-16, it was $8,000, which was probably based on the value of the property then. And then after the sale in 2017, it jumped up to $24,000 because of the purchase price. But then in 2021, it went from $24,000 to $61,000. 2021 happens to be the time when the new home project was started, and then it continued at 64, and now 74 to 78,000. So that would be when I was doing some valuations on the payroll. I focused in on what was reasonable, and payroll was not reasonable. This is not reasonable, and that's why you focused in on it, and I understand, because that's the way I looked at it. The trash is unreasonable, and it needs to be fixed, but it needs to be taken out of the discussion of the fair rate of return, because it's a total different issue altogether. And the CPI that you questioned, I was 32%. That's what I saw, because that's what our rents were increased by that formula, the 32%. So why the 37%? I questioned that also. So I understand your method of doing things. At first, when you used Petaluma, I was kind of taken back because I didn't think it had compared to our little town, our little area, and the economics was totally different. So I kind of shut down even listening to your report. But your points of what you have covered are the same that I saw and I witnessed. You don't have the opportunity to be here and see and have the visibility to understand why our trash is the way it is,
So-
why these things are. You didn't see them happen.
I'm going to interrupt real quick. Are you asking a question?
You have to ask a question.
Huh?
Do you have a question for,
Oh,
Yeah,
for
No.
the
no,
analysis?
I'm done.
yeah,
Okay.
yeah, this question.
Sorry.
Yeah, yeah, sorry, it's not.
Sorry, I'm supposed to ask questions.
Thank you, Doctor. Nothing further.
Okay, so if there are no additional questions, I'm going to look to County Council. So the next step we have here is testimony at large. Can you please explain what that entails and give us a recommendation on how you'd like to proceed?
Got carried away.
Well, I think that's a bit at the discretion of the board, but you've allocated 30 minutes for this time. I think there may be members of the tenants that are here that may want to testify. But it does include owner representative cross-examination of those witnesses, so I would probably split it 15 and 15.
So what you're saying is now would be the time to invite any tenants up. They can come to the podium,
Yes.
share their perspective, and both the tenant advocate and the property owner will have the opportunity to ask them questions and cross-examine them?
Yes.
Okay. How much time for each person, each tenant that would like to come up? Are we setting a total time limit or a time limit?
The total
on each
time limit
person?
you have for this section is 30 minutes. So I think you're going to have to ask the tenants if it looks like there's more of them that could,
Okay.
if you allocate 3 minutes.
Who would like to speak? By a raise of hands. Okay. So I see three.
So if you give them up to 5 minutes, that would be half the time, and then.
Okay. So what we're going to do is we'll set the timer for 5 minutes. If you'd like to line up or at least kind of sit along the side so I can see who's coming, now would be your opportunity. We're going to set a time limit for each person of 5 minutes. The applicant and then the tenant representative will have the opportunity to ask you questions after that point, and then once their questions have been answered, then you can sit down and the next person could come up. Does that work? Okay. So who would like to be the first person to talk? Step on up. There we go.
Thank you.
Good morning.
Meet with the board this morning, and my name is Ron Neri. My wife and I moved to Mill Villa September 12th, 2012, because of rent control, and we like the park, and we have a very limited income on Social Security. IPG bought the park in 2016. The first 2 years were fine. Soon after that, they wanted to replace roads and wanted us to pay for them. That was 2019 or close to that. We voted no because of the old infrastructure and the history of water leaks that exists to this day, December the 15th, 2025. They had a meeting with us and said if we don't agree, they could do what they want. They have not done routine maintenance on the roads they didn't want to replace to extend the life of the existing roads. If you take away the roads they did in November 2024, they have spent very little on the roads. I suspect $5,000 or less. Furthermore, the roads they did in 2024 were part of these roads were damaged to get water, sewer, and electricity to the new development, 500 development. As for the new development 500 section, many people have had problems with their homes, sewer, high water pressure, water leaks, cracking of walls, water heaters having to be replaced, gas stoves not hooked up properly to propane versus natural gas, flooding to at least one home that was sold to my friend Jim LeBron, space 505, that was flooded before purchase, and for what we can find so far was not disclosed to him during the purchase of that, and that is being looked into as I'm here right now. IPJ gave my friend Jim $5,000 credit he did not ask for. And when he asked why, was told because of the inconvenience. We have that letter, and I have videos and pictures of the home before purchase. So how come other people in the 500 section did not receive any credit with their inconvenience? I have seen IPG trying to do things without permits numerous times since the purchase. I have and have to report them because of water leaks. I'm going to do that again today. I have had to get CAL FIRE here last year because of weeds and fire danger, and I will continue to do that if necessary, as well as report them to HCD. And it's true, not one park owner since November 7th, 1995 has ever come to the board asking for a return. I assume because they're already making a fair return on their investment, just as I think IPG is already. IPG was sued in Minnesota that started in 2023 and was settled in 2025 for $5 million. It's public record of their treatment to their tenants. So I ask you as a board, when is the last time you heard of an attorney general having to get involved to protect the tenants? So in closing, we have many people here on Social Security as their only income. Some on oxygen, walkers, depend on food banks, can't drive, have no family. You may not see them here all day because of this, but I can assure you they're asking for your protection and understanding. If you as a board allow this 16.8 increase, you as a board will essentially be causing seniors to lose their homes and end up on the streets. Thank you for your time.
Thank you.
Any questions?
No questions?
Any questions?
Questions? Okay.
Thank you.
Thank you very much. All right, who else would like to speak? Come on up. Good morning.
Good morning. I live in 405. I asked the manager of the park to come, and I had overgrown trees against my building and around it, and there was a lot of trash. I mean, bushes. And he looked at it with his one helper, and he said, "That's your problem. I've had the expense of going out and having cutting down and protecting my house and my shed because of overgrown trees." That's it.
Thank you. Before you sit down, are there any questions for this resident?
Oh, I'm sorry. My name is Barbara Anderson.
Thank you, Ms. Anderson. Is there anyone else who would like to speak? Yes, come on up. Good morning.
Morning. Thanks for letting me talk. My name is Margaret Clegg, and I live in Millvilla. Back in March 17th, I had a water leak. I called the office on a Friday, and they said it wasn't that bad. I lost over 15,000 gallons of water in the last, they didn't fix it for about 2 weeks. So it took 7 months for me to get my own driveway back because they tore everything up. And I couldn't understand why they couldn't fix it in the first week when I called them. They kept saying, well, the water's not that bad, but 15,000 gallons is a lot, and it's a lot for people to pay for. And I appreciate you letting me talk, and I hope you do the right thing. We need help. We have a lot of people here that can't afford a lot of stuff. Thank you.
Thank you. And before you sit down, are there any questions? Liz? So could you come to the podium? And so the question was...
No, I actually went to the headquarters of IPG, talked to Valerie and a couple of other people, and I told them, I said, because of negligence on the park, they shouldn't have to pay. None of us should have to pay for that. And it took me a while to keep telling her that, but it did happen where we didn't have to. But still, they should have came out and had it fixed immediately, so we wouldn't have lost 15,000 gallons.
So, we need to make sure that this is entered in the record. Can you please speak into the microphone so that we can hear you?
How many months before the water leak was fixed?
It took about 2 to 3 weeks because they had Roto-Rooter come out, then they found one part of it, and then all of a sudden there was another leak because they had a big hole in it. So they kept pumping it out, and that was weeks, 2-3 weeks they were pumping.
Okay, thank you.
They had 4 different plumbers coming out, and nobody knew what it was. And so they finally got another person, and they kept digging, and it just kind of went into my driveway, and they finally found it. So it was about a month. Thank you.
Thank you. All right, are there any other witnesses at large, any testimony at large from tenants that would like to speak? Okay.
Well, I'm not a resident. Am I allowed to speak?
Look to our attorney. The hearing schedule that I have says testimony at large, examination of tenant witnesses.
Yes, that's what I have also. I think that at this point we need to limit that to the parties.
Okay.
So, and you're a tenant?
Yes.
All right, welcome.
Hi, my name is Carol Reel. I'm the president of the HOA at Mavilla, and I have been a witness to, I've lived there since 2011, and I've been a witness to many different things happening. Cost I never was aware of, but I could see with waste management, they started with just once a week, and then they increased the pickup time. So I can see how they increased that bill just by adding more trash cans and picking up more often. Now, there's been a lot of maintenance issues that have not been taken care of immediately. Currently, we have one that's been a water leak that's been going on for at least 2 months. We're finally, after notices to the office, we're getting it fixed. So these are things that are happening, and I don't believe that at this point, that if this raise goes through, we're going to have at least 800 people on the street homeless because they will not be able to afford what this increase that they're asking for. Because again, they're on income. A lot of these people are homebound. They can't get out. They depend on other people to come in and assist them. And that's all. Any questions? Okay.
How many people do you think will have to lose their house?
Well, I'm saying 800 because that would be families that are living there.
Okay. And can you tell us some problems? We've seen increased costs in the payroll. Have there been additional people hired to work maintenance in the park?
No, they've been the same 2 people.
So there's no other payroll people? Is there been additional maintenance done at the park, like additional trees cut down, things like that?
There's been an occasion, and I've actually seen in the manager's office where originally they used to have them listed, but they would claim that the trees now are not their problem. It's the residents, whoever lives there.
So they've stopped the maintenance that they used to do?
Yes, they do very little.
Okay. And so is there a problem with the back gate in the park?
The back gate is supposed to be for if there's a fire that you can get out. You can't open it. I mean, we're old people. Personally, I don't think I could open the gate. I've seen it. There's a couple of gates, and they keep them locked, so we can't get in and out of them. And we also see people coming in and dumping garbage in our trash cans, and we've brought that to the attention of the
But the back gates are now locked, so you cannot escape if there's a major fire.
I think they say they're going to come up and unlock it if it happens.
Okay. But if there's no management at site at night, how are you supposed to escape?
Good question. They give you the number for the office, and they say if it's an emergency, they'll contact them and they'll call you.
Okay. All right. Thank you very much.
You're welcome. Thank you.
Thank you. Are there any more tenant witnesses that would like to speak? Okay, see. if you'd like to speak, come on quick, because I'm gonna shut the hearing down. I need you to come to the podium because, are you a tenant? Okay, so
But there's a legal issue here, and that's the California mobile residency law.
So,
I just,
on the
I'm
direction
trying
of
to
county council, what the rules that we have agreed to and the parties have agreed to
I
is that
understand.
tenant witnesses can speak during this portion, and so I have to restrict it to
is
that.
there going to be public comment?
I do not believe so.
We don't need to require public comment
Yeah,
to this because it's a fair
This
hearing
is
on that.
this is not a typical Board of Supervisors meeting. This is
All right.
a hearing that was requested by another party. Yeah.
Yeah, no, I thought it was a Board of Supervisors meeting.
Nope.
Well, it's noticed as one because the board is sitting as the hearing body for the fair hearing.
Yeah. This is the first of this type that we've done. This is a public hearing. So, okay. So if there are no tenant witnesses that would like to speak, I will close the testimony at large. All right.
My name is Catherine Garcia, and I live in 513. I have been a resident since 2023. I have seen a lot of people stressing over the fact that there are so many weeds and so many issues within the park, and no park maintenance won't do anything about it. When I moved in, I was told that I was going to get new landscaping, so I took all the stuff out of my front, and I got rid of it. Took everything off my hill. They said they're going to come in, they're going to put in tarps. And they did that in the front and the side and the back. Because I took my bark off my hill, they tell me that I caused erosion. We had an inspection done, and they're supposed to be removing the bark from all the hills on 500 and actually all the way around the houses on the 500 block. That has not been done. I'm just wondering how long we can keep this up because it's a hazard. They don't care. And I hope you do. I really do. Because we can't live like this, constantly under fear. It's not right. We're older. We should be able to live our lives the way we intended to, but this is not happening. Thank you.
Thank you. All right. I will ask again, are there any other? Yes. Are there any questions? Okay. I'll ask again, are there any other tenants that would like to speak? Okay. I see none. So I will close the tenant portion, testimony at large. Now, this is the opportunity now for the county to ask questions of the witnesses and the consultants. Do you have a time estimate on how long you expect that to take?
Yes, I would estimate, I'll be asking questions of Mr. Ide, I think only. And my questions are going to take about 30 minutes. I think I'm going to use the entirety of the time.
Okay.
The members of the board, should they have questions, can also ask. I'd suggest it would be most convenient for, if any board members wish to do that, they should probably do so after I ask my questions, in case I answer some that might be pending. The next items after that are closing remarks. So we're now at the noon hour. I guess my question to the board and council would be, is now a convenient time to take a brief lunch break, come back, and we probably have about, conservatively 1 to 2 hours left of proceedings at the hearing, depending on whether the board has questions.
So that was going to be my suggestion, is that we break for lunch and we reconvene at say 1:10, 1:15.
That's enough time, more than enough time for me. Is that convenient for council?
Okay. And then after that time, like you said, you will ask questions of the consultants and of the applicants, and then we'll have an opportunity to ask questions. Then there will be closing statements, and then we will deliberate and if possible, make a ruling. Correct?
Correct.
Okay. So we are now breaking for lunch. We will reconvene in an hour and 10 minutes at 1:15. Okay, welcome back, everyone, to this meeting of the Tuolumne County Board of Supervisors. We are at a hearing for Millville Estates Mobile Home Park Fair Rate of Return. Again, I'll open the public hearing. And there was a question before we left about public comment. We discussed it with the attorneys, and it was noticed as having public comment available for this hearing. So what we've elected to do is we will continue on with the scheduled proceedings, and then after the tenant and the park owners have the opportunity to give closing arguments, we will open the hearing for public comment. I do know there was someone here that was interested in making a public comment that wasn't a tenant. We've made efforts to reach out to that person to give them the opportunity to come back and make a public comment at that time. So that's the plan. Does that work for everybody? Okay, and does that meet all the legal necessities?
Yes, out of an abundance of caution, yes.
Okay, all righty. So where we left off, we're going to allow the county to do an examination of the witnesses, including the consultants, and then the board members would have an opportunity to ask questions as well. So I'll go ahead and start, Mr. Lemieux, and we're gonna, we've been applying time limits, so we'll do 30 minutes, and your time starts now.
Thank you. My questions are directed to Mr. Ide.
Mr. Eade.
Oh, I beg your pardon, sir, Mr. Eade. All right, Mr. Eade, you were retained and paid by the park owners for this matter, correct?
Yes.
And this morning, or this afternoon, actually, you're not offering an opinion on the county ordinance or on constitutional law regarding fair rate of return. It's only your economic analysis. Is that correct?
I am not making like a legal opinion, if that's what you're asking.
Yes, it is. Fair return is not a principle or concept in accounting, is it?
No.
Do you agree that fair return and a determination of fair return is ultimately a legal determination for the board, not an economic entitlement set by an expert witness?
I would say that a fair return.
So I'll hold right there. So we have an objection.
You know,
I'm going to look to. Oh, sorry. Go ahead and state the objection.
The objection is that county council has asked this witness that they don't have any legal conclusions or opinions, and then he asked the question, do you think legally blah, blah, blah? So I don't understand why county council asked the question that this witness has no legal opinions, but now he gets to ask him legal questions.
Okay.
Well, that sounds like a speaking objection. Did you want to comment?
So I'll look for our attorney to.
I think that's a valid objection.
Okay. So I'll look to my colleagues. The recommendation from council is to abstain the objection. Do we agree with that? Any objection to that? Okay. So we will abstain the objection.
Okay. Did you?
Sorry, I didn't hear you said abstain the objection.
Yeah, the objection is sustained.
Okay, so I'll withdraw that question. And maybe I'll rephrase it a different way and ask if this is an acceptable way to phrase it. Do you agree that the determination of fair return is ultimately an issue that the board has to decide?
Well, yes. I mean, that's why we're here, and they are going to make the decision. I agree with that.
You didn't review or opine on whether there were multiple lawful outcomes which could exist within a zone of reasonableness, did you?
I'm not sure I understand that question.
Do you agree that there are different ultimate conclusions on what the fair rate of return could be that would be reasonable for the board to choose? In other words, the particular number that is in the application or that Dr. Barr has recommended, those are not the only permissible numbers that the board could select as the rent adjustment. Is that correct?
Same objection.
I can't.
I'm having a problem with this, counselor, because you're asking him legal questions procedurally about the outcome and about the ordinance. So I mean,
Okay.
that is asking a legal question, that question that you just asked.
Okay, I can accept that point, so I'll go ahead and withdraw and avoid that line of questioning. It's a little bit difficult, so, you know, I'm open to your suggestion on where you think that I might be crossing the line. Do you agree that the burden of proof is on the applicant to establish that the existing rent level is confiscatory or constitutionally inadequate?
Same objection. This witness is here as a CPA to talk about how he did the MNOI analysis, and you're asking him, does he agree that there's a legal burden of proof? Ken Barr testified to a legal burden of proof, and Dan Rotaro said there is no burden of proof. And this witness is not here as a lawyer to give opinions as to whether or not a burden of proof exists or not.
Okay, so the witness won't be offering an opinion on whether there's a legal burden of proof. But your analysis is premised on the notion that there's a shortfall between what the ownership is currently entitled to and what the current net operating income is, correct?
It's not premised on that. That's the result.
Okay. Let me ask you about your CPI index selection. Is it correct that there is no particular CPI index that's mandated by either the county's ordinance or fair return analysis in general?
I would agree with that. No specific CPI index.
And you changed or revised the CPI index used in your analysis after the initial application was submitted. Is that correct?
So I didn't prepare the initial application. I prepared an analysis of the original application as well as Dr. Barr's original report in response to that application. You know, it was fairly limited in scope. So I didn't make a change. I selected the CPI index that I believe is appropriate in this case.
Okay, and could you describe, you've already touched on it, but just to reiterate, could you describe what the change was?
So I can explain the difference between the CPI that was included in the original application that was not prepared by me and my selection of the CPI index. And the difference there is the CPI figures that were in the original application actually came from, if I remember correctly, the Department of Transportation or Caltrans website or something like that. There was a link that was provided to me supporting that. And that's not the source. CPI indexes are calculated and published by the Bureau of Labor Statistics. And so I went to the Bureau of Labor Statistics website and selected the appropriate CPI index for this park in Tacoma County.
And that selection resulted in an increase in the requested rent adjustment, correct?
No, not necessarily. I mean, that's one piece. I did more than one, but there were many components to the, what I'll call increases and decreases to the rent adjustment in comparison to the original application. I believe the original application was about $122 of change. That was the requested rent increase. My calculation, which included not just a CPI, a difference in the CPI from the original application, but it also included differences in expenses in both the base year and current year from the original application.
And I'm sorry, I don't mean, I'm sorry to interrupt.
My resulting 101 was actually a decrease from the original application.
But just to be clear, solely on the issue of the CPI index, the change in the CPI index resulted in an increase in the requested rent adjustment than what was in the original application. Do I have that right?
Well,
just taking that one factor. I understand there are other factors.
Maybe you can't take one factor, so I'm trying to answer it completely. And what I'll say is if the CPI index that I selected resulted in a 37.1% inflation rate, we'll call it. That is higher than the 32 and change percent that was included in the original application. So yes, mathematically adjusting some fair return number from the base year, multiplying that by these two different percentages, yeah, my number would be higher because we're multiplying by 37.1 instead of 32.
Okay. And the CPI index you selected is called the All Items Western Urban Index, is that right?
All items, Western, all urban consumers. There's a difference. I know that there's a few different CPI indexes that sound similar. The important thing here is the location, which is the Western, and all items and all urban consumers as opposed to all urban wage earners. Those are different CPI indexes.
Is it correct, as Dr. Barr stated, that the index that you selected includes locations outside California like Idaho, Hawaii, Wyoming, and so on?
Yes, it's the western region of the United States. It is not specifically California.
All right. And in your report, why didn't you disclose what specific areas were included in this index?
I guess I just didn't think it was necessary. I've never disclosed in any of my analyses the makeup of the CPI index.
Okay.
But here I'm today.
And I'm referencing Bates 006310, where you discuss selection of CPI index in order to represent actual inflation in from the base year through the current year in a relevant geographic location. I selected the all items in the West Urban Index, all items in West Urban, all urban consumers, not seasonally adjusted series. You didn't perform any analysis specifically to show that this Western region CPI that you selected is more accurately reflects operating cost increase for this park than any of the other indices which could have been selected, correct?
Well, I did look at the various indices that are available, and that was the most appropriate. When, looking at something like San Francisco, Oakland, Hayward, or Los Angeles, Long Beach, Anaheim, or San Diego, or some of these other indexes, those are very targeted to specific areas that necessitate a separate index due to their difference in economics and inflation with respect to other parts of the state or country. And so that's why those are developed and specifically targeted, because things are very different there. Tuolumne doesn't have its own MSA, Metropolitan Statistical Area. And so it falls into this West region. That's the best, most appropriate index.
Do you agree that selecting different CPI indices produces a materially different result in terms of what the increase would be?
It's possible. It depends on which indexes we're talking about and the time periods.
Would you agree your selection of this particular CPI index reflects a judgment call on your part and it's not a legally mandated requirement?
As I stated,
I beg your pardon. I've used the phrase. Let me strike that because I am again calling for a legal conclusion. So I apologize for that. But let's just ask it: is the selection of the CPI index just a judgment call, not something that's required or that's mechanically applied as an accounting principle, anything like that?
I mean, I think there was more thought to it than just like a judgment call. That term makes it sound like it was kind of a shot in the dark. As I said, I reviewed the indices that were available. I examined the areas that were included in the various indices, and determined that this to be the best one. The ordinance, as I stated before, does not call out a specific index.
Okay, I want to turn to the waste management issue. Do you agree that expenses increases have to be reasonable in principle?
I don't, that's a difficult question to answer because reasonable is broad. Do they have to be correct? Yes. But I'm not sure what somebody would consider reasonable. For instance, if insurance cost, everybody's homeowners insurance has doubled or tripled recently, I'm not sure that people will call that reasonable. It just is what it is.
Well, is there?
I think reasonableness in the context of a fair return is in terms of, are these income items or expense items accurate and representative of a normalized year? And so, for instance, if one year contained, the base year of the current year contained 13 payments for some monthly expense, and that was a material difference, we'd probably want to make an adjustment to that so it really only represented 12 months of expense. But just because rates have gone up and that's the economy, that doesn't make something unreasonable or reasonable.
But to be clear, when you're making those examples, you're speaking in general terms. In your actual analysis, you didn't explain why these waste management costs did go up. In fact, did you?
I mean, they were supported by invoices. I know that the park owner submitted all of the invoices that made up this, call it $120,000 of trash expenses. I did not do an analysis of rate and volume and those types of things. That generally, in fact, I've never seen an analysis on something like trash or utility because those just generally are what they are. They're not really a controlled expense by the park owner.
Okay, so based on that, for example, you didn't provide an analysis or documentation showing that as the rates more than doubled, there was some kind of increase in service levels, correct?
Correct. Again, my scope was limited, as I stated in the first paragraph of my letter. It was limited to some analyses of Dr. Barr's report and the park application. I was not retained as an expert to calculate the fair return under the MNOI standard in order to prepare the application.
Well, do you know or have any explanation of why the waste management costs more than doubled? Do you have any ideas to help us with that?
I really can't comment because I didn't get too deep into it. I think, yeah, no, I can't really comment on that. I mean, the information was provided to the residents, the county, Dr. Barr. The invoices include rates and volumes, so I presume Dr. Barr could have done that analysis, but I didn't see it done.
And do you agree with this Dr. Barr's analysis that the residents might have been able to obtain waste management services at a far lower cost individually than what the park has paid?
No, I think that analysis is incomplete. Dr. Barr explained in his testimony and maybe in his report as well that he believes he deduced that the difference is based on service levels, I guess number of pickups of trash. But he did no analysis on the actual requirements of the residents. He's assuming when he says it's $32 a month, I think he's assuming that's one trash can per household. I don't, he hasn't completed the analysis to say that one trash can's enough. I mean, my neighbor has 5 trash cans. You know, it's just complete, it's totally incomplete. Yeah, it's not a thorough analysis. As I explained in my letter, it really shouldn't be considered.
Well, but you brought up that example that, for example, maybe the requirements have increased. There's nothing in the application or your analysis actually showing that, right? I mean, isn't it, I don't want to go back to burden, but, you know, let me ask you this. Would you agree that the doubling of costs in 1 year is unusual without some explanation or backup explaining why that became necessary?
That's a general question. You're saying that if costs of something doubled, what was the question again?
Well, I think the point you made is that Dr. Barr didn't rule out all the possible reasons why those increases occurred. And, you know, I could put the question to you. I mean, you didn't analyze changes in service level, number of pickups, container sizes, or anything like that, correct?
Correct, because that's not part of an MNOI analysis. What was provided by the park owner, which is all of the invoices supporting all of the payments for a service that was provided to the residents, that's enough in my expert experience. I've never seen a challenge like this. This is more of a, it's more of an analysis or advice as to how the park should operate and manage its operations, which is just not part of an MNOI. I mean,
do you agree
many
with
other categories that may that I'll withdraw that last part.
Do you agree that MNOI considers reasonable operating expenses and not simply the actual expenditures? Or is it just simply have to take the actual expenditures and ignore reasonable operating expenses?
Same objection, I'm sorry. He's asking a legal conclusion, whether or not this method legally should include reasonableness.
I don't think that's a valid objection.
Okay.
He's asking him what is included in the NOI, which he was asked to opine on.
Okay, so you're saying, our attorney is saying that that's not valid. Our options are to sustain the objection or to overrule it. I'll look to my colleagues. Our guidance is to overrule that objection and allow the proceeding. Okay, so that objection is overruled. Please proceed with your question.
Well, you're presenting here as, I think you just said, an expert who's observed many of these proceedings, and you've opined that reasonableness is not, in your experience, considered a factor. So I do think it's appropriate to ask, do you agree that MNOI considers reasonable operating expenses and not only actual expenditures? Do you agree with that statement?
So as I stated before, reasonableness in terms of, are these expenses, you know, normalized? Are there more than 12 months of expenses or less than 12 months of expenses, and should there be an adjustment there? And that's a typical one. And for example, if there's a storm and, you know, 30 trees get knocked down and the park has to pay $20,000 to remove those trees, I'm probably going to make an adjustment there because there's not going to be $20,000 of tree removal every year. That's what I would consider, you know, examining for reasonableness. But I really struggle with the assertion that because trash got expensive, that's unreasonable. I think that's part of the MNOI.
Okay, so just so I'm clear, and I don't want to misstate your testimony, is it correct to say that you agree reasonableness is a factor, you just simply disagree with Dr. Barr's application?
Well, reasonableness in the terms that I just spoke of, you know, reasonableness is, the word itself is quite subjective, so I want to limit that to, you know, the kind of the examples I gave and the normalization.
Okay, and finally, on the topic of the trash pickup, you didn't compare this park's trash cost to any other mobile home parks in the county or the broader region, correct?
I did not.
Okay. On the subject of insurance, your insurance allocation relies on, is it correct that your insurance allocation relies on estimates rather than the contemporaneous base year invoices?
Are you talking about there's like apportionment to spaces that are rent controlled and those that are not rent controlled, and then there's also allocation of premiums from the master policy to the park. What are you specifically addressing here?
Well, I was addressing the former, but you make a good point. Let me rephrase the question. To what extent does the insurance allocation in general for either of those rely on estimates versus actually using the contemporaneous invoices from the base year?
Okay,
if any. I don't mean to put words in your mouth.
I don't believe there are estimates. I mean, we know there was 155 rent controlled spaces, and we know there was an average of 204 spaces in existence in 2024. So that's pretty solid. With respect to the allocation of premium from master policies to the park, that's based on, for instance, with property insurance, that's based on total insured value, TIV. And that's actually the amount of insurance coverage, that $2.5 million that Mr. Rotaro spoke of. That's the actual coverage limit for that park. And so, I wouldn't consider that an estimate when you allocate the total premium.
Is it correct that there was no documentation submitted explaining the endorsement that increased the coverage limits?
I can't answer that. I'm sorry. I don't have enough familiarity with that.
Okay. Would you agree that... Well, we'll strike that. The ordinance presumes that the base year reflects a fair return. Is that correct?
In general, yeah. The MNOI methodology assumes or presumes that in the base year, the park owner was earning a fair return.
Okay, and you would agree that that the park, I don't remember if it was you or Mr. Rotaro that phrased it this way, but the park got a good deal on insurance in the 2015 to 2016 period? Is that correct? I mean, would you agree with that characterization? Let me phrase it. Do you agree they got a good deal in 2015 to 2016?
So, I don't mean to not answer the question, but I really don't know, because I don't know the risk profile of the park. I don't know the total insured value, of the park back then in the base year. I'm not an insurance expert. I don't think really myself nor Dr. Barr knows if that's a good deal or not. It just is, again, it is what it is. It's within the range of what other parks paid back then. That's about all I can offer.
It is in the rate. So you did analyze it in comparison to what other parks paid in that time period?
I analyzed based on the testimony and the report of Dr. Barr. I said that the amounts that this park paid were in the range of what the other parks paid that Dr. Barr was comparing in his analysis.
All right. Would you agree that that having an unusual low cost in a base year can distort comparisons over time?
Can you repeat that? I'm sorry.
Well, would you agree that having an unusually low insurance cost in a particular base year would have the effect of, in a sense, overstating the required rent increase if you start from an unusually low base year and then converge on a more normal price level?
No, because the MNOI formula, again, like we said, presumes that what the NOI that was being earned in the base year is a fair return.
Okay. And you already touched on this. Is it correct that the applicant revised several key assumptions after reviewing the tenant and county submissions?
Are you talking about my
Yes.
report?
Well, yes. As you said, you came in and changed certain assumptions. Isn't that right?
Yes, I had changes to what the park had originally submitted in the application.
The park undertook significant new home construction after the acquisition. Is it correct that some of the park's employees worked on both park maintenance and new construction?
I don't know that answer.
Okay, so you can't say with certainty that all the payroll increases were solely for the rent-controlled space operations?
I did not examine the underlying records of payroll.
I think Mr. Ruttero may have characterized MNOI as a purely mathematical formula. Do you agree that MNOI is purely a math problem? Is it an accounting problem? Does it require other types of judgment to be exercised?
Okay. That was a few questions.
Well,
in there.
I apologize. Do you agree it's a pure math formula?
It's a fairly straightforward mathematical analysis. There's obviously adjustments that are mandated typically by an ordinance in order to arrive at the appropriate net operating income, which is then multiplied by an inflation factor. It's fairly straightforward.
Would you agree that two qualified experts could reasonably reach different MNOI results using different assumptions?
Yes, I would agree that using different assumptions, applying them to the same formula, are going to result in something different.
Okay,
Yes.
so
Okay, thank you.
Thank you for answering the question, and thank you, Counselor. So at this time, what I had hoped to do is that that board members could ask questions. Well, first of all, is there any additional questions from County Council? Okay. So board members can ask questions at this time. We will also have time after closing arguments to deliberate and ask questions, so this won't be your only opportunity to ask questions. But if you have any questions about procedure or some of the things that you've heard, now would be the time to do that. I know Supervisor Kirk had a question about procedure he'd like to ask.
Yeah, what's that?
No time on this.
No, sorry, this is our first time doing this, so we're not experts, and we're not going to sound like attorneys. So I'm going to ask an obvious dumb question, but it's to our counsel. So the attorney just asked questions of this gentleman, so it sounds like the conversation is more pointed at them having to prove, why don't we have the same questions maybe directed towards the folks who are defending? Like, it feels like it's leaning a certain way. I'm just curious how procedurally how we're there. Does that make sense?
Well, both parties, counsel for the owner had the opportunity to cross-examine the person that the county had as their witness, or to cross-examine the witnesses that were put on by the tenants.
Okay, so it's just a decision not to cross-examine.
Pardon me?
It's just a preference.
There were fewer cross-examination questions.
Thank you. I
yes.
just was sitting here trying to get clarification on that. That's it for, that was a procedural question, so you guys are good for questions.
Other questions? Supervisor Holland?
I'm assuming we're asking questions like, if we have a specific question, we can ask that now? Is that
Yeah,
okay?
I think, I don't see a problem with that. I think we should ask specific questions, and then if you have something else, we'll still have another opportunity. So I would go ahead and go for it.
I have some for Dr. Barr. Is he still on here?
Yeah, and it is Dr. Barr, correct?
That's right.
All right, I heard a
Yes.
different pronunciation of it from someone I don't know who, but,
Yeah, no, it's not Bear, it's Bar.
okay, gotcha.
Okay. Why is it you don't trust the numbers of year one, the base year?
Well, when you say trust them, I think that that was the real expenditure amount. The issue is more if you have exceptionally low expenses in the base year for one reason or another, it overstates the base year net operating income for the purpose of comparison purposes. I mean, often the ordinances, this ordinance doesn't have any specific fair return standard. Some of the ones that have MNOI standards state that if the base year expenses are unusually low, they should be adjusted for the purpose of an MNOI analysis.
So what's the
Because
definition
you're
of
trying to make a fair compare. What?
So what's the definition of unusually low? Because that sounds a lot like an opinion versus an actual number, right? That's just your opinion that it's usually low?
Well, yes, it's usually could be based on a comparison with other years or based on a comparison with industry standards.
Okay, so I noticed you brought up a lot about the insurance being unusually low. Is there different types of insurance maybe a park had at one time that maybe changed over time? Like maybe they had just a liability policy and then they changed and they had liability and property coverage, which would be different than the base year?
Absolutely, yes, that's correct.
And was that factored in these thoughts when you said it's unusually low?
No, what I looked at was the total, and I compared it with what, the appraisals indicated was sort of like the typical cost with a lot of variation, and the appraisals kept on projecting, because they were making projections of net operating income for appraisal purposes, and typically you often assume that the expenses were about $100 a space per year in that range.
But that could vary.
I felt that these were.
That could vary from park to park, correct? I mean, so it sounds like we. Okay,
yes.
It's fine. So let me ask you this: you guys stated that that the base year, if I get this right, of the MNOI is considered fair. Was that a correct statement that I've heard?
Yeah, that's the premise of the MNOI standard. And you select a calculation of the base year that's a fair calculation.
Okay, does that calculation take into fact what if a park is in distress and somebody picked it up on the cheap, let's say, because it was not making a bunch of money or for whatever various reasons, right? It just, a wildfire burned through and destroyed part of it. I mean, there's many reasons why people sell items or sell property. Does that account in there? Because you're saying that if the base year is considered fair, but is there not possibilities that there could be other factors affecting that?
But we're not looking at the price the park owner paid.
No, I'm asking about their return, right? But I'm not saying their price.
Yes.
I'm saying though their profit,
Yeah,
right?
Okay. Let's say there was a flood in the base year and the expenses were extraordinarily high, which would reduce the base year net operating income. No, then those expenses would be reduced for the purpose of the base year calculation in order to make them ordinary. If you had extraordinarily high expenses in the base year for some reason or another.
What about the opposite direction? What if you had a bad park owner that just ran the park poorly, and when they sold it prior to the one purchasing it, because that's his first year, it takes time to get new tenants, move people in, increase profits. Would that also affect the MNOI?
Yes, it would. If they were extraordinarily low in the base year, the expenses were extraordinarily low, you'd say that the income for that year was not an income that should be used for comparison purposes because it was distorted by the fact that they weren't spending the money they should to operate the park.
Well, they could be spending money, but I'm saying is the MOI is based off of their profit, let's call it, right? Is their operating income. Essentially, that's their profit. So you might have high expenses, but you can still have a low income, correct? I mean, just because, if a park has 100 spaces and they only decide to fill 10 of them, they're still going to have a very low profit. And somebody else purchases it, they fill it up to 80% full, their profit line is going to increase.
Right, but then if that happens, in the M&O analysis, you'd adjust the base year to reflect, let's say, if they only had 10 spaces rented, you reflect it to, reflect what if 100 spaces had been rented to try to bring up that net operating income to what is fair for comparing it with the current year.
Okay. All right. My other questions is for the other guy. Eid? Did I guess
Eid.
Eid?
Mr. Eid,
Okay.
yeah.
Thank you, Dr. Barr. Appreciate it.
I'm the other guy.
Sorry. I couldn't see your name on our screen, whatever. So, okay. So I got a couple questions for you then. So,
Sure.
or actually, I don't know if they're for you. It's because maybe we all have this question. You prepared this application on behalf of the park owner, right?
I did not. The application was prepared by the park. I reviewed Dr. Barr's response to that, as well as some items on their application, and came up with my independent analysis of what I think the rent adjustment should be.
Okay, so do we have somebody from the park side that can answer specific questions if you didn't prepare it?
Well, the application
I
is
might be able to.
Jeff
Sorry,
Fisher is our client representative. He's on if you'd like to ask him questions about the original application.
Okay, so that's the other guy that I was looking for,
Yeah.
that guy. Thank you, Mr.
The
Fisher.
other guy.
Okay, I got a question. Okay, I got a couple questions for you. Well, I guess it's going to be for both of them because it might go back and
Sure.
forth. So we'll get them both in there. So we've had a lot of conversation today about some of these expenses, and I know that Mr. Ead has talked about, well, the trash bill is the trash bill. I understand that. And I've heard their side say, well, there's no explanation to it. So I'm assuming if all of a sudden if I put, luxury vacations in there, I'm flying all around the world to come to the park and I'm billing to the park, somebody's going to say that's not a proper expense. So, and I understand you had mentioned that as kind of like a one-time thing, right? Like you mentioned, like if, we live in an area, just so you know, with a lot of trees. So tree damage is a real thing up here. So you're saying, but if they had 1 year with high tree things, you guys remove that 1 year's expense because it's an outlier. But how do we define, like when they're talking about these high expenses, because I'm looking at some stuff, and I see a payroll bonus in there, $13,600 for like the 2024 year. Why is that on the park because I've heard him mention that there's control expenses by the park owner and there's non-controlled expenses. So that seems like that's a controlled expense by the park. You could choose not to give a bonus, or what if you decide to give a bonus of $700,000 and the park really looks like it's losing money? How do you guys justify what needs to go in this MNOI thing and what doesn't? Because I hear a lot of subjective opinion going on, and you guys want us to make a decision, and I'm like, well, I just see a lot of the stuff. I'm like, well, $50,000 in travel. Is it the park owners or the park tenants' fault that the corporation decides that they want to hang out in Huntington Beach? That's where their office is. And they decide to fly and travel up here versus being a local owner. So I guess I'm trying to get some clarification from your guys' point of view, what's going in that thought pattern of what goes in there to say, well, look at why our expenses are so high. Because these are the things I'm picking up in some of the P&Ls.
Yeah, as a business owner, we make prudent financial decisions, and we don't just think that, whatever we incur, we can just pass it through, because we don't even pass it all through. We only attempt, this being our first attempt, we only attempt to pass a portion of our costs through to the rent control units. So we're not even getting a full one-to-one reimbursement of what we incur. So we have a vested interest in keeping our costs down.
Okay, so let me go back and ask more specifically then. A payroll bonus, that should be passed on to the tenants?
Well, we have, despite what multiple testimonies I've heard earlier say, we have 5 employees there. We've had 5 employees there for years. And when the situation warrants it, employees should get bonuses.
Okay, and who decides the dollar amount?
That is probably goes all the way up to our president, for sure. You know, so other charges that we incur that we don't pass through to the community include the regional manager, the vice president, and the president. And I'm sure that Millvilla's bonus decisions go at least to the vice president, if not to the president.
Okay, I did see in there was $18,000, I think, for regional managers. You guys are passing that along, correct?
That was removed. We have it on our books, but again, as Mr. I described, you know, we're normalizing expenses. Even we, you know, there was the whole discussion, and unless I'm asked about it, I guess I'll stay out of it, but there was the discussion about reasonableness of expenses. And I know that when you normalize financials, you typically, most communities wouldn't include a regional manager. The seller in their NOI didn't have a regional manager, so we backed that out. So we totally excluded what we pay the regional manager from this analysis. It was on our unadjusted set of books, but we backed it out for this analysis.
Okay, and since you're the chief financial officer, correct, for the company, is what you said?
Yeah.
So I'm assuming, as the head bean counter, and don't take that the wrong way, that when the trash bill triples in 3 years, I'm sure you asked the question, why? And so would you inform us today of why it tripled in 3 years, since I'm sure you asked?
Yeah, and you know, it is partially due to increased rates. My understanding from talking with operations is that there used to be one large dumpster in front of the community, but neighbors were using it as their dump. They would frequently dump stuff at our community. So instead of having the one large dumpster out front, we brought out smaller localized dumpsters throughout the community. And I believe Mr. Rutterow is going to speak on this a bit in the closing statement as well. But yeah, those are costs incurred, and there was a change. And when we presented that information to the county and Dr. Barr for analysis, we weren't trying to play games. They asked us what constitutes this increase. We said, look at the invoices we're providing. There's specific detail within those invoices about the services we used to receive, and these are the new services that we're receiving. So if you want to do an analysis on why the costs increase, part of that includes the change in services as described in the invoices we provided.
Okay, I'm not sure that totally answered my question, but that's all right. So can you say today, sitting here, from what you just got done saying, that if I'm understanding what you're saying, when it comes to the trash bill, it's because you guys added more dumpsters and more service? Am I categorizing that correctly?
Yes, there was a change in service.
Okay. Was any of that affected with, we hear them talking about the new construction. Is there any relations to that new construction in any way, shape, or form at all?
Yeah, that's, and right, new construction is a big part of this discussion, and I feel like a lot of what's been missed on the new construction is that the amount that's getting charged to the rent control spaces goes down as there's more spaces added from new construction. So when we say, okay, here's our total charge, X amount needs to go to rent control spaces, well, the Y amount that goes to the other spaces is getting bigger when those new construction spaces come in. So if anything, the new construction is reducing the amount that we're allocating to the rent control spaces in a lot of instances, especially when we have fixed costs. They're getting diluted on their share of fixed costs. So the new construction actually benefits the rent control spaces in this calculation for fixed costs. But then as far as the garbage goes, new space, you know, if someone's paying $20, if we on average are paying $20 a month for garbage for existing spaces, and then we add in 30 new spaces, those new spaces, we're not going to be paying $500 a month for garbage for those. We're going to be paying about $20 a month. So again, when we bring those new spaces factored in, they get allocated their share. So there's no reallocation of garbage costs to rent control spaces from new spaces because the total amount of spaces are factored into the allocation.
Let me rephrase this differently. And I understand what you're saying, that as more spaces divides through, it's cheaper per space. I think the question is there construction debris going into the dumpsters, which need to be either larger, picked up more often, or you need more of them, which has an artificial effect of raising the garbage bill for the last couple of years because of construction debris. Construction debris is very big, it's very bulky, it's not like a trash bag that, you know, you just put your used paper plate in. So I understand what you're saying at the end of
Got
the
it.
day, when
Thank you.
construction's all done, but can you say there's no construction debris that's going into these dumpsters that cause this problem?
Yeah, yes, sir. Thank you. I understand the question. Construction was completed years ago, around 2021. So the 2024 numbers exclude construction debris.
So there is
And
zero
I would also
construction in
think
the
for the
past.
most part, construction debris would be hauled off to the dump separate than just being thrown in our dumpsters. But it's excluded.
So there's been no construction down there for the past 3 years?
I have our regional manager on she's in the meeting, she's viewing the meeting. I'm not sure exactly when construction stopped. I think I can get an answer here soon.
Well, you're
But
the
yeah,
chief.
I know that our 35 spaces were all online years ago, and so presumably, yes, construction stopped years ago, before 2024.
Because I'm assuming you pay the bill, so you should know if you're paying a bill for construction.
Correct. Yeah, that's when the county increased their valuation. You know, before Dr. Barr was talking about how I had incorrectly included our full property tax bill, but I needed to back out the piece that relates to the new construction, which is fine. I mean, talking about reasonableness, we totally agree with that. That was an error on my part, and it's been adjusted. But yeah, we got that bill from the county years ago, and that was after construction was completed.
Okay, so you guys do have an on-site park manager, I believe I heard that, and an assistant?
We have a full-time on-site, a full-time assistant manager, and 2 full-time maintenance techs,
So 4 people total.
and a part-time clubhouse monitor, 4 and a half.
That's fine. So when they're being billed $50,000 a year in travel expense, what's that for?
I believe travel expense has been excluded from the calculation. I have to pull it up really quick. I apologize. Let me, I can get there really quick.
Okay.
But yeah, again, talking about reasonable costs, like the regional manager getting backed out. So I had I backed out hotel costs, since Seller did not charge, but Seller had travel costs in there too. But total travel costs were $10,000 annualized.
Well,
for the whole
I understand why you'd include that for the government, right? You always want to lower your tax. That's not the question there. I understand why you'd put travel in there for the tax returns, all that. Has to do with this MONOI. Same thing, like, can you explain to us why payroll has gone up so much? If you just got done telling me that we've had the same, maybe not the same people, but the same 4 positions for the past 5-6 years, how's it that payroll has skyrocketed? I mean,
Yes, and actually, sorry, if I can go back to the construction debris in the trash, I did get confirmation from our regional manager that no construction debris is put in the park trash dumpsters.
where's it put?
And it's taken to the dump in dump trucks. If they're, for whatever, or by the construction company, they haul out what they bring in.
Okay, and back to the payroll. Can you explain to us why
Yeah,
the
so with
payroll
payroll,
skyrocketed?
Thank you for asking me this question. I do see how residents of Mill Villa will scratch their heads with the increase in spaces. But keep in mind, a lot of these spaces are still vacant. There's no need for additional payroll costs for vacant spaces. And we have a home sales department in Irvine that's not included on the books, totally separate. All home sales are totally separate. They're through an affiliate dealer that we have. So sales of homes, costs related to those sales, it's all excluded from the books of Mill Villa that's under the MNOI analysis here. So although it looks, suspicious to the residents, and I can see why, I wish I could show you guys, and I think I commented on this during, whether it's Dr. Barr or Ms. Bell's request, at some point over the last year, I commented that our whole portfolio has gone up during this time. I mean, I get questions from lenders all the time saying, hey, what are you guys doing with your payroll here? I mean, it's our whole portfolio. It's not just Mill Villa.
I understand that. We are the government, so trust me, we get payroll going up. Okay, so let me ask you this. Were all 155 spaces full when you guys took over the park, the base year? How many spaces were full at that point?
99% sure, yes.
But can you say it one more time? Sorry, I missed that. You think they're all?
Dr. Barr might know. I'm almost certain the answer is yes, but I'm not 100% sure it's yes.
Sorry. Yes, that they're basically. Gotcha. 99% sure they're full. Okay. And have they remained full the entire, essentially, like as if you took a snapshot from when you guys are doing this, are they also full?
Absolutely, yeah.
Okay. I think that's all I got. Thank you. I think is that all of them? Oh, I actually have a question for the EAD guy. Whatever his name is. Sorry.
First, okay. There he is.
Okay, since you were reviewing the application, whatever we're going to call this thing, you have to make some judgment calls on what you feel is reasonable. And I think you used that example about trees. You know, like if you had a large tree expense.
Yes.
Would you say just because a receipt is, so under that theory, just because a receipt is turned in does not make it reasonable, correct?
Under that example, I would agree. Right? If they produced a receipt showing that they paid, $20,000 to remove 30 trees, that in and of itself, that receipt is not sufficient, and you have to look at the context as well.
Okay. Is there other things in your mind that would not be considered reasonable, even if they're ongoing or one time?
In this particular case, no, I didn't see anything else.
Or did you question anything? Let me phrase that differently. Did you question anything they gave you, or did you just say, well, here are the receipts, we're good to go?
Oh, so to be clear, I didn't get to that level of examination because, again, my scope was limited. I didn't look at receipts. What I did was look at the parks analysis. I looked at Dr. Barr's analysis, and I looked at the financial statements for both the base and current year and came up with my analysis. I didn't yet get down to the level of reviewing receipts.
Okay, thank you.
Supervisor Griefer. Yeah. Thank you, sir. So I questions, whoever this is their ballpark, let me know and they can answer. So actually, I'll start off with Dr. Barr. There you go.
Okay.
You had stated earlier that you had made several calls to Waste Management, speaking to a Deborah Reagan, correct? You made 4 calls, I believe, is your testimony?
Yes.
Okay, why were you calling her when she is not, she doesn't work for the waste management company that actually provides the service of trash removal?
I was told, I said I had questions about waste management, and I was told that I should contact her. And I guess she works for the county. I was told she was the one to contact to get information.
Okay, so I guess that was the first red flag I had, because she's our solid waste director. She's an accounting employee. She doesn't work for the trash company. She doesn't set the rates. She doesn't set any of that stuff. So I was curious as to, if we start off there with your data gathering at that point, then now I have to wonder how we got to this, because I'll start there. Maybe you could tell us how you got any other data regarding the trash.
Well, the questions I had were pretty generic, so I thought I didn't have a reason to think her information would not be reliable. I asked her, well, do the residents, could they individually contract for curbside service? And I guess that's a question about how the county law works, I assume. And I asked her if other parks in the county had curbside service, individual curbside service, rather than park-wide service paid directly by the park owner. Those were the kind of questions I asked her, and I didn't have any reason to, think that she wasn't a reliable source for that. And I also asked her about rate information, about the increase in rates, and she sent me, annual report, annual rate sheets showing how much the rates had gone up, which showed me that they had gone up by about the CPI. That's the information I was getting from her.
Okay, so just be clear, you never spoke to the actual company that picks up the trash?
No, but I couldn't imagine how they would tell me something different.
But you didn't do it. I guess that's my point. You can imagine they wouldn't tell you something different, but the devil's in the details. They could have actually said, oh, well, it's this, it's that. We went from 1 can a household to 5 cans a household. It went from one this, oh, by the way, they were dumping, I'm not saying that they were dumping a bunch of construction material in there. So those are the things that could have been discovered had that phone call occurred.
Well, yeah, but what I was looking at was the rate schedules. I'd assume they're the same no matter who gives them to me.
Okay, all right.
And I was looking at that question of whether the residents could individually contract. I didn't.
And can
go
they?
Beyond, I didn't ask the actual company to evaluate what the park was doing, and I felt that would have been a very funny question because the park is a client of the company.
Can they? Can the individuals contract and have their own garbage service?
Yeah, I was told that in mobile home parks, the residents can contract and have their curbside service, and in about, I think, 3 of the 4 parks. I said in my report all of them, but I think it was in 3 of the 4 large parks, the residents were contracting for their own service.
Okay. So
and
to
that
both.
cost $32. What?
Thank you, sir. So to both parties, my question will be the same, is through this whole entire process, the one piece of documentation that I have yet to see is an actual contract between the homeowner, or between the individuals as well as the park owner. Why wasn't that submitted? Why wasn't it submitted? Really?
Well, there were no contracts between the residents and the waste management company.
Mr. Barr,
because they didn't use.
Mr. Barr,
I'm sorry.
I appreciate it. I've moved on from the trash discussion.
Board member, I'm not sure from our perspective if it has relevancy. You're saying that a copy of one of the rental agreements between the park and the tenant should have been part of the application.
Sure. Well,
We typically don't. We typically don't.
Well,
So-
let me dive down this hole. So the reason, I think the whole reason we're here is fair rate of return, right? You're charging 155 spots, a certain dollar fee, right? And that dollar fee to them equals X, right? We've heard testimony that some of the shrubbery wasn't replaced, or that there was a broken water line, there was a this, that, and the other. So for me to be able to understand whether or not an increase of $100 or an increase of $1 is justified, says, well, what are they getting for that increase or no increase, right? I mean, that's your so the question is, and I understand that this is a business for the owners, right? I'm not trying to take away, and I think people deserve to run their businesses as such, but this is a very unique situation because we do have a rent control. So my question still is that when somebody moved into that, they are under the impression that their dollar that they pay you guys goes to X, right? Whether it's repairing the road, it's trash service, it's water, sewer, electrical, and I don't have any of that, right? I don't have the contract that says between the two organizations, the individual as well as the new owner, what I'm getting for my dollar value, right? And my question is, well, not my question, my statement is that property was purchased in 2016, right? So in 2016, everything's pretty standard, and then all of a sudden, in 2022, it goes to 67, 2023, and that is for waste management costs alone, 103, and then 158. So the question is, in order for me to look at what the fair rate of return is, I have to ask is, what are they getting for that increase in rent?
But that's not the appropriate question. That's not the question you should be asking yourself. That's not, the appropriate question is, I was going to explain in my closing, but let me kind of respond this way. On the one hand, the government has the police power to impose rent control, and that's what we have. And so for the last 10 years, let's say from 2015 to 2025, the residents for 10 years have enjoyed rent control. While you have rent control, the courts have said that at the same time, the property owner has a constitutional right to a fair return. So it's what is the property owner entitled to? So I'm not being flippant. When you say what are the residents getting out of a rent increase, that's the wrong analysis. The analysis is that rent control really, when I think about rent control, I think about rent control as having these two components. One component is that you have the police power to impose rent control and limit the annual rent increases by whatever, CPI, 2%, 3%. Unfortunately, or fortunately, that's why we're here today, courts have said, but while you have rent control, we're going to recognize this constitutional right for the property owner to realize a fair return. Courts will not define for you, board member, what a fair return is. They say we're entitled to it, we have a constitutional right to it, but we won't define it. And certainly, we have had other hearings where I would have investors line up here in front of the Board of Supervisors, and they will say that they buy and sell mobile home parks all the time, and that they're used to, customarily in California, getting a 20%, 25% return on their investment. I would argue, board member, that what we've decided to do is go the conservative way. Okay, we're not giving you different people to say that a fair return is 20% on my investment. We are giving you a conservative approach of saying, let's go ahead and use MNOI. And again, MNOI is saying, well, what does this mean, a fair return? We don't know. No one's defined it. What does it mean? How do we make a decision? MNOI is an approach that says, well, let's just say that you, the park owner, get to enjoy the same net operating income over those 10 years adjusted for inflation. And granted, we've had a debate here, what inflation rate do you use? But the point of this hearing is that it's not, someone has a burden of proof to show that these rent increases give some value to the residents. Now, having said that, just to be comprehensive in my analysis and my response to you, in this ordinance, there is an option for the residents to talk about service reductions, okay? And that is that you can not give me a big rent increase because there's been a service reduction. But the law and the ordinance is very clear that we have procedures by which tenants had to have presented those applications sooner than now. And also, they have the burden of proof to show a service reduction. So does that help a little bit?
Yes, I'm just saying, yes, absolutely, thank you. You know, because we're tasked, as you laid out, what we're supposed to be doing here and kind of understanding, and I'm trying to understand, you know, how is it, you know, because the question, like you said, it's not defined. What is a fair rate? Some greedy people might say every dime possible is a fair rate, you know, get it. And then others might say, no, it needs to be tempered, you know, because they're, you know, a number of things, and I think we can all agree that that numbers can be manipulated to defend one position or another. And I'm not saying that is the case in this case at all by any means. I think there's been a lot of professionals that have been trying to, you know, come to an amicable decision, and that's unfortunately where we now land. Is we have to make that decision as what's fair, right? And so fair to you might be different than somebody else. So that's why I was asking that question, because you know, when things are as nebulous as fair rate, right? That's not clearly defined. It makes the conversation that much harder. So that's where I was going with this.
And you know, we're talking about Dan Rotero. How can you sit here and say that reasonableness is not a relevant factor for this Board of Supervisors to consider? I think my response is, when you say reasonableness, as we just said, it's pretty subjective. If each of you had homeowners insurance that got doubled next year, the fact that you say that's unreasonable doesn't further the analysis. What we have a problem here is that we think it's unreasonable to let one man, Dr. Barr, cherry pick and use his determination of what's reasonable and unreasonable. I think you see that is our perspective, yes. That what is an unreasonable process is to delegate it to one man, and he gets to check and decide 12 different instances what he believes, and you may disagree and I may disagree, but this is an unreasonable process to delegate it to Dr. Barr, and we're going to follow whatever Dr. Barr's subjective feelings are about reasonableness on the application.
Okay.
Could you please make sure you have your mic on?
Microphone, please.
Yeah. Except your expert has done the same thing and has picked a zone that includes Alaska. You know, what does Nome, Alaska have anything to do with us? And he's lost, what, half a dozen hearings in a row? Same thing. And ours isn't yours is paid and is in your pocket. Ours was paid to look at things objectively. It's the same thing. Everybody looks at things except yours is paid on your side. Ours is not. And ours looked and answered the questions of why he did everything to try to get an objective number. And he didn't get answers to the questions he asked. And when you're not getting answers to the question you asked, there's a reason behind that. And the board can look at that, why they're not answering the questions when he's asking them. And he answered them here, but it's really suspicious when he's asking for that information and he's not getting it, and he's not getting the materials to answer that question. You can look at that very suspiciously. And
Mr. Chair, I think it's time to return to board's questioning. We'll have time for argument at the end.
I'm getting the eye from our attorney.
Yeah, I was catching that too.
We are kind of straying into an area that's more of deliberations. And so,
yeah, and I do apologize. I was just trying to understand, and I do appreciate you, sir, taking that moment to kind of give a little guidance there. But I think I'd like to hear from my colleagues if I have any further questions.
One thing, this wasn't a question I had planned on putting, but perhaps I can provide some context in the solid waste. I did also notice Dr. Barr mentioning Debbie Reagan, and I believe he said that she was the director of waste management. That's not accurate. She's the solid waste director for Tuolumne County, so she's a county employee. But from your questioning, it sounded that you were concerned that because of that, she's a county representative, she would not be the proper person to ask about the rates for cans. And I would say, when I heard that, while I recognized that he gave an inaccurate title, I would say that she would be the appropriate person to ask for rates because, and I know this because as somebody who helped negotiate our contract with Waste Management, the solid waste director of Tuolumne County ultimately oversees how those rates are applied to residents. So it's a check on that contractor to make sure that they are indeed charging what we agreed to. I know what those are. It's $33.26 for a 35-gallon can. It's $50.96 for a medium can, $66.80 for the big ones. It sounds like there's a different situation at the mobile home park. People don't have their individual cans. Is that, or do they have communal cans? How does that work?
I think the testimony was there was various dumpsters.
So dumpsters that multiple people in a block apply. Okay. All right.
About the multiple cans?
Do people have individual dumpsters for blocks, or do they have their own cans per unit?
There's dumpsters.
Okay. All right. So.
Can I say something about this trash thing?
So I have a different question, and so I think we're going to leave the trash question alone. We may. Okay. So thank you. I'm going to ask a different question, and we're going to move on. Early on in the discussion, the question of the burden of proof was brought up. You just mentioned it again recently. I actually have a question about that for our staff. So we're brought here today because Millville has made an application for a fair rate of return hearing, okay?
Correct.
So on whose shoulders is the burden of proof for the evidence that we're hearing today?
It is on the applicant to make the case that the amount they're asking for is supported by the evidence.
Okay. And then, sir, you made a comment about the burden of proof for a service reduction. Can you explain what you meant by that?
That's another.
Do that too. It's another provision in the ordinance that allows for you to say, hey, we've gotten a service reduction. We should either get a rent reduction or they can't provide an increase for that. But in that case, the burden is on the party claiming that, which would be the tenant.
Okay. So just so I understand, if the applicant has made an assertion but not provided evidence to back that up, that is their responsibility to provide that evidence. It's not the tenants and it's not
Correct.
the county. Okay. And I think that will conclude my questions at this time. Okay? All right, thank you. Yes, did you have another question?
I didn't get to do questions yet. The beginning was just a clarification, remember?
Okay.
So I had a whole bunch, but thank you guys because you asked most of them. I'm trying to get clarification. I was taking notes throughout the presentation. There was conversation about prior index was 32%, and then we ended up arriving at 37%. Was that 32% your analysis or the doctor's analysis? Where was that 32%?
Sure. The original application was filed by the park by Jeff Fisher, the CFO, at 32%. And then Ken Barr did his report, and the client decided to retain the services of a CPA, Brian Eade. And Brian Eade looked at everything and said, no, 32% is not the correct percentage. It should be 37.1. It should be 37.1 because the index that Brian Eade selected covers the geographical area of this county where the park sits.
Okay, what was the index used when you guys arrived at 32%? Was it this, what index, what region, what did that cover?
I know, Brian Eade, do you know what was the index that was used? You said something had to do with Caltrans or something?
Yeah, if you give me a minute, I'll look it up. It was a link, but it was not the same time period, and the numbers were not accurate from what I could tell.
So should that index have even been utilized, or is it just completely like, if we're going down to source document, source data, that was just from the get-go, that was an incorrect source document to be referring to that arrived at that 32%?
I believe the source document should come from the Bureau of Labor Statistics, which is where I pulled my index from, to where Dr. Barr pulled his index from. We're just disagreeing on which index is more appropriate.
Okay, so both indexes have now been pulled from the appropriate spot, and yours is the Western regional side, and Dr. Barr, where is yours coming from? What's the difference?
Mine was the index that's used in the ordinance for the annual rent increases. It's called the COLA, the cost of living allowance.
Oh.
The cost of living allowance is used for the annual increases. That and Social Security, that index is based on urban wage earners for the U.S. And the reason I used it was because it was used for the annual rent increase standard, so I thought it was a reasonable projection of what growth and income would be considered reasonable.
Okay, is that where you always pull your data from for that? Is it always?
No, well, let me say, commonly ordinances specifically say which index should be used, and they use let's say in Northern California, they use the Consumer Price Index, all items for all urban consumers for the San Francisco area. That's the most common. Here you have a case, that's what's commonly used.
Okay, but because our county ordinance says and or, so you chose that COLA one, correct?
I used it because it was the one it wasn't used in the ordinance for the fair return, but it was used for the annual rent increase standard.
Okay, and with that, what percentage? What percentage did you arrive at again with that analysis?
I think it was 35 and 33.5.
33.5, and over here using the Western one arrived at 37.1. Just to clarify. Okay.
Right.
Okay.
Can I add one thing?
Sure.
Let me say, I didn't like this process, and I explained it in my report, where in the middle of a case, people are arguing about what index should be used, because there are lots of rationale for using this index or that index, and usually the law specifies in advance, but what happens is, if in the middle of the case you're arguing about what index is good, always decide picks the index that's good for them. So I don't like this process. And I remember years ago in the city of Berkeley, everybody was arguing, this index is good, that index is good. Then the next monthly report came out, and it flipped which index was good for each side, and suddenly each side was silent about what index should be used.
Okay.
I don't like that process. And here the applicant used an index and then switched indexes.
Okay. Thank you. Let me see. No, almost there. Trying to make sure I'm not missing any of my questions. Sorry if I did not catch this, but somewhere along the way, somebody was talking about trash services and that it was, I believe the service was taken or changed, but yet the rent was still, the charge was still being added to that rent. Could somebody clarify? Am I making sense? Are the residents still paying for trash,
Yeah.
or is it?
I can maybe speak on this.
Sure.
Sorry.
Sure.
So earlier there was a discussion of that we're supposed to unbundle. During that time, I got clarification from our regional manager. The only time we pass through a trash charge to someone, to an existing we never pass through a trash charge to an existing resident under rent control. It's only on turnover when they move out and someone else moves in. Then with that new person, and we'll have it in their lease that fully state up front that they will have a trash charge when they move in.
Sure. Go ahead. Turn your mic on.
Can you please make sure your microphone is on? Thank you.
That's correct. They don't do it to the people as their existing people that are living there. But now, as of 2025, they are charging the trash of $68.46, I believe, but they're not reducing the rent. So they're getting the 10% on top of the rent, plus they're getting another $68.46.
So those who are part of the 155 who are grandfathered in can explain that to me again? They are getting charged an additional 68?
No.
No, sorry.
No.
But the new people are,
The new people are that are moving in,
and they're not getting their rent reduced.
and they're not getting a rent reduced. They've been doing that with sewer ever since.
Are they
bought
supposed to
it.
be getting their rent reduced?
Yes, that's the manufactured home law, residency law.
Okay, can somebody speak to that?
Is this related?
Well,
maybe
that's
it's
not
not
related if that doesn't involve the
Okay,
rent
so then
control
let's not
units
do-
that
I don't
are
wanna- I
subject
don't
to
wanna
these
muddy
rent
the-
increases.
I would also say, I think it seems right to use the same ordinance that raised the rent to talk about whether it should be, reduced or whatever. The same one that gave the rent ordinance should be the same one that.
With the rents were increased 32%, the expenses should be 32%. None of this 37 whatever.
Okay. Thank you. Okay, I got it. Let me get to see if I have any more questions. No. I think this will be my last question. It was brought up about the $22 delay to have this brought before the board at 8 months. How long, prior to it being submitted to the board, how long were you guys in discussion with folks over here? How long was that process?
And Alex, you can correct me. Opposing counsel and I have worked together on this for this whole year. I believe someone said something was filed in December. I went back and looked and I thought, there's discussions in November, discussions and exchange of information in December, but that our application was filed on January 14th, I believe.
So the discussion about
2025.
rent control or the fair
Just
rate
the
return
exchange of documents and stuff.
started in November last year?
What happened is that the client, my client, filed the application, let's say in January, and the county responded with correspondence saying basically, we're understaffed. We don't have anyone that can evaluate your application, and it's going to take a long time. And in response to that, my office, Red Row Law Group, sued the county, and and it's a certain lawsuit. It's called a writ, in which we sued the county to say that the county cannot have a rent control ordinance and then not have staff to process our application. Sure. We worked out a resolution where we agreed to postpone the lawsuit while the county could get its act together and do whatever it needed to do, hire staff to evaluate the application, both from a administrative standpoint, I imagine, and then also getting bar. And so we still have a pending lawsuit. The idea was to work opposing counsel and I were trying to work out something reasonable, like let's work together to get it to this point today and see if we have a decision so that the lawsuit can be dismissed. The lawsuit was simply to ask the county to process our application, which the county wasn't doing. Now, in terms of reasonableness, like I said, maybe opposing counsel wants to argue something different on reasonableness. I'm picking something out of the sky. I'm saying, well, if our application was filed in January, I think it's reasonable we would have got, if you guys were prepared to process the application when we filed in January, I think it's reasonable to say we would have had a hearing before you in March or April. So I'm thinking we would have gotten 101 in April, and look, now we're in December, and I would have collected 101 for these 8 months. So we took 101, multiplied it by 8 months.
So I got you there.
I got all that.
Yeah, I got you. What I want to know is the conversations about this started last November, and then it was filed with the county in January.
Yes.
Is that what you're saying? Okay. In my mind, I'm just going to say it. I get why you would do, start a lawsuit, but depending on how today goes, say we are against, say we vote no against you. I want to make sure that it's clear that that lawsuit's not like an intimidation factor as far as if we don't support and go down your road, how does that affect the lawsuit?
Sure. That lawsuit was about the fact that the county wouldn't process our application, but there's a different lawsuit. And the different lawsuit, and this is with all fair returns, it's not just you guys, it's just not this situation, which is that if the park owner applicant feels like they haven't gotten a fair hearing and they're unhappy with the result, then the process is to look at any appeals process in the ordinance itself. And if you don't have an appeals process in the ordinance, then if the park owner wants to make that contention that, for instance, the Board of Supervisors made the wrong decision, then any property owner has the right to file a lawsuit, and it's called a writ, and you file it.
So it would be a different lawsuit, not
it
the
would
one
be
that
like
was-
a different lawsuit, yeah.
Okay.
And
Do you
let me
see-
just say, as a matter of describing the law and the nature of these lawsuits, I agree with all that characterization. The current writ case that's pending is just about forcing the board to have this hearing that we're having today, and if you reach a decision.
I just want to make
that's
sure it's
needed.
not contingent on our decision. It's separate.
But any of both the owner and the residents, have a right to appeal a decision that the board makes today.
Okay.
That's a separate situation.
All right, that's it for now. Thank you.
Supervisor Reefer, yes or no?
For Mr. Fisher.
Jeff, are you there? They have one more question for you, Jeff.
Yes, I'm here.
Can you show your face, maybe?
Yeah.
Okay.
Yep. Clicking on it. There we go.
Okay, Mr. Fisher, you originally filed the application, or is that what we're calling it? Whatever.
That's all right.
Okay, so as Mr. Kurt was saying, you came to a 32.4% CPI, right? In the original application?
Yes, that sounds correct.
Okay.
May I elaborate?
If you want, I've just yes or no, but okay.
Okay. I was just going to say really quickly that this is the second one I've filed, so I'm not as familiar with the appropriate indices to use. As was mentioned, both Barr and Redrow used a totally different index than me. I looked online, I found something that, I thought would be accurate, and so I used that, but it turns out that was not the best one to use. And, Mr. Barr mentioned that the applicants, changing our rate, but then again, Mr. Barr is also changing the rate, and I think Mr. Barr would agree with Mr. Redrow that that mine should just be thrown out because it's not the right CPI indice to refer to.
Okay, that's totally fair, because I did type in what the right CPI index for Tuolumne County, and it said good luck. So it seems like there's not a clear answer, which is totally fine. So I guess what I'm asking, since you're the representative of the company, if you were happy at 32.4, Bar came up with 33.5, it's a 1.1% higher than where you were happy when you filed. Could we like settle on that and just at least solve one problem right now? At least do some math equation? Because it seems like
so
you were happy there.
I think it's a good question, and unfortunately, though, it seems like a bit of a can of worms to me because, you know, just in the same way that Dr. Barr feels that insurance in the base year was too low, well, what if we feel that some other expenses in the base year were too high? It's really not fair to start arguing. You know, I mean, if we thought what we think is reasonable was on the table to discuss here, we could have brought up a ton of stuff, but that's not what we're doing here. We're bringing up what the actual costs were, and yeah, if there are errors along the way, I'm happy to concede that it should be changed, like the property taxes that I overdid. But in this instance, I feel that the most accurate CPI number should be used, which I believe Mr. Ide supplied.
Okay, so it's a no then.
Correct.
Okay, thank you.
All right, any other questions from board members? Okay, so we spent a bit longer on that than I was expecting. What I'm gonna say is maybe, do we want to take a 5-minute break?
Yeah.
Or do you want to continue? Okay, so we will take a 5-minute break. We will reconvene at 3:01, and then we will hear closing comments from the three entities here. So from the county, from the tenants, and from the applicant. We're going to do closing arguments. County staff and our consultant will have the first opportunity to do that. We're going to set a time limit for 10 minutes, and then our tenants representative will have an opportunity. They will have 10 minutes, and then our applicant will have 10 minutes. So county staff and consultant, you get the first shot.
Okay. First, I want to thank counsel for both sides for very thoughtful and professional advocacy and for helping the board navigate a very complex and technical record. And I also want to thank the board members for engaging very thoughtfully with what I think is a very difficult issue that requires balancing legal standards, detailed evidence in the interest of the community. And I suspect this was not one of the easy jobs today as a board. I want to start by talking about the general legal standard very briefly. What is MNOI, Maintenance of Net Operating Income? I think that it can reduce it to one basic question. Is the property making about the same profit as it used to make after accounting for inflation and reasonable increases in costs? That's what it means in plain language. So it's just as Mr. Rutterow explained it. You're allowed to have rent control. The Constitution says you can't have a form of rent control that results in the steady erosion and essentially confiscation of the private property owner's property because you're allowing costs to go up and holding things at a fixed level. So you're maintaining the net operating income, and that's why you have to start with a baseline year and assume that in that year the rents are considered fair. And you look at how much money the park made that year after paying the normal operating costs. That's the net operating income. And you have to flush for inflation because the dollar in the past is now worth less today. And then you compare that number to what the park actually makes. So if the park is earning about the same profit after you account for those things, it is getting a fair return. If it is earning less, the rent increase may be justified. If it's earning the same or more, no increase is required. So where does reasonableness, this word, fit in? In our view, that is the filter that's keeping the fair return analysis grounded in reality rather than just turning into a accounting reimbursement exercise. In the MNOI analysis, the question is not just what the owner spent, whether those expenses are reasonable for purposes of determining their fair return. Rent control law does not require tenants to cover every dollar an owner chooses to spend, even if the expense was actually incurred. Instead, the board should ask whether that is what a prudent operator would reasonably incur to run the property. That means that the board is allowed to look at factors like whether an expense is unusually high compared to other years, whether it's unusually low. It could go either way. whether it's explained by changes in the service level or scope, whether it's properly allocated in rent-controlled spaces, take into account, development, these things. If an expense appears excessive or is not explained or whatnot, the board may adjust or discount it when you decide on fair return. So the purpose of reasonableness in this discussion is to ensure that the owner gets a fair and constitutional return, because we're not going to slowly bleed them with inflation and not allow them to ever adjust. But you turn the rent you don't turn that into a situation where the tenant has to absorb every single cost that may have happened, regardless of the cause or if it's justified. Now, I want to talk about the burden of proof issue. That burden does rest with the park owner. The park owner, and this is a question, why am I asking questions of the park owner specifically? Because that's the application that's before the board that you're considering. If there was an application for a rent reduction, I'd be asking the same question of the residents to satisfy their burden of proof, because they're asking for something. So the owner is asking the board to grant a rent increase beyond what the ordinance already allows. Therefore, it's their responsibility to prove that the existing rent is not going to provide a fair return, constitutional return. That's not met just by showing some costs have increased. They have to have well-supported evidence that after accounting for reasonable expenses, inflation, the current rents are not sufficient to let them to continue to operate successfully. If that evidence is not clear or leaves important questions unanswered, such as why there a major increase, expense increased sharply and that sort of thing, the board is entitled to conclude that the burden has not been met on that point. The board is not required to fill in gaps in the applicant's case or to accept unexplained assumptions. So the applicant has to persuade the board. Now, I want to talk about what's in front of you now, the decision you've got to make. You get to choose whether to accept, deny, or limit the requested increase. In analyzing that, I would suggest you refer to page 83 in Dr. Barr's analysis. Now, I'm recommending that the board should adopt Dr. Barr's findings in full, because they apply a well-established and judicially approved methodology to the evidence in a careful and conservative manner. The fact is, courts have repeatedly upheld decisions that rely on Dr. Barr, recognize his work as a consultant, and he's been hired by cities and counties in about 60 cases, and the majority of them, I think maybe all but 2, his analysis has been upheld and not overturned by a future court. So, if the question is, one side or the other may be dissatisfied by the decision the board makes, one approach that this board could take that I think would be very conservative would be to apply Dr. Barr's analysis and direct the county council to create a statement of decision that adopts those findings. That's not the only way you can handle this. You have a range of reasonable decisions you could make. So there's really, you have some discretion here. What's important is that you look at the evidence and make specific findings about what you find credible, and then, come up with the number based on looking at the evidence in that way. So Dr. Barr's presented some issues. You are entitled to pick and choose which of those you find persuasive, although I do think it is most sound to just adopt it in full. There's 3 minutes, so I think I'm going to just turn it to Dr. Barr to make any concluding remarks that he may want to bring to the board's attention.
Okay, I just wanted to add, and I thought this, in the discussion about waste management, the park owner made it sound like the cost per space went down for the rent control spaces. That's not true. They've gone up to $64 per space per month. The waste management bills, as you know, more than doubled from 2022 to 2024. With the number of spaces that the park added, they increased the spaces by about 20%, but then the waste management increased by well over 100%. And the share that was allocated to the rent control spaces went up more than double too. So there was this huge rent increase. And the big thing that's notable, we heard a little explanation tonight, but before that, we asked for explanations. Why did this go up? Why did you get more? Why did you need more waste, trash cans or dumpsters or whatever? And we would never get an answer. All the answer was, well, we've got the receipts for it. And so they really haven't shown why this increase was reasonable or present a reason that maybe that could be examined whether that increase was reasonable. And the question is, well, I didn't speak to the waste management company. I spoke to the, county representative and got the basic questions and didn't go any farther because I wasn't getting any answer. And I think that's critical. And, that's the point I wanted to make about this analysis. And basically with the insurance thing too, we kept on getting the answer that for the $2.5 million valuation, we didn't get an answer. We asked in writing. Sir, I didn't call the insurance broker because I didn't feel I should be calling a representative of either of the parties in a case. Plus, we want written answers, so there's no debate, and I can't misrepresent what somebody else said. So I just wanted to add that to the discussion.
Okay, and let me just finish by stating, in the event this is appealed, any decision is going to be evaluated based on the substantial evidence test. And what that means is the court is going to decide, did the board apply the correct legal standard, and whether that decision is supported by substantial evidence, not whether another outcome might have been more perfect. So that's what's critical, is just make a decision after deliberating that's based on the evidence that's been presented.
Thank you. All right, so at this time, we'll give the another 10 minutes to our tenants representatives. So we have 10 minutes on the clock, and Mr. Smith, you may start.
Thank you. This is the first opportunity I've had to really speak with the board, and it's been a pleasure and an honor, so thank you very much. I know you've heard of me. My name's come across you several times, maybe not in the best of circumstances, because as an attorney I get complaints, and I know you've heard my name, some good, some bad, so thank you for the opportunity to speak. It's been an honor to represent these folks before you. And so I'm going to speak about what I think is rather plain, and I'm not going to take my 10 minutes either because your time is valuable as well. How do we know if a company is doing well? How do we know if they're making a profit and doing well? Any company that can spend $50,000 on travel expenses between here and LA in a year is doing well. How much does it cost to fly up from LA? You can fly up a lot between here and Los Angeles, Southern California, if you can spend $50,000 in travel expenses. That's a lot of money to fly back and forth. If it's between there, I mean, where else are they going but here in LA? It's a lot of money for travel expenses. Second, if you're giving the bonuses that they're giving their employees, tens of thousands of dollars in bonuses, you don't give bonuses like that if the company wasn't doing well this year, do you? Who gives bonuses to their employees if the company isn't doing well that year? We saw all the money, and the company president or CFO testified that they had 5 people working there, and yet the employment numbers went up to 249,000 when they had the same number of people working there 5 years before, and the number was 100,000. So why did it go up that much money if it was the same type number of people? Why did that number go up? And why wouldn't they answering the amount when he asked about how the insurance went up to 250,000? That dog don't hunt. That answer, when you're not answering the questions like that, the reason when you don't answer a question is because there's something worse. There's something you're willing to hide that's worse than the truth. And when they're not answering that, it's because they don't want you to know what that answer was. They would rather have you speculate and try to distract than want you to know that. And you can look at them and their credibility and hold it against them and not believe what they're telling you when they're holding it against you and deliberately keeping that information away from your expert. And you can hold it against them and not believe them in these circumstances. That's what I do when people don't answer questions that they're supposed to answer and deliberately mislead and try to obfuscate you. You don't believe them when they do that to you. And I submit to you, you should not. Counsel here, very nice man, honorable man, kind man when I talk to him on the phone. I give him, mad props for coming up here. However, one thing you should not do if you vote to give them money, and I suppose you will vote to give them some increase, is don't give them money back from the time they submitted this application. Because what they didn't do is they didn't come to county council and say, we want an increase here, and here's what we'd like to do, and give them the support and say, we'd like to work this out. They didn't come to county council, I don't believe, and say, we want to work this out. They didn't come to the tenants and say, we'd like to work something out. Let's get together. Let's sit together and try to work something out. Let's hammer out a deal. Let's try to focus together and work it out. They came here, they demanded a huge rent increase, and they slapped a lawsuit down, and they demanded it, and they tried to bully this increase. They didn't come here and act in good faith, like a good neighbor, like a good landlord, and come to us and ask and try to work something out. They demanded it and kicked sand on the paperwork and threw it down like a bully. And bullies and bullying tactics should not be rewarded. And that's why if you're going to grant an increase, don't make it retroactive. How much should you grant? You go with Dr. Bear. We will live with that number. We'll live with whatever number you give. But Dr. Bear's number, I do believe, is in reason. And we believe the number that their expert went in that covers the entire western United States, Colorado, Alaska. What do we have in common with Nome, Alaska? Nothing, except we sometimes get snow. And those numbers, I really would have liked their expert to rerun the number that he had picked with the same base number that Dr. Barr had picked and see what that number difference was. That would have been very interesting, but we didn't have the time. But anyway, thank you very much. I appreciate very much your attention, and thank you, and we look forward to your decision. Thank you.
Thank you, Mr. Smith. Is that all you'd like to?
That's all we have to say. Thank you.
All right, so we will reset the timer to 10 minutes. I'll look to the park owner's representative. You have 10 minutes for your closing statement.
Thank you very much. And I, of course, again, would like to thank the members of the Board of Supervisors for their time and effort in doing all this work and considering the application. I think we all agree that you guys have a tough job to do. It doesn't seem like any of this makes sense. You're coming to work this morning, I'm sure, thinking that there's a rent control ordinance. This is rent control. Why are we having a hearing all day long on a $101 increase on rent control? But like I said earlier in my comments, I think that, and I think it's undisputed, that rent control really does have these two components. It is the law. The law is that you can impose rent control and keep rents low for 10 years. That is your prerogative as the county to pass this ordinance. But courts have said that there's another interest and a constitutional right to a fair return. And while residents can get rent control, that's perfectly legal. However, the park owner deserves or is entitled to seek a fair return, a return on their investment. And that's why, of course, when you adopted a rent control ordinance, your county adopted these procedures to have this hearing today, recognizing that that's the state of the law. Like I said earlier, it's not clear, what does that mean? What does it mean to say we're entitled to a fair return on our investment? The MNOI approach tries to address that and say, let's keep your net operating income at least to where it was in 2015, adjusted for this inflation factor. Let's talk about the burden of proof. There's been this, what I call a smokescreen issued all day today with this burden of proof. Yes, it's very simple. This is a park owner who's submitting an applicant to you. So I would say yes, they have the burden of proof to follow all the procedures in the ordinance, and there were a lot of procedures, file the application, use the right form, submit all your financial records. I don't know how many financial records we submitted. It must have been hundreds of thousands of dollars, basically giving you every scrap of paper we had in support of this application. That was our burden of proof, and I think we knocked it out of the ballpark. I think we gave you all of our financial records. Truthfully, Dr. Barr never said, oh, they doctored this up. Oh, they gave the wrong financial record. Oh, they said they spent $40 on this when they really spent $20 on that. You have before you an applicant who's been 100% honest with his books and with its approach. And not only did we give you all of the truthful financial records, but arguably, and yes, this is closing argument, the most conservative approach, which is the MNOI. Nothing, I could go with other approaches, but let's go with the most conservative. We gave you all of these records, and we gave you an accurate MNOI. Now, you can nitpick and say, well, counsel, isn't it true that your client submitted the application, then you changed your application? I think you should see a lot of good faith on the part of the park. What the park did was, it was a layperson. It's trying to understand this as much as you're trying to understand it. The park, in good faith, filed its application, 32%. Then Dr. Barr came along and did his whole report. And this client, who can't pass this cost along, hired Brian Eade to go through it all. And he's got a lot of experience going through MNOI. And, you know, actually, if you look at it, there were certain things about the allocation with the property taxes that Brian Eade said, you know what, Ken Barr is right. You know, we got to be ethical about this. Where Ken Barr is correct, he's correct. And then there's other determinations like which inflation factor to use. And of course, Brian Eade saying, I apologize, my client didn't know what they're doing. The appropriate inflation factor is 37.1. And here's why. Because it covers this county. Ken Barr even says you should use CPIs that cover your county, like San Francisco. The San Francisco one just doesn't cover this county, so that's the reason why we didn't use it. When we talk about burden of proof, here's the point about burden of proof. We have a burden to produce to you, the Board of Supervisors, an application with all the financial information and with the mathematical calculation which we did correctly. What are we fighting about this burden of proof? Dr. Barr is doing something else. He's moving the goalposts, if you want a sports analogy. He's not saying, well, Dan Ruttero's client has a burden of proof. To do what? Well, to file the application? No. What Ken Barr, as a lawyer, he's doing is he's manipulating the system to say, let's say that Dan's client has a burden of proof to tell us in detail the valuation of this property for insurance. And also, let's make up a burden of proof that Dan's client has a burden of proof to do this comprehensive analysis as to the ins and outs and the whys of whether and how the waste management costs went up. That's what we're talking about today. That's what I am objecting to. There is no special burden of proof. And when the tenant's attorney says they must be hiding something, they're not answering the question. There is really no question here today that we haven't answered. We have given you all of the waste management invoices. We have compiled them all. Has anyone looked at them? Has staff looked at them? Has tenants council looked at them? Has Ken Barr looked at them? If you look at them, they're going to tell you on these invoices exactly the services that were rendered. Whether that be 12 dumpsters instead of one dumpster because one or two residents were misusing the one dumpster, and we had to redo the dumpsters, and the redoing the dumpsters and having lots of dumpsters is going to make the whole process more expensive. One of the residents testified that the amount of service or the amount of pickups has increased. So the service has changed, and that's why the cost has gone up. We're not here to say we're going to be rich people flying to Mission Viejo every day. That's not why we're here. You know, this is a certain geographical area. This is a mobile home park with residents who are on fixed income. But with all due respect, in this neighborhood, there are vendors like Waste Management who are charging the park a lot of money for services. And so going back to the burden of proof, we have met our burden of proof. These burdens of proof that you didn't tell us about how that was calculated and how that was calculated, how that was calculated, that's ridiculous. That's not a burden of proof on us. Our burden of proof when we talk about reasonableness is, are all these bills what we got? Is there anything different or strange or weird or false about them? No, these are the actual records. Again, what I said before in my last 2 minutes is, Council, are you saying that reasonableness doesn't come into it? Of course not. You're the government. You're the body who has to make the determination. We're saying we are the reasonable people. We gave you all of our records. We gave you the correct analysis, and the number is 101. What is unreasonable is for this Board of Supervisors to adopt Ken Barr's analysis, because, as I said to the member earlier, is what would be very unreasonable by this Board of Supervisors is to say, yeah, we're going to go with Ken Barr. Basically, we delegated this to Ken Barr, and Ken Barr, we allowed him to just subjectively decide what, in his mood that day, what he liked and what he didn't like. I mean, Ken Barr didn't even keep to his practice. His practice is, I don't like that number, I'm going to substitute it for $75,000. I don't like that number, I'm going to substitute it for another number. But did you notice that when we get to 2024 and we get to the property taxes that he doesn't like, what did he do there? Why didn't he take out that number that he says is unjustified, the $20,000 for the property insurance? Why didn't he substitute in his own reasonable number? A great deal of the difference here is then Ken Barr now comes up with a new trick. What his new trick is, he doesn't substitute in his own reasonable figure. What he does is he looks at this insurance cost in 2024, takes it out, completely takes it out, and doesn't give his own reasonable number back in. Now we're taking out numbers and just saying we didn't pay anything for property insurance. And that's a big reason why you have our 101, which we think is totally reasonable and is accurate, and I've given you in 10 minutes multiple reasons why it is not appropriate for this Board of Supervisors to rely on this consultant. Thank you for your attention today.
Thank you. So at this time, as I discussed earlier, we feel that it is appropriate to do a public comment. This meeting was noticed as having public comment available. Apologize for it being so late in the evening, but at this time I will open the forum up. Anybody who would like to speak on the item that we have here today would now have that opportunity. Please approach the podium and you'll have, and for public comment we will use the standard Board of Supervisor meeting time of 3 minutes.
Thank you very much, and thank you for acknowledging that I exist. Thank you for your help. I'm really glad that we had this here. We haven't done a public hearing monitored by you or conducted by you. I think it's a good experience to have. However, I got really, really tired of listening to people bickering and bad-mouthing and talking over each other. I would have liked to have seen a little bit more respectful behavior from our parties. And thank you, Mr. Smith, you did not behave like that. Clearly, waste management was on the table all day long. I'm not sure that trash necessarily may have been that important in the overall discussion, but I think waste management should be invited to be a party of interest, because maybe they could have answered some of these questions. This was a great big huge pack of it. Most of us could not go and download this whole packet. So not even having any paperwork here for the public and telling me that I could go online, I thought was kind of tacky. A lot of numbers were floated around, and a lot of numbers were just numbers, and I thought they were taken out of context. We have a lot of insurance issues here, and that may have played a part in it. Well, anyway. And I actually thought that, what's your name again? Rutterow. I thought you actually did a very good presentation. I didn't appreciate your tax on Mr. Barr, but I thought you made your case. And for the county, Mr. Barr lost his credibility with me a couple of times. And then to the attorney over here that we hired, I would not hire you again. I was just appalled at the things that you were questioning. Was it Mr. Eade? You were asking him all kinds of crap that has nothing to do with being a CPA. And I just thought that was really inappropriate, and I found that offensive. So we don't have, also my other point down here was we don't have required or mandatory trash collection in Tuolumne County, which makes things a little bit different. So I kind of rambled a little bit, but those are my comments for the day. Mr. Hall and Mr. Griefer, I appreciated a lot of your questions today. I thought they were right on. Thank you.
Thank you. Is there any other public comment on this item? Please come up. So you have 3 minutes. Welcome.
Hi, it's Margaret Kling again. I just want to let you know, we have a lot of tenants here at our park. Can't afford this. It's either going to be medical. They can't be able to go to get a doctor's appointment anymore. Medicines, food. They can't afford it. I've dealt with these people. I've asked them, if you can put it in your heart to help, at least stop a lot of it. I mean, $30 we could do, but $110 plus the COLA, they can't do this. They'll die in their homes. Thank you for listening.
Thank you. Come on up. If you have a public comment, please come on up after the last person. Hi, welcome.
Hi, my name is Barbara Anderson again. I started the pantry because you would not believe how people came in groups to pick up food. Now, this is before that we were aware of this gentleman and his company that he represents. I don't know where it's going to end because you have a lot of people on the streets and a lot of questions there. How are you going to take care of the ill and the helpless people that can't even get out of the bed? I mean, somewhere along the line, okay, if you're that needed of additional fees, reasonable. But $101 plus
Can you please address your comments to the board? Thank you.
If you're doing 101, it's pathetic that you see people suffer like this. I see it every 2 weeks. I'm out there giving them ham, fish, whatever. And then I have to do deliveries because they can't come. I work for 2 hours, then I go out and deliver food for an hour or so. And this is what a senior center and we thought had some protection. We don't have any with you guys. It's really sad, and I hope you all can sleep well.
Thank you. Is there any other public comment? Please come on up. That's okay. Good afternoon. Welcome.
Thank you. My name is Reen Mayo. I have lived at Mill Villa since 2011. IPG purchased the park in 2016. they didn't do much of anything for, 3 or 4 years. And then around 2020, they launched their new construction project, the expansion of what we call the 500s, which is nice big new homes. Maybe you've driven through and seen them, which attract people from out of the area who have more money than the older folks in the older rent-controlled areas, which is me and most of the people you see here today. The first thing your company wanted to do, sir, was to have us pay for the roads, the old rent-control people. And they had breakfast and raffles and other things they thought would soften us up. And as part of their application for fair return increase, I think step one is they had to hold a vote. They had to ask the residents of the park what we felt. We all voted, no, thank you. We don't wish to pay for your roads. They had come up with a per home amount that our rent would be increased by that amount monthly forever, or maybe it had a time limitation on it, I forget. But we voted no. And step two of that process then is to come to our board, whereby they don't have to deal with us anymore and they go to you guys and ask for help to get the money out of us, because we don't want to give it to them. And that is because we don't have very much money. The money that we have in our savings account was earned here, most of us locally, in Tuolumne County. It's not high-end jobs. It's not a lot of industry here, as you know. I worked at a construction company, George Reed Incorporated, for 35 years. And they never could see, I never earned more than $20 an hour there as a contract administrator, handling contracts and what have you. But all of our money was earned in the last century. It was earned, we all quit working 20 years ago. The salaries we earned, which is the basis for our benefits, was not a heck of a lot compared to wages today. So the money we have and what we get from Social Security doesn't go very far anymore, as you know, with the cost of groceries and what have you. So when they come and say they want $100 or $120, this is insane. It's very threatening to us. If it can be whittled down to something more manageable, if you all determine that they're making adequate profit, that maybe they don't need quite so much. Anything you can do would
Thank
be
you, and
appreciated.
I'll have to cut you off there.
Thank
Thank you
all.
very much. Is there any additional public comment? Come on up, sir. Oh, or either. Hello, and welcome.
What I'd like to say is, this park, when I moved there, it had one park manager and 2 employees. And now that they have the 500 section, you still have the same. Well, now you seem to have a park manager, assistant manager, and they're hiring landscapers to come in to work over in the 1 to 600 section, where before it was just a manager and 2 employees. I don't know why they're hiring a landscaping company to come over what 2 employees used to just take care of themselves. The landscaping company they use now is because when the new homes, when they're developed, they have to do the landscaping once houses are set and so forth. So what I'm saying is that I don't know why the landscaping company that's working on the new houses is overworking what was simply done in the 1 to 600 section with just 2 employees. I don't understand that part. And let's see. Pretty much takes it. I think that's what I didn't cover when I came here. What I can't figure out, perhaps you could tell me, why did IPG get sued in Minnesota?
Can you please address your comments to the board?
Why? Perhaps I'd like to know why IPG got sued in Minnesota. Can anybody tell me that?
So if you're asking a question, the board can take that under consideration,
Okay.
but this is your time to make a
exactly
comment.
why on that one. But anyway, that's all I wanted to say. And regarding the trash issue, some parks do have the curbside pickup, and I called them my own self one time. I called over just what they thought. Did you actually call them? It's like $43 a month if I went and had 2 reasonable sized trash cans. Perhaps maybe this trash issue we could take away and leave the grandfathered area in, and the people you're charging, why not let them have the opportunity to have curbside service rather than being forced to pay their $68 a month and let them take their own trash out? And so that's kind of what I was thinking about. See you later. Thank you. Bye.
Thank you. Yes, come on up. Hello.
Hi, Catherine Garcia again. I want to thank all the board members for being here today and taking our considerations into mind. I just hope that everything that's been said here today hits home. These people mean the world to me. I moved in 2023. I've gotten to know many of them. They're not doing so well. And this increase, they're not going to get better. You have homebound persons. You have people that have no transportation. You have people that are having to make a decision whether they're going to pay rent, whether they're going to pay their utilities, whether they're going to be able to pay for their medications. Guys, it's Christmas. Bring home a miracle. Thank you.
Thank you. Is there any additional public comment? All right, I see no one standing up for public comment, so I'm going to close the public hearing. We will bring it back to the Board of Supervisors. We'll now deliberate and ask questions if there are additional questions from board members, and then from there we'll discuss whether or not we have consensus to put forward a motion on the decision before us. I know did you say, one of you said you had another question.
I had one question.
I can't remember who. So, Supervisor Kirk, if you have a question,
Yeah.
now would be the time. And then
This is for council or anybody who might be able to give me an answer, but and I asked a question a little bit earlier, but in the conversation today, it was brought up that the county ordinance is one or the other. It's COLA or CPI is what I was understanding. When I pull the county ordinance, all I see is COLA. Can somebody give me some clarification on what the COLA and or was? Am I making sense here?
I can give
Who-
you
who
what
are-
our,
who
I can
are
give you
you
what our
addressing
position
the
is if
question
county
to?
council wants
Yeah,
to
it's open
disagree.
conversation.
The argument I made is that the rent control says in the ordinance we have 2 types of rent control. We have the annual COLA. You can't raise the rent every year more than COLA.
Okay.
And then it says that if the park owner wants to do a fair return, you can go ahead and follow these procedures in the ordinance. This is what an attorney is making an argument to you, that if you look in the ordinance says that the park owner may only increase the rent once, okay, not double increase, not COLA and fair return. And from that language, I'm making an argument to the Board of Supervisors that what it's saying is that you can only have one rent increase per year, and it's got to be either a COLA or a fair return. So my argument is that, well, this is a fair return, so it wouldn't be COLA. And also, Dr. Barr says, no, it's the only index that's mentioned, so I think it's fair to use COLA. And I disagree with Dr. Barr, and I say, no, COLA is for the annual rent bump. It says, or you can do fair return. And when we look at fair return, we use the 37.1% from the Bureau of Statistics. And my argument as a lawyer is to say, even Dr. Barr says you should use indexes that cover a geographical area such as San Francisco. So my legal argument is based on the text of the ordinance that it would be, and it's my argument, you could disagree or county can now say their position, is that it's an argument that that's wrong to use the COLA on the fair return, but that's what Dr. Barr is saying.
And I was going to kind of chime in there. I think a question like that we might address to county council
Yeah,
first
I think
because
that, and
we
we
have
understand.
two interested parties
yeah,
here.
We
and then we have
understand
the
what,
county.
what the owner's position on that is. I do in some parts agree with what Mr. Rednow is saying in terms of the way the ordinance is structured is you can do a COLA-based increase, or you can go and apply to the county for something based on the fair rate of return. When you're, this process is what does that. And different parties put on different experts that give you the information on which you can judge what a fair return is on that. There's nothing in the ordinance about, and I think Mr. Barr explained what he did with deciding to use the COLA, which is based on one form of a CPI index, and why he referenced that. But it is true that in the ordinance, you have sort of across the board by right a COLA increase that you could make annually. They're seeking more than that, so they have to go and apply and get the other part of it.
No, I agree with all of that. Would it be helpful to you to hear from Dr. Barr as to why he selected that particular measure?
I think he testified to that.
No, he already spoke to it. I was just trying to understand the ordinance piece, because taking notes throughout this whole process. That's why I pulled the ordinance. I thought there was an and or, but the and is the COLA, and then the or is what we're doing today, which is the fair rate of return increase. I just want to be clear.
All right.
Okay. Thank you.
All right, other questions? Supervisor Holland.
Back to this conversation. Rachel's here. We usually start the COLA, the increase, when is it? You just yell from back there if you want. I'll say it. Okay, so semi-October, they take effect, I'm assuming January 1st? Okay, or the deed. Okay. So to be clear, let's just say the COLA was 3% this year. If they've already raised it, it'd be what if we grant it now, whatever, let's say we were to grant an increase, it would be that increase minus the 3% if the park raised it according to the COLA. I don't know if they did or not. That way we're totally clear about.
We don't have testimony before us, but I would say that it would get subsumed in that because the fair rate of return, sort of overlaps that increase.
So it would be reduced out of there, right, if it's already been.
That would be my understanding. I'd be interested in staff's understanding of that in terms of how they've operated that.
Okay.
I don't think the park owner necessarily agrees with that. I think what it is that you can do your annual CPI, let's say 3%. Notice and say this year in 2025 we're going to raise you 3%. But the ordinance seems to say that, or you can do a fair return. So let's say the fair return is a 13% increase. I think you send out your notice and you raise the rent by 13%.
So
Meaning
it's
it's
13% 1 year.
It's one or the other. Are you going to
Yeah.
either do the 3%,
Right.
or are you going to do the 13? There's no double dipping. You don't get
Yeah,
to.
I think what the supervisor was asking, you get your 3% and then
No.
you also get whatever is awarded.
It's a good question. Sometimes you do. Sometimes at the last fair return hearing I did, the county said, yes, you can get your 3% and your 13%. But the way I read this ordinance, the ordinance says you can only have one increase, and it's either of these two things. So I think if you're going to get a fair return rent increase, you cannot. And I'm just talking about 1 year, the first year. The year after that, you can go back to CPI. But on this 1 year that you're going to implement the fair return, you implement the fair return, but you don't get double. You don't get to also ask for the CPI one at the same time.
Okay, I understand that.
Yeah, and I would agree with all of that.
Okay. How many parks do you guys own?
We own?
Yeah.
We don't own any. This is, I'm a law firm.
Your client.
I don't know, you'd have to ask Mr. Fisher if you want to know.
You and the royal we, as in, I mean, like you as
I don't know how many, I don't know if I think it's relevant, but if Mr. Fisher, they would like to know your company, how many parks does your company own?
Yeah, we own 120 communities that are primarily located in Washington, Oregon, California, Utah, and Colorado.
Okay, and how many of them are in rent-controlled districts?
Well, with rent control ordinances like this, it would be specific to the California ones, which are, call it 4, where there's a pretty heavy ordinance like this. you know, Oregon and Washington have their own rent control laws, but they just cap increases at certain percentages. They don't have this MNOI or, you know, this level of CPI rent control either.
Okay. I just heard your attorney say you guys were like kind of, not novices, but wading in the waters or something. I'm like, nah, I'm pretty sure they own quite a few parks, but that's okay. I'm assuming this is important, you guys, right? Send a lawyer up here to do all that. How come the owner's not here to answer some questions?
Well, the chief financial officer, I mean, we have the chief financial officer for the company here, which we thought was pertinent to answer your questions about finances. Plus, the client went ahead and spent out of their own pocket and paid by the hour an attorney and a certified public accountant. So we got plenty of people on the payroll today. But you know, I guess we thought with these people, we can present a good application without the chief executive officer on board on this call.
Okay, just checking. And so, and to let you know, I've had your garbage bills open all day. Somebody did look at them.
Okay, great.
And as you can see, you cannot make heads or tail of what exactly it's saying. So I've been trying to decipher to try to explain it, and when it just says 2-yard dumpster, $10,000, it's a little confusing, right? Unless you can tell me what that means, but you know. So I just want you to know I have looked at them. We've gone. I've actually looked at all your guys' expenses, so I took the time to do it.
Fair enough.
So I think, and you guys are at $101. I just want to clarify, roughly.
Right. It's where we're at is that we're asking for $101.67 plus I think $22.59 on the temporary. Temporary meaning that you combine those, and the $22.59 we're suggesting lasts for 3 years. I think Ken Barr had 2 reports. One was for something like $75, and his other one was for like $44.
Okay. Can I ask the same question of the HOA president over there? I heard you say a number that you guys could live with. Could you repeat that number? Or when you guys said it?
My number was $30.99, and I didn't take in the trash. I didn't play with that. I just did payroll.
Okay.
And I also want to state that 2016, there was no tax return that we could really rely on because they bought it in September. So those are numbers that are added in. 2024, we haven't seen the tax return either.
Okay. Okay.
Also, with the trash, they're doing pickup twice a week. So if they did trash delivery once a week, they could cut the bill in half. They have cans to the people, and they're delivering pickup twice a week, which seems to be a little excessive.
Okay. I think that's about all I have on this.
Okay. Questions or?
No, thank you.
Or comments? We can do questions or comments too, by the way. I should have clarified that.
All right. What was that?
We're deliberating, so that's all inclusive.
Do you want to go?
Yeah, I've looked at both sides, and I think we have, as I'm talking to my colleagues here, I think there's issues on both sides of what's got presented. Like, I don't fully buy into either one of the situations. Trying to look at this, I guess I don't have a 100% clear picture on either way on it. So that's just my opinion of if everything is accurately presented. So.
Is that it? Yeah, that's it. All right. Okay. So, everyone on the board that knows me and everybody that knows me will tell you I'm not the math guy. The wife has a checkbook and balance for a reason, so I kind of stick to what I kind of know. But I do want to go to, if possible, and if I'm out of order, please let me know. I'd like to go to page the county 83. Now, this is the one where it's titled "Outcome of the MNOI Analysis." I just want to make sure I'm following along here. We're also giving opinions or comments? Yep. Okay. All right, we all feel like a teacher. Turn your pages to your books to page. Okay, so at the top of it, where it says table number 2, it says maintenance of net operating income calculations, and it has $44.22. All right, we all see that? And then I guess my question is that if you go down one line, it says calculations of specific costs and CPI adjustments. It says current year waste management, CPI, et cetera, et cetera, et cetera. And then if you add all of those up in the different space / month, that comes to the 6129. So is the I guess I'm trying to understand this table. And maybe I'm not understanding it correctly. I might just answer my own question by doing a little math here. Plus 44.22. So I'm just trying to understand this table a little bit. So, and by all means, I appreciate your patience.
The bottom part of it is a breakdown of the top part. It just breaks it down to the different things that make up the totals in the top part.
Supervisor, might I suggest we put Dr. Barr on so he can explain any of the details on the table?
This is Dr. Barr's report.
This is his table.
Yeah. I was just yes, please.
Is Dr. Barr still? Oh, there he is.
Yes.
So, Dr. Barr, did you hear my question?
Okay.
So yeah, we're on page 83.
Yeah.
It's the report breakdown.
Yeah. So I'll restate my question. So on page 83 of your report, outcome of MNOI analysis. If you look at the top section, it says maintenance and net operating. The rent. Going to the bottom box, it says rent adjusted space month is $44.22. And then down below is another table. And if you add that up, just that box or that table alone, where the $24 to $24.24 plus $14.06 plus 8 blah blah blah, that comes to $61.29. And I was just wondering, what is the difference between the $44.22 and the $61.29? And if so, I'll stop there. Go ahead.
Okay, the top part is overall numbers. You know, the applicant's net operating income in the base year, the amount that I calculated for the fair return purpose, the fair net operating income in the current year, and the net operating income, actual net operating income in the current year, which you see there's a big difference, and that impacts how big the increase should be. The bottom is, it's not added to the top. It breaks down the impact of the different adjustments that I made in the calculation. And the reason I did that was, you might decide, well, 3 of these adjustments make sense. You might not agree with another adjustment. So you can pick and choose, and that will change the numbers you have in the top. So, for example, the waste year management, the applicant claims $120,000. I said that $75,000 was fair. That's a difference of $45,000. So, when its impact on the outcome is $24.24. If you allowed that expense and use the park owner's amount, the rent adjustment would be $24 higher than the number I projected. Then I go down, to the CPI adjustment, and the same thing. I looked at the difference between 33.5% I used, the 37.1% that the applicant used. And the same thing with the current year insurance. They had one amount. I took part of the insurance out because I said it hadn't been explained, and explained the impact of that. And the same with the last 2 numbers, the base year rental income and the base year insurance cost calculations. So you could say this bottom part is the subset, feeding into the calculations in the top part. I mean, I don't know if that's intelligible or clear what I was trying to do.
No, I guess my question is that if you add those numbers up, in the bottom grid here, that comes to $61.29, but above that in the fair return calculation, it's $44.22.
I think
and again, I might be in the weeds. If I'm not understanding it, you just say you're not getting it, and I'll see you after school.
No, okay. No, I'll explain.
I don't want to take a lot of time. If I'm not understanding the data correctly, it's not really germane to where I was going with this. I just want to make sure that I'm trying to understand some of the details here.
If I could,
Okay.
Dr. Barr, it may help if It may help, Dr. Barr. I think what you're dealing with below in the second set of numbers is the differences. You don't add that difference up to get the 44. You would add that difference up really to get more of the difference between the 101 and the 44.
All right, thank you, that makes a little more sense. Okay,
And
that's,
with,
thank you.
with rounding
It's supposed
errors,
to be
I
the
think
difference between the parks number and Dr. Barr's number.
there's some rounding errors
Each of the-
in there when you
yeah.
break it out of about
Okay,
4
all right,
Each of those
excellent.
numbers.
All right, thank you for helping the C student here. All right, with that being said, so in my comments are this, I sat on a very large HOA board for 6 years, and we always had this issue of raising the HOA dues and coming up with a way to keep the operation running, keep the company, moving forward, although the HOA is not for profit, so it's a little bit unique. And then we always had to consider the people that this would impact. So where I'm going with this is that I'm not in favor of, I'm assuming I can give my 2 cents now. I'm not in favor of the retro. I think that if that is an issue between your company or the company and the county, then that's something that we should address. I don't believe we should pass that on to the individuals. If that's an issue that this organization is a part of, then we should deal with that. So that's my mindset on that. As my other mindset is that I do believe that we do have to increase to a degree. Now the question is, what is that degree? And I go back to my HOA days of how do we make it fair, make sure that you are getting a fair rate of return, making sure that the people that are being affected are not being priced out of their homes, that they don't have to make those hard decisions of putting food on the table or paying
That's
their...
actually-
I'm sorry?
Sorry, I didn't.
Okay. Or come up with a way that they're going to have to do something. So I think as we get into the deliberation phase a little bit longer, at least my colleagues now know where I stand specifically on the retro, so that's an easy one for me. And then I think if we can find a way to come up with something that is fair, that appeases both, I don't feel 101 is the right answer, but I'm not also against hearing my colleagues. So thank you.
Do you want to ask your question?
Yeah.
Or, okay.
One last question that came to mind in light of all this, and this should be the end of it. At the beginning of the study, Jeff came to 32.4, ended up at 37.1. The doctor landed on 35.3. What is that dollar value for 35.3?
Actually, he corrected himself, but his number was 33.5%.
33.5, thank you. 33.5%. What is that dollar value? Do we have a number for that? Huh?
So Dr. Barr is raising his hand.
Sure.
Yeah. The difference is in my table. I calculated the difference between what the rent increase would be between the choice between those indexes, and the difference would be $14.
The difference of
So if you
$14 cheaper than the 37.1?
Yes. So if you use the 37.1, you'd be adding that to the 44.22.
Well, I should comment, I come up with a different number. I get $10.45, and that's based on the calculations I used to get to 101.67. The only thing I changed in my formula was to go from 37.1 to 33.5. The difference is $10.45.
Okay.
That's
Sorry to
because they're
confuse you guys,
using...
but that's where I'm at.
That's because the two experts are using different net operating base year. There's two factors. There's the inflation factor, plus they start at a different level on the base year. So you want to decide which base year number you want to use too before you apply the inflation factor.
Okay.
I'll just interrupt. I'm confused as to where is this going?
Because
does this apply? Are you looking at trying to find a number? We have 101. We have 44,
we have
30.
Basically, what I'm trying to understand is if we were to go over here, we'd be at what is it, 101, 67, and if we went over here, we would be $10 cheaper, which would be 91.67. Is that correct? Is my math wrong?
No, I don't think so. Could they ask him to repeat that?
So,
because
Yeah, to be exact, I get $91.08.
well, help me out here. I mean, I'm not a rocket science either, but I'm not a CPA or an attorney. I'm trying to understand what the full 101.67 is entailed of. It's the 37.1% and whatever else, and then if I were to go over here with the doctor's recommendation for the CPI, it would be 33.5, which ends up being $10 cheaper. So wouldn't that bring us to 91.67 for an increase in fee? Or I'm also hearing $44 of an adjusted. So I'm trying to understand that.
If you subtract the $10.45 that I just quoted you from the 101.67, you're right at $91.08.
Sorry, 91.8.
If I may, if it's helpful to explain it.
Sure.
This page 83 is very useful because it summarizes the difference in views between the two analyses. So, and it gives the board the ability to choose a la carte, so to speak, which arguments it finds persuasive. So if you, the top level that the applicant's asking for is that 101.67. The number to the right of it, 4422, is what Dr. Barr's conclusions are based on the various items that he's subtracting based on his analysis. Then that, underneath that, it goes through those different categories and how much they represent. So the waste management issue, for example, that's worth $24.24.
I got you. Okay, I'm piecing that together. I got you.
So
Thank you.
You can kind of go through that and see element by element what the dollar value is of the different issues, if that makes sense.
Gotcha.
So your mic is off. So the question was, what is Dr. Barr's recalculation?
Yes, number.
Of what?
He just said he had a recalculation number.
33.5, I believe.
$33.05?
No, 33.5%.
Okay.
Is what the percentage was.
And what number
I think that's what's throwing people off is
what number would
you're
that
talking about COLA, and I think they're focused on the dollar number of the fair rate of return.
So the 33 point, that has to do with the disagreement about what the proper inflation index should be. Do you use this one or that one? And that gives you, that's worth that $14.06 per Dr. Barr.
Okay, so if I take his 33.5% and then I add that second comma boxes, that's where we'd land at. Okay.
What would that change the number?
I'm sorry?
Would that change the number?
It would raise this up if they take that out.
Okay.
It would raise it up.
Well,
Okay.
Okay. I think I'm clear. I'm sorry if I'm causing confusion. I'm just making sure I'm clear before I make a decision. So are we, you want to give your cue and comments?
I don't have any questions. I've given fair consideration of the materials before us, the statements of the applicant, the representatives of the tenant, and then the consultant. And I appreciate some of the getting down in the nitty-gritty. The way I see it is we have two sides of a story. It's not our job to mediate that and get people to work things out. We have to make a decision based on the evidence that's before us. I find that the analysis of the consultant is substantially correct. I know that there have been some questions brought up, but I don't see that those in any substantial way affect the outcome of that, which I think to the applicant and to the residents, the most important thing is that dollar figure per month, the 4422. So, at this point, I would be ready to adopt and apply the consultant's findings in full and vote on a statement of decision to that end.
Okay.
So if there's, I'm ready to do that. If there's other ideas, then we can discuss it.
So what's the dollar amount that you're?
4422.
And then what about the retro?
Absolutely not. Yeah, and thank you. That is, I thought you made a good point on that. I think that if there are issues with the time frame of how long it takes the county to process that, that is not something that the tenants had anything to do with, and so I'm not able to make that connection between the time that it took the county to process the application and the end result for the fair rate of return.
So we'll make it easy. I make a motion to deny the request for retro.
So I think.
Can we separate them out? Can we do bit by bit?
As long as it's clear what you're making the determination, that's fine, because you'll be directing me or
So
the county council's office.
So we'll take it baby steps, right?
I forget it was $22
right,
applied
for
3 years. I can't remember what
right,
the
whatever
exact
the
amount is, yeah.
Sir, I think I'm totally gonna botch your how you phrased it earlier. Could you lay that out?
The $22.59, which was the temporary for 3 years, I think you're making a motion to deny that.
Yes, and thank you for helping me on that one. I know that was a little awkward, and I
Yeah,
apologize.
probably.
Thank you, sir.
I know, you're making them
Making him work
vote against his own interests.
I know,
there.
sorry. All right.
I would prefer we don't split the question, but I will second that. I do support that, so.
Do you guys want to hear?
So
you guys want to hear?
It's on me.
Do you guys want to hear my comments since I didn't get a chance to make a
So
comment?
I will, but we do have a motion and a second, and so
On
I'm
that.
going to
Yeah,
call.
just on that.
I'm going to call for a vote on that element of it. All those in favor, please say aye.
Aye.
Are there any opposed? Okay, motion carries 4-0 with 1 absence. Okay, so that's part of it. Now we are on to, we need to find what we agree a fair rate of return is for this. And so that, I mean, not to be boiling things down too far, but it's basically what we're talking about, the monthly increase.
And I have a question, if I may.
And then can I make comments, my closing comments after you?
My question is just whatever is decided today, whatever increase is decided today, should there be one, when does it go into effect?
I don't know.
When does it go in? Because my follow-up question while you ponder that one is, should it go in, whenever it goes into effect, in theory, the next year there would be a COLA, potentially a COLA increase.
12 months after this increase.
Well, I know, but what I don't want to do is say, hey, we're going to make this decision, and then it goes into effect, and then they get hit with a potential another increase right after that. So I'm just trying to understand the timeline, which may not be the purview of this body. I'm just trying to think ahead.
Is that, Dr. Barr, is that specified in the application? It'd just be effective at the next monthly rent?
Well, actually, I think Mr. Rutter, he might know about the notice requirements for rent increases. So I'd ask him.
It would be, okay, that's a good point.
Mr. Fisher, on this park, you don't have one anniversary date for the entire park. You have different anniversary dates depending upon when people started their tenancy in the park.
Right, so increases are on lease anniversary, and in California, we have to give a 90-day notice of any increase.
Yeah, that's correct.
All right, so it would be 90 days from the date of decision, and then if you're...
Well, 90 days from the date of notice, which could be as soon as...
Okay, and then, so party A may have it next month, and the next, because their anniversary might be and 2 months later, it's going to be, so it's going to kind of be our staggered rollout. It's not going to like a...
Correct,
Okay.
because they all have different anniversary dates at this park.
All right, thank you.
And, and I don't want to discourage outside the box thinking here, but, we have recommendations from our consultant. We have a recommendation from the applicant. We have a recommendation from the HOA and the tenants representative. Beyond those three, we would be taking it upon ourselves to come up with a number and justifying the methodology for that number. And just for me, I'm not prepared to do that because I don't think we have any evidence here to support any number besides the ones that have been presented.
No, I wasn't going.
Okay,
I
I
was
wasn't
just
sure.
curious as to.
Well, I just based, we're looking at a lot of the details about how these are fees are applied, and we have to kind of pick a lane.
So can I make my closing comments then? I hear what you're saying, but I'm looking at the ordinance and it says the burden of proof of the necessity of the fair rate of return increases on the landlord. So I'm looking at this as a landlord also bringing their documents, their information. And real quick, before I go down that road, when we opened up this morning and Jaron recused himself, you know, I was pretty annoyed with that because we all here have folks in our district who are struggling with affordable housing. It's California. We have a crazy code that we have to deal with. It's insane to build or to live here. I have several mobile communities in my district, and we know the struggles that our folks are facing. So I thought it was pretty chicken for him to bail out and hold on. And so with that being said,
let's not talk about our colleagues here. We have an issue
well,
before us.
I think it's important because
We're not talking about policy. We're
I
talking
have
about
stated in the
an
past
issue.
that I think this is the problem with rent control as the
Okay, again, we're not talking about policy in a larger sense. We have an
Fine, will you
applicant.
just let me finish?
But
Well,
you're
the
straying
point
into an
is
area
there's no
of
clear,
a policy
listen, our
discussion
ordinance,
that's not appropriate.
This is about our ordinance. Let me finish, please.
It's
Our
not about
ordinance
our
is not
ordinance.
clear, just as California has
Again,
not made it clear.
You're talking about a policy and an ordinance. This is a quasi-judicial hearing that has nothing to
Okay,
do
but
with setting policy.
You just
We
stated.
can do that later.
Okay, I'm going to finish my comments. In California, in our ordinance, it is not clear. It is up to us to try and interpret this the best way possible. We heard that in Oregon and Washington, there's caps. It's pretty black and white. And here, I'm looking at ordinance, and it says that the landlord is to have the burden of proof. So I actually see it from a little different angle, which is the landlord, and the reason why I was asking for the percentages, has submitted their documents on waste management, on the CPI, on insurance, on base year income, on the last year income as required, and everybody has stated that it is the most widely accepted, the MNOI formula. So the reason why I was asking about the percentage that the doctor came up with versus folks over here is because I don't think that is clear. I don't think we have, kind of like Holland said, there's still some, I'm cutting the baby down the middle on that. So what I would say is that the applicant has shown the burden of proof for that. As much as I don't like to pass that to increase the cost for mobile home folks, I feel that that burden of proof has been shown. But I don't think it's been clear as far as where to land on the percentage. So I would split the baby down the middle and say 37.1 split between 33.5, which is where we landed at the 91.08. So whatever that percentage is, I believe it's, so whatever 37.1 minus, it's probably going to be 1.8, I think. I'd have to do the math here on the side. I would say that that would be the number to do the fair rate return and include these numbers. So somebody would have to calculate that before I make a motion on that. Am I clear?
Mr. Eid, could you just, for purposes of saying
Sure.
what we're talking about, could you calculate that just so the board would have the information?
I think what you're saying is we applied a CPI increase of the average of the 33.5 and the 37.1, or the midpoint. That's 35.3%. We do that, and that's the only change to my calculations is that CPI percentage, and the resulting rent increase would be $96.36.
So that would be my motion. I think they've done their burden of proof, as much as I may not like what it does to our local residents. Our ordinance is clear that they have the opportunity to do that. The burden of proof is on them, and I can't dispute the burden of proof for the costs that have gone up or for the baseline or the end year, but I am a little fuzzy on the doctor's percentage and their percentage, and I think to meet in the middle is appropriate.
But to be fair, that's not the middle. That's pretty far away from the middle. That's
No,
only,
the middle on the percentage.
That's $5
CPI.
less for what the applicant said, and it's
It's the middle ground for the
$50 more.
CPI. It's the middle ground for the CPI. I think on these other items, this other column, I think they've met the burden of proof to show.
Again, I don't think the CPI is the issue. I think it's what is a fair rate of return for a monthly fee increase for the
Well, for me, it's an issue because I'm hearing two different numbers. So
Well, but.
My
what-
analysis is.
So what you're saying is a $96 increase is fair?
What I'm saying is the CPI is the middle, is that 90, is the 35.3, so 35.3. And then I'm looking at the burden of proof, and they have submitted documentation that I think is enough to show that they have followed our ordinance and submitted the documentation.
Okay.
Waste management goes up, insurance goes up. They did a baseline, they did their last year. That's been pretty clear to me.
The others are gonna vote 3-1 to overturn that.
Well, so,
Can we, yeah, let's hear.
I didn't, I made a statement, I didn't make a motion. I did say where I was at. I think Supervisor Kirk just said where he was at. We're in different places. I think if the two of you share your views, that could give us an indication about what kind of motion we should bring.
Yeah, and I'm open to
Yep.
to back and forth. Like, this is, we don't do this all the time. This is where I'm landing, and I'd like to hear your guys' opinion.
Rachel, will you just give a thumbs up? Is COLA next year 2.8%, roughly?
Let me just double check.
Okay. I looked up online, I think that's what it says, so I just want to verify it. Okay, thanks. So where I would land, knowing, because I didn't realize it was one or the other, I thought it was like a compound, I'd be somewhere around a 6% COLA, which would put us at $44.28, using the $738 average rent, which it sounds like there's some variances in there. That's where I would be at it.
The total
44.28.
versus 44.22.
Yeah, because I came up with a 6% COLA.
Okay.
What's your thoughts? Big guy. Oh, all right.
So-
I'll make a motion that we go for 44.28.
Can I ask a question real quick?
Absolutely.
Because obviously I'm way off from where you guys are at. So I'm trying to understand our ordinance, and I'm not advocating. I'm gonna support 44.28 if that's where the majority is. But what I don't understand is the second column. You don't have to answer, Mike. Nobody has to answer. But I feel like the burden of proof has been shown that costs have gone up.
I think costs. All right, I'll answer. So I think cost has gone up. Like I stated earlier, I think I questioned some of the numbers in there. Like our attorney's been very good today. I did look at their trash bills, look at all their bills. I do have some questions about it. So I do own a bunch of businesses, and you drive expenses in there because you're trying to reduce your tax base, right? And which is what most business owners do, I bet, right? I mean, I'm sure you're going to write off your coffee today, everything else that goes on. But then I don't think it should be put back on the park tenants because you say, well, I'm not making money. I have a hard time buying all that, right? Just knowing what I know. And so that's why I say I don't buy Barr's theory either, because I think there's stuff in there I don't agree with what he's saying, and I don't necessarily agree with everything. So in my mind, we have to pick something, and that's where I'm landing on it, right? I think that a 6% COLA is where I'm at with it, if that kind of makes sense. And I understand the math you were trying to do there. I just don't lend credence to it. Just because they turn a receipt in, is it valid, right? There's some stuff in there that I question.
Just hearing things like the trash pickup has gone up twice. I mean, that enough would sound like it would double the raise for waste management or insurance going through
It's
the
up way more than that.
It's up more than twice?
Yes.
It was.
I mean, if you go back and start looking at stuff. So anyways, but we don't have to get into all that.
I thought it went from 60 to 120.
I thought I saw more than that in there.
Which is why I'm asking the question, because I don't want to be off that much if you guys are seeing the different numbers.
And we started about employee bonus and stuff. I don't, if a corporation's making money, I agree with that. They should pay that out of their net profit, not on the backs of the tenants. Because to your other attorney's point, you don't give out bonuses if you're losing money,
Okay, yeah, so waste management went from 59, 67, and then up to 103. So that I interpreted that as like double pickup. But I'm not gonna advocate to raise the rents if there's not a majority, but I want us to be clear.
Yeah,
So.
well, that's where I'm at, but,
Okay.
after you
Where you
guys.
at, Steve?
Second what he says.
Okay.
And I second the motion.
Okay, so what is the
22.
Could we get a recommendation from council what that motion should look like? You gave us an option, but I don't think that would apply in this case because we're making a slight change, I guess, to the.
Well, the board can reach its conclusion about what the fair return is. Stating the reasons for it is important. Mr. Holland has stated his. I think Mr. Kirk may support that. You've stated that you felt like the rationale for Mr. Barr's number, which is very close to that, is there. So the motion on the number, as long as we have a basis that I can write up in the opinion for what the decision was, is adequate.
Okay.
So
Well,
you need to get to the fair rate of return number with a rationale.
Okay. Can you recommend language for a motion?
I would move the particular number that you feel is supported by the evidence in front of you. So a language would be, we support a fair rate of return increase in the amount of
$44.28.
If that's what the recommendation of the board is, yes.
Okay.
And
do
direct
you agree with-
council to create a written statement of decision.
And we would like a record, because
And-
I don't understand how the board even got to this number. Is the board taking a 2.8% COLA and doubling it?
No, and to be honest, I don't know how you guys got to your number either.
Well,
So,
right.
I mean, to be fair.
Okay.
I mean, if we're gonna be fair about this, I mean, I think everyone's got some issues on their sides here. And so,
Okay.
what I did was I looked at it as, if you're asking my rationale behind it, was $738 was the base rent, right? That was used in the report. The average base rent was $738. That's what we're all going with. A 6% COLA on top, just a 6%, that comes to $44.28. I mean, I could just say $44.28, but I'm just trying to give you a little more context behind that,
Okay, thank you.
right? And it's more than double the COLA,
Okay.
technically.
So based on that methodology with the advice of staff and the 44.28, is that your motion?
And is that 6 COLA year over year?
No.
Just one time?
Yes, sir, fair rate. Some years COLA is 6%.
No, I was just trying to understand the.
Yeah. So my motion would be that we come to the conclusion that a fair rate of return for this hearing would be $44.28 per space, I guess. Is that the right wording?
I would just say for fair rate of return set at 44.28.
Okay, fair rate of return would be $44.28. Dan, you good with that?
And then direct staff to create a
Direct-
statement of decision.
We're in a debate over it.
You're asking if I'm okay with it in terms, sorry, I was having a discussion with Mr. Lemieux here. What is the question exactly?
We're trying to clarify exactly what do you need from us in the form of a motion for it to qualify under the ordinance. Okay, so what do you need contained in the motion? And I think we have a supervisor interested in making that motion.
Okay.
So if you can provide direction for
You need,
what is
in
inclusive of
terms
that,
the
that would be very
motion,
helpful.
I'm going to be using the discussion during deliberations to write up the rationale.
Okay, do you need
that
to,
the board
shall we
has-
take a break and you
has
can
done.
write up a motion that
I
contains
could write up a
everything?
whole decision, but you'd have to take a little bit longer than a short break. What we were envisioning was the board, based on its deliberations, picking the fair rate of return and then directing county council to write up a statement of decision.
Okay, fair enough. Does that suffice as a motion?
Suffices for me.
Hold on
Okay.
just for a second.
Stand by.
It's clear to me what you're moving. I'm just trying to verify that we are doing what is proper by the ordinance, and that's why I'm seeking legal advice. I don't mean to stand in the way of your motion. And in case you were wondering how I felt about it, I'm not going to put up a fuss over 6 cents, so. I hope, hopefully.
We're not, we're good.
So let's take do you need a 5-minute break? Okay,
Yes,
let's take a
5
5-minute break. We'll reconvene at 4:35. Council had something an issue they wanted to raise, and then we'll.
Thank you, Supervisor. It's important that the board base its decision on things that are accepted by courts in these matters. What's accepted by courts in these matters is some form of the return on investment calculations that you've heard from the two experts. So it would be very inadvisable just to pick a number as, based on maybe your own business experience or something like that, as opposed to specifying the things you're picking out of the expert testimony that has been laid in front of you to get to the appropriate number.
How about I just make a motion that we accept Dr. Barr's findings of 4422 and just be done with it there.
I'll second. Or did you want a second? Okay. All right. So we have a motion and a second. I think that's clear. I will call for the vote. All those in favor, please say aye.
Aye.
Any opposed? Okay, motion carries 4-0 with 1 absence.
And you also want to move to direct County Council to submit a written decision for that.
Do you need another motion to that effect? Or shall we amend the motion to include that?
So moved on County Council's recommendation.
All
I'll
right.
second that.
All right, I have a motion and a second to direct staff. All those in favor, please say aye.
Aye.
Any opposed? Okay, that motion carries.
Thank you.
4-0 with 1 absence. All right, does that conclude our business for the day?
That concludes our business for the day. Mr.
Okay, thank you very much, all parties, and thank you for public comment, and we are adjourned.